to my mind, and how it pushes it back is the unfortunate outcome of something like this.
And what do they hope to achieve? There's nothing.
Nothing.
There's absolutely nothing to achieve.
No, they hope to achieve exactly this, that tourists don't go there anymore. That is the purpose, to not
stop
let
the economy from...
not let normalcy return. And the details, of course, are gruesome. The targeting of a certain community, how it's coupled with, say, this is the message for Prime Minister. So it's very well orchestrated at that time. So, here's what we're going to do this today, all day on NDTV Profit. Of course, our focus remains business, the markets, and what's happening there. But at any given point on your screen, you will see the latest updates of what is happening with Jammu and Kashmir. So you will get all your information here as well. With that, let's get to the core of telling you what's happened overnight with global markets. Dow futures have zoomed 400 points as Trump has backed down. It's a back down on both ends, and we'll play both those sound bites for you. He's backed down on Powell. He seems to have backed down on how the trade conversations are going to go. So let's take a look at how markets closed. Between 2.5% to 3% up. I mean, the Dow zooming over 1,000 points, Nasdaq about 400 points, and the S&P 500 also 2.5 points up. So that winning session, because Trump is showing signs of easing on tariffs. No win for Tesla, though. The stock dropped as revenues have plunged 20% in the first quarter. Treasury yields, meanwhile, have stayed steady, the 10-year at 4.4%. Gold has cooled off dramatically because hopes of a trade war easing have risen. Crude prices have risen as well for the same reasons, the Brent at $67 levels. There's also hope that the Iran sanctions will kick in, so that will curtail supply. Asian markets have surged on opening on hopes of de-escalation in trade tariffs. You've seen that across the board. Shanghai slightly in the red, but Nikkei and Hang Seng all up in the green. The implied open on India also looking positive as we start off the day, nearly 200 points up. Let's listen in to what Trump said. Let's listen into what he's saying on Jerome Powell, as well as his comments on tariffs.
But groceries have come down. It's all coming down. The only thing that hasn't come down, but it hasn't gone up much, are interest rates, and we think the Fed should lower the rate. We think that it's a perfect time to lower the rate, and would like to see our chairman be early or on time, as opposed to late. Late's not good.
Mr. President,
I don't want to talk about that because I have no intention of firing. It'll come down substantially, but it won't be zero. It used to be zero. We were just destroyed. China was taking us for a ride, and just not going to happen. It's not going to happen. We're going to be very good to China. I have a great relationship with President Xi. But they would make billions and billions and billions of dollars a year, and they would build their military out of the United States and what they made. So that won't happen. But they're going to do very well, and I think they're going to be happy, and I think we're going to live together very happily and ideally work together. So I think it's going to work out very well.
Yeah, somehow, whenever he says billions, he has to say it thrice. But let's talk about what happened in trade yesterday. It was another day of gains, but very narrow moves. First, let's talk about the flows, of course. FI is gaining as much as 1,000, or rather, investing about 1,290 crore rupees on a net basis. A sell figure by domestic institutions, once again, to the extent of 885 odd crore rupees. Nothing very different from what you've seen over the last few trading sessions. But take a look at this. Indian equities have now gained for a sixth session in a row, and the Nifty 50 has ended higher by about 41 or 42 points or thereabouts after trading in a pretty tight range. That range was about 170 points or thereabouts. The Nifty 50 has now gained 1,768 points in the last 6 sessions. Now, the broader markets outperformed in trade yesterday. They dropped just a tad bit in the last hour, but they still went home with gains of about 0.8% each for the mid-cap index as well as the small-cap index. The market breadth continued to favor the advances. Realty stocks outperformed in trade yesterday, led by Phoenix Mill, Prestige as well as Raymond. The FMCG index staged a comeback as well, gaining as much as 2%. There are some key earnings to watch out for in the space as well. Nifty Bank continued to march higher as well, and it gained about 0.6% in trade yesterday. IT lost a little ground, falling about 0.6% after that stellar up move, and declines in the IT index were on account of a couple of stocks and large cap ones at that. Infosys, Wipro, HCL Tech all ended lower, and in fact, Infosys and Wipro leading the declines at this stage. HCL Tech ended just a tad bit lower, about 0.1% or so lower ahead of its earnings. Neeraj.
Yeah, just trying to think of what effectively it's a bit of a no-brainer, if you will, that we will likely do. The global tide going higher could lift the Indian markets higher as well. But would the gains be measured? I think I referred to Rhythm Desai's note yesterday, right, that we are a low beta market. So we've been doing our own thing when the world markets haven't been, erstwhile when the world markets were quiet, we corrected quite a bit. Then we've gained while the world markets were not gaining. So very likely that even if the world markets show a really strong up move, our up move relatively could be measured. Yesterday, a couple of calls came in on the BFSI pact as well. Just the way that after a stupendous rally, gold has seen some bit of profit booking. Could at higher levels BFSI see some profit booking, not really taking all the chips off the table because it's a strong sector, the numbers and the sound bites are all looking okay. But could there be some bit of profit booking considering what the Bank Nifty's done? So very likely could happen. Nobody thought at 3,500, why should you take money off the table for gold? But we've seen some chips off, right? Something happens, something gives, and that were to be happening. The last piece is that I got into talking with a few people after this very interesting 361 deal, right? What they've done is quite amazing in that an Indian player has bought out the entire arm of UBS, though it was on the block, etc., etc. But I'm told that a lot of other deals are in the offing. And I think when Karan Bhagat spoke to us, he said that one of the key reasons for doing this was also that we want Indian clients to have the global exposure and global clients to get this. I think a lot of cross-border associations, if not direct M&As, could be in the offing on this wealth management, money management space. Yeah. So that's something to watch out for. Maybe in the next couple of months, we might see a couple of other deals.
And
is
even
what
family offices, actually not necessarily the deal size of as large as that, but even smaller family office getting acquired has been happening, right? Small or other client bases of smaller operations.
Yes, not
family office.
I believe is the other one that
on the block for a while.
People are talking about.
Exactly.
So a lot of shopping there going on.
Yes, most certainly. So that's one space which might be red hot in the days to come.
I think IT will be the other space that, I don't know, red hot, but might see an update today, simply following what's happening with the NASDAQ, easing of fears. Trump sounding much more pliant right now bodes well for the sectors beaten down the most with concerns of a trade war, and you might see some recovery today with Nifty IT that's ripe for it. Apart from that, Nifty has continued its northward movement for the 6th straight session. These are some of the factors you should watch today, because you could see a strong bullish control continuing as long as the index holds on to 24,000 support. Despite consolidation, the immediate hurdle remains at 24,200. A move beyond 24,200, which in all likelihood you'll tear past in the opening as well, could open the pathway to a 24,300 to a 24,350 range. Beyond that, next key resistance level at 24,550. Any significant fall below 24,000 could trigger a pullback. Bank Nifty, of course, is in uncharted territory. The RSI is at 76.51, showing strong bullish momentum, but is in overbought zone. There could be a minor pullback as well. A break above 56,300 would be needed to maintain momentum. So those are some of the factors that you need to watch out for. Pune joining in now for their derivative space update.
Well, thanks for that, definitely. So, we're expecting the Nifty yesterday, we spoke about 24,200 was the level. We closed actually below that level, 24,167. But, the implied open indicating a very strong start to the Nifty today. We also had the Bank Nifty yesterday hitting a second consecutive high in the session, a really strong number of 55,576 on that. Now, both, of course, have seen the open interest fall, and that's because that expiry was yesterday. So we are going into a new expiry now. When you also look at the open interest losers, we'll see that the traction is backward looking because the expiry has finished yesterday. Overall, the next, some of the key levels to watch out for at 24,400 and 24,200 are the key ones. We've seen short covering at those levels as well. So we are expecting a bullish sentiment going forward. And I think, the level of 24,000 specifically will be one to watch out for, because that is expected to be the new support now, essentially. And going forward, I think there'll be a few of those metrics to watch out for. But overall, we've seen, in terms of open interest call, maximum has been seen at 24,500 as well as 24,200 on the maximum call open interest. While on the put side, it has been maintained around 24,000. So overall, we are seeing, as you rightly mentioned, IT being one of the key ones to watch out for in trade today. HCL Tech reported, a very decent set of numbers as well as strong guidance. But overall, expecting a strong start, and I think finishing above 24,200, at least in the medium term, is one of the key levels to watch out for.
Yep. So, and I think all of these things, the RSIs, the FNO indicators, plus the swiftness of the rally. Let's see if banks bring the party to a bit of a pause in this very short term. Right. That's something to watch out for.
Yeah. Absolutely. All right. The pause, definitely not for HCL Tech. That's the first stock on my watch list this morning. I'm giving it a thumbs up because the guidance came in slightly better than expected. Revenue is up 1.2% for HCL Tech at 3246 crores. Estimates were slightly above that, but not that off. EBIT was at 5,442 crores. So a downtick there and below estimates as well. Margins also have come down from 19.5% to 18%. Estimate was of 18.37%. Net profit is down 6.2% at 4,307 crores versus 4,591 crores. In constant currency term, revenue is down 0.8% Q-on-Q, but up 2.9% for the year. Services constant currency revenue was up 0.7% Q-on-Q and up 2.7% for the year. The deal wins were strong, so which is why that thumbs up there. Deal wins were at $2,995 million. The total contract wins at $9,268 million for the financial year. The revenue has also been better than what the street expected, between 2 to 5% year on year in constant currency term, which is in line. So despite other big major IT companies giving guidances which were much lower than street expectations, HCL Tech is for the very least in line. Here's what JP Morgan is saying. They've upgraded it to an overweight from neutral. They've hiked the target price to 1,750 rupees from 1,700 rupees. They're saying they see growth leadership and rare visibility. Services have now performed ahead or at parity with the fastest growing scale peers 3 years in a row. Signings have been impressive in this environment. Large deal ramp provides visibility, which is currently rare, and underscores an organic growth outlook. Guidance has been de-risked at the low and midpoints for potentially worsening demand. Non-discretionary heavy portfolio could support it in a weak environment to muddle through. Stock trading is at 4% dividend yield and a 6% free cash flow yield. They see value as a scale growth leader. So Macquarie is also quite excited about HCL Tech. They've maintained an outperform target price of 2,160. They're saying they're leading the peer group growth again. They say Q4 saw no impact from US tariffs. 50% of the deal bookings done in Q4 were closed in March 2025. Investec, on the other hand, has maintained a hold, and they've cut the target price mildly by $2 actually, from 1552 to 1550. They say guidance better than feared. Bottom end of the guidance assumes a deterioration in the environment. Midpoint assumes a deterioration with large deal closures in Q1, and top end assumes an improvement. Now, keep all of this in mind. Remember, all of these notes have come in before the comments from Trump a few hours ago, which indicate that maybe the worst case scenario could not play out. So boost that as well in what you could see with an HCL Tech. AU Small Finance.
Just on that one thing, because last quarter when we spoke to CVJ Kumar of HCL Tech, he mentioned about watching out for March because the normal deal win closures that were happening in Jan usually at the start of the year are getting pushed by a couple of months, and therefore you need to watch out for that. And in their numbers, they seem to be suggesting on the con call, or not the con call really, but the press meet, that March has seen significant amount of deal closures. And therefore, I think the point that she was making as well, that just the the growth guidance of 2 to 5% versus, let's say, the last one was Infosys 0 to 3%. That itself shows that how this is done well. And I wonder if this makes it 2 versus 2, right? TCS, Wipro, not so much. Infosys didn't sound as bad. HCL Tech is sounding so good. So the top 4, kind of it's divided between the IT commentary.
I would say 1.5 versus 2.5. Infosys is a little bit out there because their commentary is
but not as negative about deal cancellations. And if HCL Tech has done deal wins in the month of March, then is it a very bottom-up, stock-specific thing that we're looking for,
but
IT,
guys,
large or mid?
Does it not still remain the case that while deal wins are happening, the conversion to revenue still remains a problem? So underlying issue still there, right?
Known.
Okay.
Is there an unknown factor out here, which is what HCL Tech and Infosys seem to be? Or HCL Tech in particular is indicating.
I would say HCL Tech in particular. HCL Tech in particular is coming out well today, and that's what's reflecting. Also a matter of timing, right? Because you have that upside and that fear coming off on what the whole trade tariff war is going to look like. That's a big factor actually, which is going to underline everything you see in the markets today. AU Small Finance Bank, next on my watch list, a thumbs up there. It's a beat operationally. There's profitability figures are in line, strong growth, though margins have contracted because of credit cost elevation. Management expects 2 more quarters of pain. So here are the core numbers. Net interest income at 2094 crores, up 57% year on year. OPEX is at 1,562 crores. That's up 27% year on year. Operating profit is at 1,292 crores. This is the impressive figure there, up 99% year on year. Provisioning at 635 crores, so that's gone up a bit. That's up 27%. PAT is at 504 crores versus 371 crores, up 36% year on year. So fairly decent set of numbers from there. Morgan Stanley has maintained an overweight, hiked the target price to 750 from 685. This is strong potential for earnings rebound post the first half of FY26. AU Bank has delivered 1.5% ROA, much higher than peers. Strong performance despite high interest rates, tight liquidity and elevated asset quality stress. Over the next 2 years, ROA can expand as rate cycle has turned and MFI asset quality improves. This is the key one, because the key drag on an AU Small Finance Bank was what's happening with microfinance and that space. That fear seems to have receded and the numbers seem to have come in line. So watch out for AU Small Finance Bank. Stock was down yesterday. Could see a good upside today. Likewise for Havells, it's a 3-on-3 today, at least on the watch list for me. Good set of numbers. Strong beat on all fronts. Revenue growth led by cables and wires. And remember, the fear of new entrants, etc., had seen the Havells stock taking a tumble. So cables and wires has seen a 21% growth year on year. Lloyds has seen a 40% growth year on year. EBIT margins are up 20 basis points because of switchgears and Lloyds. The summer has set in with some delay, and secondary sales in the RAC category are factors to watch. The numbers overall have seen, consolidated numbers have seen revenue growth of 20%, in EBITDA growth of 19%, 757 crores. Margins are steady, 11.7% has moved to 11.6%. Net profits up about 16%. So Havells is one to look out for, which could be fairly positive as we move ahead today. And a couple of good notes as well on Havells. Nuvama, for example, is reiterated a buy with a target price of 1,890. They've raised their FY26 to 27 estimates by 4% and 5% for it. Even their revenue, EBITDA, PAT, CAGR have all gone up. So they're valuing the stock as well at 52 times. So watch out for Havells. Some pretty good notes on Havells as well.
And you've got a 3-on-3 on your list. Mine is 1-on-3, but boy, that one probably outweighs the other two quite considerably, because I'm starting with Waaree Energy. And of course, we'll talk about the numbers. But before we do, I do want to talk about one thing that you should focus on, which is the EBITDA guidance for FY26. And that is 5,500 to 6,000 crore rupees. The FY25 EBITDA stood at 3,123 crore rupees, and that was up close to 73% on a year-on-year compared with the previous year. The guidance implies a 92% increase from that at the top end of the guidance. And why are they confident? The order book looks incredible. heading into FY26 at 47,000 crore rupees. Now let's look at the fourth quarter as well, and that was a stellar set of numbers, a 36% growth in the top line. That was more or less in line with expectations. The EBITDA is coming significantly above the estimates at 923 crore rupees, and that's owing to an expansion in the margins. The margins were anticipated at about 18.3%. They've come in at 23% or thereabouts, and as a result of which, you have the net profit that is ahead of estimates, quite considerably so, at 619 crore rupees. It's a 34% increase. In fact, if anything, the year ago had an exceptional gain of 292 crore rupees, and so therefore, X that exceptional item or X exceptional items, the PAT growth would be about 250% or thereabouts in the fourth quarter. So very, very strong set of numbers. Of course, you've seen Waaree Energies move up over the course of the last few sessions. Yesterday in particular, the gain was about 7%. Some inkling perhaps that the numbers would be fantastic. The other two, not so good. Tata Communications on the back of numbers. Now, on the face of it, if you look at the revenue, of course, it looks a little bit weak, 3% revenue growth. But look at the PAT number. And so the revenue growth, by the way, more or less in line with expectations. The net profit number is coming at 1,040 crore rupees. But there is an exceptional item there, and which is why it looks so fantastic. 4x growth, more than 4x growth in the PAT. The EBITDA, in fact, is down 5%. Versus the comparable quarter at 1,122 crore rupees. The margins have actually slipped. They've come in below expectations and compared with the comparable quarter at 18.7%. And in fact, what is the cause of this? It is likely that the margin was impacted on account of a spillover of the cable cut costs and the rebranding of the cloud services, as well as a cost related to project execution in the quarter gone by. Now, this is clearly a thumbs down, and we will like to hear from the management about the outlook going forward as well. But the last stock on my list is Mahindra Finance. Once again, this is a thumbs down. This is a company or financial company that has been seeing a little bit of trouble on its asset quality side. That concern still remains, but maybe, just maybe, it might be hitting the bottom. In terms of asset quality problems, the net profit is down about 32% in the quarter gone by at 457 crore rupees. The asset quality was stable and the credit cost was still elevated, 1.4%. But as a result of that, all of that, you have also the NIM that has contracted by a bit, and it's come in at 6.5%. But that too, according to Harsh, and Harsh wrote a note on this, it's likely hitting the bottom. But take a look at the disbursements. Vehicle disbursements are pretty anemic. Apart from tractors, this is something that has come through. And the loan book growth came from 30% growth in SME segment. So that's something to bear in mind as well. Going forward, I don't know if the vehicle portfolio is going to pick up, and so therefore the outlook also looking a little cloudy.
Yeah. So certainly all of that, but I wonder. I mean, just before I get to stocks on auto-related pockets, if the U.S. automakers have together come in, labor unions, car companies, etc., and petition, will that bring about a change in the U.S. auto outlook?
I think Musk will be the first one petitioning. Look at his numbers,
Yeah.
20% down on revenue. He's like, "Ye sab to theek hai, Dodge Watch. I have to run my company."
He said that, right?
Yeah, he's going to reduce his time
with
in
the
May.
government and go to this, which is why Tesla was up 5% yesterday and 5% in after-hours trade as well. So there's a bit of an uptick there. Okay, so but just very quickly, two stocks from my end. One of them is Cyient DLM. And those numbers will come up on your screen, of course. The numbers look, so optically, if you look at the numbers of Cyient DLM, they will look okay. They will look fine because revenues will up 18%, PAT up 36.6%, and if you look at the margins at 13.4%, so on and so forth, they optically look okay. But when you look at, just lift the hood, and they've said FY26 margins would be double digits, which could be 10% as well, right? But if you lift the hood, like I said, there is a 250 basis points one-off benefit to EBITDA margins. After that, the numbers appear to be, in the words of one brokerage, fairly unexciting. Also, the order book has registered a YOY degrowth for the 7th consecutive quarter. And now, the FY26 estimates that people have are heavily dependent on large order wins. In the current scenario, now you could argue in the current scenario, people can win deals as well, but I'm just saying it is still uncertain out there. So will they be able to do all of that? Remains to be seen. Most brokerages seem to have cut their estimates a little bit. I would suspect that Cyient DLM could maybe, just maybe, start off slightly wobbly today. Let's wait and watch. And because chemical names are coming up in the offing, MK's note on Atul was interesting. They have hiked the target price to 8,500. They say we expect Atul to log in revenue EBITDA PAT CAGR of 15, 30, 37% over FY24 to 27. Relative inexpensive valuations at 20 times EPS and strong earnings growth forecast make us constructive on growth potential over the next couple of years. It's a very short-term view for a chemical company in a sector which is just coming out of the woods, but watch out for that. So that's the other stock on my list. And then, I mean, there'll be a clutch of others. Delta Corp had one-off, some other had one-offs, so remains to be seen. But I think the showstoppers are in largely in that list that you guys mentioned. Maybe an HCL Tech, maybe a Vari, maybe an AUSFP. I mean, but HCL Tech and Vari in particular.
On the negative, I would add a PFC. They put out an exchange filing late last evening on the details of the extent of hit from Gensol, and they've marked it about 350 odd crores. But they're also saying that they extended, money to buy 5,000 four-wheeler electric vehicles, and only about half of them have actually been bought. Now they're going to EOW and all of these agencies to say, okay, our signs were forged. But a bit of a question mark now on what is the SOP these lenders have, both PFC and IREDA. So that's going to be one. I think IndusInd might see a bit more pain because, even after the report in the Economic Times yesterday, the stock had already taken a tumble. But their clarification seems to be worse. Their clarification says it's not a forensic audit, but there is some problem with our accounting on microfinance. I think you're going to maybe see a bit of pain on IndusInd as well, even further today.
Yeah, and earnings, we didn't mention it, right? So Tata Consumer Products, of course, we're doing. And quite a few interesting companies to watch. 361, of course. There's Bajaj Housing Finance. There is LTI Mindtree. There are quite a few interesting ones that are out today. Tharocare as well would be one to watch.
Yeah, most certainly. But with that, it's the time for our first management today, guys. And it's a day packed with managements, by the way. There is Havells, Tata Communications, Vari, and more. But the first management interaction, steel stocks were in focus yesterday on the back of the 12% safeguard duty announced on several steel products. A decision follows the recommendations for the same by the Commerce Ministry's investigation arm, DGTR. My colleague Mihika spoke to the chairman of SAIL, Mr. Amarendu Prakash, about this and also about the outlook of the commodity. Listen into that conversation.
The latest development is a 12% safeguard duty, something that the industry was awaiting since last year. But my first question to you is 12% enough?
Good afternoon, Mehika. It's a very well-deliberated step, and as you have heard, the announcement is for a provisional duty for 200 days only. So it is based on provisional data analysis by the government. We are hopeful that as the government analyzes the data and looks at all the aspects of it, we can see a further revision in this, but we'll have to wait for that.
Okay, got it. So you're saying that there could be a revision upwards as and when more data comes into the picture.
Yes.
Got it. And SAIL has been in focus because it's stated to be one of the biggest beneficiary of a safeguard duty because of your product and volume mix of flat steel products. What kind of uptick do you expect FY26 to see in terms of EBITDA with the safeguard duty now coming in?
As you can see, the margins for all steel players have been depressed over the past year because of this unfairly priced imports coming in. Our steel industry in India is quite robust and quite efficient. But we do face challenges when there is no level playing field. Some of these imports which are coming in are subsidized in terms of different ways in their own countries. And that is why we have been pleading for a level playing field. We are not asking for any protection as such. The current safeguard duties announced by the government take care of this to some extent. We will continue to have our efficiencies improving, and the steel industry will continue to be robustly looking for expansion. We feel that a certain amount of EBITDA improvement over the previous year is definitely possible. The numbers will be calculated the time to come.
Got it. One of the key benefits of the safeguard duty coming in earlier was, a potential price hike. But we've seen domestic steel prices increase in the past several weeks, and now they are at an 18% premium to the import parity level. So overall, what's your outlook on pricing going forward for domestic steel?
As I mentioned in my last answer, the pricing that you see in the market is dictated by the global trade of steel, is dictated by various factors. So in a country, if the capacities are high and the local consumption is low, sometimes the steel travels across the world can be below cost also. So we have to take into account those factors while analyzing the whole data. The country has rightly taken a very deliberated step in line with WTO guidelines in imposing the current provisional safeguard duty. We hope that further data analysis will reveal the picture for them.
So do you expect domestic steel prices to stay at the current levels, or could we see them either, inching up or inching downwards?
So any correction to the prices is in line with the global cues also, as I mentioned. It is not just the safeguard duty which will decide the price. It will be based on global trade flows. We still have to see the whole impact of the US tariffs and which way the US tariffs will go. Because that will also dictate, it is not just about India or the Indian domestic market, but how the global trade flows of steel happen. So you see how Europe will react, how the Asian market will react to this, how Mexico and Canada get affected based on US duties. Whether US continues to import even with high duties, or whether there is some trade gets diverted towards Asia. So it's a question which will be settled over next few weeks as we come to know more about US tariffs and other things.
So, while I have you with me, I know that you're not allowed to speak exact numbers of Q4, but could we get a sense of whether volume-wise and, just your generic environment-wise, was it better than Q3, and what's your outlook for FY26?
So India growth story in terms of steel and infra is continuous. So we all have seen last 2 years, 13% growth in 23-24. And we are estimating about 10% growth in steel consumption in India in 24-25. So definitely we feel positive. This has improved over quarter. The last quarter, that imports were relatively checked as compared to the first 3 quarters. So definitely we have a positive outlook on the demand scenario as well as numbers.
And lastly, sir, the company does have ambitious capacity targets. And when do you expect this growth capex to start coming in? What could the outlook in terms of investments look for FY26?
So we are already in the market for the first 4 million ton, rather 7 million ton has already been announced, which is in the market. 3 million ton further, we are working on getting to the market in a few weeks' time. And the next 5 million ton is also being planned. So actual capex on the ground may start in a year from now, but the plans are already afoot.
Okay. All right. Let's take a look at some of the stocks on our watch list. We're starting with Havells first because it's a strong beat on all fronts. Bharti Airtel, meanwhile, is also on our list this morning. They've entered an agreement with Adani Data Networks. Ashoka Buildcon has seen orders worth 569 crores. Wari Energies, meanwhile, has seen EBITDA doubling and margin expanding. AU Small Finance Bank as well on our green screen today because it's a beat on profitability and operational.
Okay, there's HCL Tech, of course, that you should keep on your radar. It is a strong FY26 guidance. We were talking about this, so it stands out, especially when you put into context what Infosys said just a short while back. On the weaker end of the spectrum, you have Cyient DLM. One-off has led the margin expansion. If you remove that from the picture, it looks like a little bit of an anemic number. M&M Finance as well, not looking too great. Margins have contracted and the growth slows. Disbursement not looking very strong there. Tata Communications, there's a miss on the margins and a one-off has driven the PAT beat. and a 4x growth in the PAT, in fact, versus a comparable quarter. Swiggy, Ambit is initiated with a sell and is looking at a possible 10% downside from this point. And remember, Swiggy has already given up quite a bit of ground.
Okay, and of course, we keep an eye out for all of these and ask our guests about some of these. So Mayuresh Joshi, HR at MarketSmith India, Head of Research at MarketSmith India, joins in on the fundamental side. In a bit, we'll get in the technical experts as well. Mayuresh, thanks so much for joining in. We're starting off with the big one, Mayuresh. If the US has done a bit of a pullback on the severity of the conversations or the talk around both China and Powell, and it's lifted the US markets higher, you reckon tailwinds further for Indian markets, or we've already done our bit?
Morning, Neeraj. No, absolutely, I think that will provide for a further fill-in for the markets. Because the only outside concern that probably remains is how much of negotiations happen ex-China, and what really happens with China. With Trump's statements coming through, I think the markets will take that positively to a large extent. And therefore, I think India, in the entire context, in terms of our expectations of an agreement with the US, FTA is expected to sign with the UK and a lot of other nations as well in the next few months. I think that really might augur well in terms of China plus one. And with more negotiated tariffs for India, at least the external concerns that were emanating, at least at this juncture, and you never really know what might happen over the next 2-3 months, still looks very, very positive for India as we speak.
Okay, let's talk about I know that we've spoken so much, Mayuresh, in the recent past about the IT pack, but we must talk about it. HCL Tech, and the debate here in the studio was whether it is 2 versus 2 or is it 1.5 versus 2 based on the guidance from Infosys and the others. What did you make of the numbers, and can you take anything sectorally from this?
Morning, Alex.
Morning.
Again, so I think no great news from the sector as a whole, as far as the results are concerned. I think if you probably look at general commentaries across the sector so far, they seem to be very soft and tepid. The expectations in terms of recovery, specifically in terms of discretionary spends in key sectors like BFSI, manufacturing, retail, how do they bounce back or how do they recoup in the next few months are going to be extremely critical. And therefore, I think a lot of companies have probably given a little bit of a subdued guidance, at least in the first half. Now, if things probably improve as far as tariff positions are concerned, generally for the sector, and there is an expected tailwind of IT spends and discretionary spends, specifically in areas like high-tech, areas like AI, generative AI, expected to pick up quite significantly across cohorts. So whether it's a 1 million client, or 100 million client, I think those orders will probably come in, maybe with a deferred or a lag effect. And that's what the industry or the sector is probably hoping for. At this juncture, I think it probably seems a little bit easy in terms of whether companies might be able to meet a large part of what they probably delivered a year back. And therefore, I think the kind of price damage that has happened for a lot of stocks is gestating all factors and facts put together for the sector as a whole. So in my opinion, again, I think a large part of the price damage is largely done. As I pointed out last time, I think we would love to see how IT companies across the globe are probably reporting numbers, what their commentaries probably are. But in my opinion, again, I think a large part of the price damage is done, time consolidation. But do we get it at these stocks at this juncture? I think we'd wait and watch happens.
Okay. So, but then if you're not looking at, so if it's a wait and watch approach for the large caps, would you at all venture into this mid cap space for the IT space? Of course, you're watching out for LTI Mindtree today, and that should kind of round up the list. But what do you do with this? Are you wait and watch throughout? It's just, I guess, another couple of weeks to wait.
I think there's no harm, right? And there might be outliers within the mid cap IT space. We are not denying that. So we'll closely watch out, as I've said in the past as well. Within the mid-cap IT universe, stocks like an LTTS as an example, stocks like a Persistent as an example, stocks like Emphasis as an example. Emphasis is doing a lot more in terms of Gen AI. They've almost got 40% in terms of their overall order book from Gen AI. The management expects that to probably exceed 50% as we head into the next few quarters. Now, all these orders in Gen AI will be orders with high margins. And if they will probably get execution back on track as far as orders are concerned. My own sense is that there might be a significant amount of earnings consistency that a few of these mid-cap IT companies might report. But again, I think we'll wait and watch for numbers, Alex. Even if we probably get in the numbers, the commentaries are positive, we feel that the macros are probably supportive and the micros might be supportive for a few individual companies. Even if they move 5, 6, 7%, I think there's no harm in waiting out and then probably entering stocks rather than just taking a bet at this juncture when the entire environment is probably useful.
Okay. Well, and let's stick to IT because Puneet Johnson, you talk about the numbers and the tonality of HCL Tech management on the call because Puneet, I think that becomes very important too. But fill us in.
Well, definitely, it was a really strong set of numbers, and while it's just a percentage growth in terms of revenue, I think, as you rightly mentioned, the commentary going into FY26 is one of the key ones. In terms of numbers, EBIT margin came in about 1.5% down compared to the previous quarter, and that was because of wage hikes in this particular quarter. While net profit is down 6%, but all four numbers and financials bang in line. The other aspect is that the constant currency revenue growth, while down 0.8% on a quarter-on-quarter basis, the services business constant currency revenue growth actually grew by 0.7% in a quarter that's very weak for all large cap IT players. And the one big aspect was, of course, the guidance for 2 to 5% for FY26. While similar guidance was estimated for Infosys, they actually gave a 0 to 3%. So while the guidance as well is bang in line with estimates, because it's higher than Infi, that is also going to be one of the key things for HCL Tech. Apart from that, the deal wins of almost $3 billion, and for FY25, it's $9.2 billion deal wins, and it's a really strong number as well. Apart from that, now brokerages actually have come out, upgraded the stock as well. JP Morgan, Macquarie, as well as we've seen both those brokerages come out with a positive view on the stock. They've said that specifically, just verbatim upgrading it to an overweight from a neutral, and they've hiked the target price to 1750, and that's JP Morgan. Just want to take one line from this particular note. They mentioned that the services business has now performed ahead of parity and is the fastest growing amongst the peer group over the last 3 years in a row now. So 3 years in a row specifically, we've seen HCL Tech outperform its peers. Macquarie as well maintaining a higher target price, 2,160 rupees per share. And they mentioned that Q4 didn't see any impact of US tariff, which is one of the key talking points. And 50% of the deal bookings in Q4 were actually closed in March of 2025, and that was actually also mentioned by the management. So overall, it's a strong beat essentially in terms of the expectations around large cap IT players, and I think it might help boost the momentum going for the mid cap IT players, which are expected to report results in the next couple of days.
Okay, Mayuresh, so that's a story with HCL Tech, and I think you're echoing that take that IT is going to do okay, HCL Tech was fine. But I want to also come to you on what you thought about AU Small Finance Bank, and if you think that banking story is going to continue today as well, with a focus maybe on the broader markets.
Morning, Tamanna. I think financials as a space, decent set of numbers. I think what you've seen from ICICI, HDFC, what we've seen from the smaller run NBFCs as well, including AU to a large extent. And therefore, I think the microfinance part of the book, specifically for NBFCs, were a pain point for the last few quarters. Q4 might still witness a part of that pain coming through in terms of reported numbers. But with expectations in terms of the risk weightages coming off, with expectations in terms of the liquidity that RBI has created for the system as a whole, and with expectations of recovery happening both in terms of urban as well as rural consumption, with the expectations again that a large part of the smaller corporate pool, which is the SME and the MSME are expected to bounce back. My own sense is that a large part of the microfinance pain should be behind us. So I think structurally, if you probably leave aside microfinance within unsecured credit, I think there were very less complaints to be probably done. Obviously, I think with the leeway that has been given to the system as a whole, does this mean that there might be a spurt in terms of unsecured lending, credit lending as an example, and what happens to credit underwriting in general? Generally, Tamanna, our own sense is that leadership stocks might continue doing well for the space as a whole. Valuation still within normalized range. and the expectations of earnings expected to continue might actually continue for the larger pool of the financial universe. So the larger rung banks, as an example, ICICI, State Bank, Bank of Baroda, might continue doing well. For NBFCs in general, my own sense is that with rural
Top pick in the financial space for you this morning?
So ICICI Bank, as I said, Bank of Baroda.
Okay, so ICICI Bank and BOB continue to be your top picks. We're welcoming in Sudeep to the conversation this morning. Very good morning. Sudeep Shah, Deputy VP Head, Tech and Derivative Research, SBI Cap Securities, joins in. Sudeep, are we going to have another, sort of a rocking day, at least on the indices? What is your outlook, Nifty and Bank Nifty? Let's start there.
Good morning, Tamanna. I feel even if we don't have a rocking day, even if the market consolidates here, it would be a party for the mid caps and the small caps, like it has been in the last few sessions. And yesterday specifically, we saw a lot of action into the broader markets. So, starting with Bank Nifty, because that has been an outperformer and that has been the strongest pillar as well as a backbone for the entire rally in the last 4 or 5 sessions. It has broken above its previous highs, now sustained well, and we're not seeing that kind of selling pressure from higher levels, which could make us feel that yes, the top is getting in place, or we are getting at the fag end of the rally. Although the indicators are getting a bit overbought, it's getting a bit more heated up. But yes, we know that these overbought indicators can stay for long also, like in case of oversold markets. So here we feel from a banking perspective, with a lot of large caps and as well as mid caps now coming to the party. Now the support zone for Bank Nifty would be closer to 55,000. And till this holds, the rally could continue on the upside. The party could still continue. So rather than capping the upside and placing a target on the upside, I feel it dips to towards 55,200, 55,300, if any, during the course of the day we get, should be utilized to go long, keep 55,000 as a stop loss and continue riding the rally. Now coming to Nifty, that also has now crossed above its February as well as March swing highs, and Nifty is now sustaining well above those levels and closer to that 24,200 mark now, from where in first week of January we had seen that downturn starting. So what we feel is now 24,000, 23,950 on the downside will become a strong base. A lot of active put writing is happening there. If we see the monthly contracts in 24,000 and 24,100 puts, so that would be a strong support zone on the downside. Until this holds, the rally on the upside could continue towards 24,400, 24,550 zone.
Okay. Hi, Sudeep. Good morning. And I get your point. The initial sentiment that you expressed, which is consolidation is not necessarily a bad thing at these junctures. And nervousness, I think, exists both on the downside as well as on the upside when you reach those heady levels. 1,800 points on the Nifty 50 in 6 sessions. So, but the point is that given that context, would you suggest any derivative strategies at this juncture? We're heading into monthly expiry tomorrow, of course, but with that context, and also what are your picks this morning?
In case we need to play the bullish side on the indices, now with Bank Nifty already say at higher levels, we need to wait for a dip there. And in case we get that dip of 200, 250 points, and that's the max dip that I feel we could get, then one can go ahead with a bull call spread in Bank Nifty. Even for Nifty also, like the closing has been closer to 24,150, 24,200, or 24,200 as well as 24,300 strike price bull call spread also could do well. So what I feel is that rather than plain vanilla option calls, spreads in such markets can do well, because even if they're from overbought zone, we see some kind of selling pressure or some kind of profit booking. You don't necessarily lose the entire premium. So for me, bull call spreads would be the way one should be going ahead with. And coming to the stock picks, the first stock pick that I have is FEM Industries. Now, what we have seen is auto ancillary stocks have started to move well in the last few sessions. And within that space, FEM Industries had a strong closing yesterday, 1470, 1475 levels. And even in the case of last 2 to 3 months, in fact, from January, we have seen the stock holding this 1300, 1350 zone well, and the stock trading in a 10% range, not falling much when other mid caps were falling. So in a sense, showing some kind of a higher relative strength. And we feel now the stock is ready for a breakout, and this could be bought with a stop loss of 1430 on the downside and a target of 1580, 1600 on the upside. The second stock that we have on our radar is 361 Wealth Asset Management. Here we have seen some kind of corporate news also yesterday, which was positive. We saw the stock breaking out of its February as well as March swing highs. And now the stock is trading above its important short and medium term moving averages. So with the strong close, which was backed by above average volumes, we feel that this stock is headed up to at least 1060 to 1100 on the upside. And this could be bought with a stop loss at 980 on the downside.
Stock in focus, of course. Yesterday there was tremendous news, as we've already discussed. But 361 will be in focus today also on account of earnings. So keep that in mind. Let's talk about a stock that Tamanna has already highlighted to you, Havells. And it's a thumbs up on the back of the numbers. But let's look a little deeper as to what led to this. Mahima joining in to give you some perspective there. Mahima, hi.
Yeah, hi Alex. So in terms of Havells, it's a strong beat across all the four numbers, that is revenue, EBITDA, margins as well as the profit. Revenue growth was led by cables and wires as well as the Lloyd's segment, which saw 40% growth YOY, of course on the back of a lower base as well. EBITDA margins rose on the back of robust switchgear's performance as well as Lloyd's performance. But the management has also come out and said that summer is set with some delay in terms of seasonal sales. And this is in terms of secondary sales for the RAC segment, and this could impact the first quarter in FY26. In terms of the segmental performance, overall Lloyd saw 40% growth and margins also stood at 6.1%. Cable wires saw growth of 21% in terms of revenue and EBIT growth of 20%. Switchgear saw revenue growth of 6% and EBIT was down by 3% for the segment. ECD revenue was up 10% and EBIT grew by 22%, but lighting is where the pressure continues. Revenue was up only 1% and EBIT was down by about 8%. Now in terms of what brokerages are saying, well, Nuvama has reiterated a buy with a target price of 1890. They've also raised their earnings estimates by 4 to 5% by FY26 and 27. They forecast revenue CAGR of 16%, EBITDA CAGR of 20% and a PAT CAGR of 22% over FY28. In terms of valuation, they're valuing the stock currently at 52 times. Citi has maintained a neutral and hiked the target price to 1900 from 1750 for the counter. Lloyd's is something that has driven the beat, is what the counter is saying. They see profitability pressure led by relatively slow growth in switchgear and of course higher growth in low margin business as well. They seek a better entry point as to where the valuations stand right now. So this is the overall view as to how Q4 has panned out for Havells.
Yeah. So, you know what's I think noteworthy in Havells is how they have boosted in core segments. Mayuresh, you've taken a look at the numbers, and Havells has been in focus because of an entrant of a big player in the cables and wire segment. And you saw that impact coming in. Do you think those fears are now receding, or we'll have to wait for a couple of quarters to see what the impact really is, if any?
Obviously, I think you probably need to wait for the sector as a whole in terms of the impact. But the impact will not be so immediate, right? Because what will probably happen is going to happen at a later stage. However, I think in terms of the diversification that Havells is probably doing at this juncture outside wires and cables, the operating efficiency has started kicking in. And therefore, I think as the consumption trends become even stronger over the next few quarters, my own sense is that they will be reporting a stable set of numbers. So I think not too negative on Havells. I think anybody already this short should continue.
So that's Havells. Mayuresh, I'm not sure what you made of Waaree Energies, because what a stellar set of numbers, right? At least it stood out to me. The outlook on FY26 EBITDA is also quite considerable increase on the higher end of the guidance range at 6,000 crore for FY26. It's a rise of 92% from what they achieved in FY25. That's one. 46,000 crore order book heading into FY26, and a PAT number in the fourth quarter that is very good already. But if you account for the exceptional item in the comparable quarter, it's even better than it looks. So what do you make of the numbers, and is this a buy even at these levels, considering the kind of run-up we've seen in the recent past?
No, not a buy. But yeah, outstanding set of numbers, Alex. So I think no two ways about it. Now, whether they'll be able to continue this over the next few quarters, I'm pretty sure they might, because they've got a decent order book, they're executing well. But I think the valuations are absolutely not in favor of this. What you're probably looking at is within the hydro space and within the smaller hydro space, a few players and a few EPC players as well within that. Because our own take is that within the renewable space, smaller hydro might actually do well over the next 3 to 4 years. PPAs are largely fixed. A large component in terms of their offtake might probably be better off in terms of the hydrology in certain areas that they probably operate out of. And the equipment that is probably required and the sheer size that is probably expected to come up can probably be quite significant. So Vari is probably, yes, the momentum can very well continue. But my own take is that smaller hydro players might actually do very, very well over the next 2 to 3 years.
Okay, quick word from Sudeep, if we can, very quickly on Havells and Vari on the charts, if you've been tracking.
On Havells first, the stock has seen a very steep recovery, very fast recovery. The way exactly the number of days taken from 1600 to 1300, the stock has recovered back in half of that time frame. So that shows the strength in the rally. The volumes have been on the uptake. So what we feel is from the current levels, if one is holding Havells, can continue holding it with 1620 as a trailing stop loss. And we could see this rally extending up to 1750, 1770 on the upside. Now coming to Vari. Sorry.
Minute?
Okay,
yeah.
Let's take a break. Let's take a break, come back to Vari, pre-open rates and a lot more.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
.361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The second buy pick is in Naukri InfoEdge. It's a bit of
back. Let's talk about Cyient DLM. Anthony M joins us now on the conversation. He's CEO of the company. Thank you so much for your time and for speaking with us today on the show. Let's quickly go through what the numbers look like this quarter. Strong execution for Cyient DLM. Margins look fantastic. Of course, there is a one-off there, which is coming in to those key metrics as well. So, Mr. Anthony, very good morning to you. Let's start with the one-offs right off the bat.
Hello, yes, great to be here. And yeah, regarding the margins, this has been an excellent quarter for us, definitely from a bottom line perspective. The one-offs are due to some programs that we've been working for some time and have closed some of the items that we can recognize on that. So you are seeing that impact on the bottom line. But that's probably, going forward, you'll probably see that's probably about a 200 basis points impact on the bottom line, maybe a touch more. But due to the business mix, which is becoming more favorable, as we ramp down a significant program that ran 2.5 years that was a little bit lower on the margins compared to the rest of our portfolio, you should see a sustained outlook in terms of bottom line profitability in the double digits. In the 10 to 12% range is what we see the business at a minimum going forward.
Okay, so just one follow-up there. If I got this correctly, you said the one-offs were about an account that closed earlier than it was supposed to. Can you just go into a little bit of detail on that, and if anything more you can share on what exactly it is?
Yeah, no. So the one-offs were basically about two transactions that made up some materials and items that we were negotiating with a couple clients. And so, we conservatively chose to, not recognize that until we had those closed. Now that, those have been closed, you are seeing that impact on that. That part has little to do with the existing large program, which is now ramped down. That's run about 2.5 years. And that's been, it's been a lower margin program. And so now when you look at our business mix and with new programs coming in that are more diversified across sectors, it gives us an overall improvement in the profitability because we don't have the dilution of that larger defense program that was making up even up to a third of our revenue for many quarters.
Hi, Anthony. Alex here. So I see that the defense segment year on year, the degrowth is about 43%. And this is obviously a considered decision that you've taken, your company has taken. And in fact, it's evident also in the way that the order book has gone over the course of the last 10 quarters. You've seen a consistent decline. But are we at the end of that period? And what is the way that this is going to pan out going ahead? Everyone wants to know how this is going to ramp up. You say that it's going to be a healthier mix. Can you break that down for us? How will that look starting Q1 FY26?
Yes, absolutely. So we kind of look at aero, A&D as kind of, one sector. This last fiscal year, the defense part due to this one contract made up a pretty big portion. Now, again, as that ramps down, we still have A&D being the prominent portion of our industry mix, even going forward into FY26. And that makes up, that makes up, I believe, over 60% of our business. So year on year, you should see from a revenue perspective, probably a 5-6% decline as far as industry mix in the A&D segment. But it's still our prominent area. This is where we still have a lot of momentum. A lot of our growth, especially in defense and aero, offsetting that one big program, has come in from our clients in that regard. So that's still our dominant sector. What has grown is our industrial piece of business quite significantly due to new program wins that we're ramping up, and we're starting to see that impact in FY26. And then also we expect to have some medical programs that are ramping up as well that will start to take up a larger share as well. So you're going to find a little bit more diversification across A&D, industrial and medical, with industrial and medical coming up and taking up a larger share of the portfolio. Again, the bottom line growth is coming Not so much from the diversification on those sectors. We actually make similar margins across those sectors. It's more that one program specific, which was again a lower margin program. So as that's now ramped down, that will you'll continue to see a positive impact on bottom line.
So the clarification and the outlook going forward on bottom line is appreciated. Anthony, what a lot of people are also looking to understand is when this order uptick will take place, because you've seen a reduction in the order book, and what analysts are pointing out is the lack of visibility because of where that stands right now. The metric that they're talking about is the order book to the trailing sales ratio, which is at 1.25x, which limits the revenue outlook or visibility to just after FY26. So when does that pick up, and what's the outlook on order wins?
Yeah, absolutely. That is one trend that we are looking to have impact on in the coming quarters, and that comes down to several key deals that we have in the pipeline that, as they achieve closure, will then turn into order book in terms of what we as receive those POs and call that out. And so that momentum, especially now that we've been consuming due to this one large program. Yes, there has been a decline in the order book, but as these new programs come in, that will start to provide a change in direction. And we also did announce another new key logo this last quarter, which brings it to about 6 for us for the fiscal year, which is quite significant in our business. We're a little bit unique to where we really only work with very large multinationals. Any one of these logos could be a $50 million account for us. And so we see tremendous runway just as we diversify our client mix. But again, really focus on, what we call A-list clients, and we have a very low client churn aspect to deal with in our business.
Anthony, in terms of the order backlog, do you see this easing off? And can you give us some perspective there as well?
Yeah, we do. We do need to start to build that. And again, as those orders come in, you will see that trend start to impact. And so over time, I think that will have a positive part on the business. Right now, we've finished this one large program. We've started to fill this in with these new programs, which I've discussed, which also give us a little bit of segment diversity. And so, you're probably looking, it'll probably take a quarter for that to start to really gain good traction. But again, where that pipeline is and conversion of those orders is looking quite solid. So we do look for an overall year perspective to be quite solid in both regards, especially from a bottom line and then also top line as well.
Okay, and are you seeing the operational cash flows steadying as well, Anthony?
Yeah, cash flows has been improving as well. We've and this is an area just as far as net working capital that we want to continue to focus on the business. When you run a low volume, high mix business, managing that and bringing our net working capital down to about 100 days will really accelerate the business and the cash flow perspective. So again, we have had some positive movement in that regard, and we will continue to do so on that. That is an operational focus area for us.
All right, thank you so much for that, Cyan DLM, talking about the quarter gone by. The pre-open rates also settling on Cyan DLM, looking at a 12% post up, because the operational strength is showing, but you do have a one-off, which is impacted by 250 basis points on their margin. That's one big deal which has closed off. So that has impacted order flow. But let's talk about the big brokerage call of this morning very quickly. Just a few minutes to go before markets open. Harsh, what's on your radar?
Well, it's a Motilal Oswal note initiating coverage on a Niva Bupa. 29% upside is what they see from here on the stock. In terms of why they feel this very strong growth, that's the first point which they make. In terms of the way Niva Bupa has grown, they've grown at a 34% CAGR FY22 to FY25, so strong growth there. They're also expecting Niva Bupa to grow at a 25% CAGR on gross written premium between FY25 and FY28. So that strong growth clip likely to continue on a higher base. Diversified product mix in that sense, retail as well as group health, both of those contributing fairly healthily. Retail contributes around 68%, group contributes around 32% for the 9-month FY25 mix in terms of product, and therefore that's the other key positive. Among standalone health insurers, Niva has the best claims ratio at 90%. And therefore, and why is that so? Why does that really stand out? One is the claim management process is better. They're focusing more on transparency. They're using AI, and they have a high quality healthcare network as well. The company has a well diversified distribution model. Agents contribute around 30%, corporate at around 28%, brokers around 29%, and direct selling is around 13%. So across the board, you're seeing a good performance and a very balanced kind of performance from product mix to a distribution mix. They're expecting the combined to come off very sharply from 98.8% in FY24 to 93.4% in FY28. They're expecting a top line CAGR of 27%, a PAT CAGR of 34% between FY25 and FY28. And the valuation of rupees 100 is based on 40 times FY27 expected price to earnings.
Thank you for that, Harsh. Niva Bupa doing okay in the pre-open, but really star of the morning seems to be Wari and Energies. Look at HCL Tech. All of those really, revving up. Tata Communications as well. We're going to be speaking to the management in just a bit. Chandan Thaparia joining in, Head Technical and Derivative Research, MOFSL. Chandan, very good morning to you. Let's take a call on the Nifty and Bank Nifty first up.
Yes, good morning. Thanks for having me. So yes, the momentum is clearly intact in the market, and index has been making higher tops, higher bottom. We have seen a decent run up in Nifty index in last 8 to 9 trading session as it rallied by more than 2,500 points. I believe the ongoing momentum could continue the way price structure is visible. As of now, till it holds above 24,050, the ongoing momentum could extend towards 24,500 to 24,750. However, on positional basis, we have supported 23,800, and with that support, index can even reclaim to 25,000 marks. So expecting the ongoing bullish momentum to continue in the market. Looking at the Bank Nifty index, this index has made the new lifetime high and has been making higher tops, higher bottom. In last 10 days, it rallied well by more than 7,000 points, and still the momentum and the thrust of the bullishness is still persists, which can take it to higher levels led by short covering. Tomorrow is the short covering. Tomorrow is the monthly expiry, and because of that also we are expecting short covering as both the indices are trading higher than their volume weightage average. So with the support of 55,500 zone, your Bank Nifty can head towards 56,500 to 57,000 marks as well. So expecting bullish stance in both the indices led by short covering trigger as well.
Very strong start is what we're looking at possibly, Chandan. Good morning to you. What are your picks at this juncture in the morning? Just 3 minutes to go.
Yeah, I'll focus on the consumption part. First, is buy on Hindustan Unilever. Unilever has seen the decent bottom process, and rollovers are now turning out to be positive. We have seen a price formation of bullish pole and flag, which is the positive implication. So HUL1 can buy with support of 2345 for an upside target towards 2500 level. Second trading area, that is buy on the United Spirit. McDowell, I believe the Spirit could continue to be on higher side, and after a long time, we are turning positive on the FMCG or consumption name. Earlier we were talking about the BFSI segment. So United Spirit one can buy with support of 1525 for an upside target towards 1620 marks.
Just one follow-up, it's not on your list, but HCL Tech at 5% up in pre-open. If indeed there's a considerable pop as it is expected, would you buy at this juncture, Chandan?
So Nifty IT was slightly underperforming in the market in last couple of weeks, but bottom is already made, and this could be the sector where people can go for bargain buying or some short covering trigger could happen as broader market has recovered well. In line with that, I believe HCL Tech also can see some recovery. However, if it opens up by more than 5%, then we need to wait for some decline. As of now, as per the previous day closing, if we get near 1520 marks, then one can buy for an upside target towards 1620 in HCL Tech.
Okay, let's also talk about some of the other names in the IT pack. Coforge is up about 3.5% or so. Tech Mahindra up about 3%. Sudeep, coming to you very quickly on some of these names, would you venture out and buy? Would you hold your horses, as Mayuresh is saying?
See, I'll go with Mayuresh. I feel it's just a pullback here on these names, and the IT sector has been underperforming. So wait for a while. Go with sectors that are outperforming or are showing signs of outperformance, like consumption or banking or financials. So you'll get a lot of opportunities there. Just playing for a pullback, I feel one should wait and watch here.
Okay. Sudeep, what's your top call this morning after you've seen the pre-open?
See, I'll go with FM Industries, and the one stock which has come on my radar is Ashoka Buildcon. Now, Ashoka here, a decent bottoming out process is happening here, and the stock has had seen a decent correction now. So from here, at the current price of 204, 205, I feel with 197 as a stop loss, the stock could head up to 215, 220.
Chandan, quick top call. We have about 5 seconds.
Yes, I'll focus on United Spirit to start the day with high spirit note. For an upside target to 1620, one can buy with support of 1525.
Okay, high spirits for United Spirits. Even as it is a somber morning as far as national news is concerned, markets are doing what markets do. Those factors which matter are looked at very closely, and hence you're seeing the Nifty off to a strong start, about 0.5% up, 24,300 blown past, and staying up there pretty decisively. That's an important zone to watch out for. The bank Nifty in all-time high territories, 55,936 is what I'm seeing on the screen. Nifty IT story of this morning. If you looked at our factors to watch this morning, you would have seen that how we focused on Nifty IT, leading the recovery and mirroring what's happened globally as well. So you're seeing a sharp recovery there on the Nifty IT. The broader indices also not doing too badly. The mid-cap and the small-cap over 0.5% up in just the first minute of trade. I'm going to pull up the heat map on the Nifty very quickly just to show you what's happening there. Well, HCL Tech ruling the roost. It was on our watch list. Guidance better than expected. Deal wins stronger than expected. Tech Mahindra numbers are expected to come in and following suit. But what you're seeing on the top row is a mix of a couple of factors. One, of course, numbers from HCL Tech, the guidance that they have shown, but also the kind of up move that you've seen on the Nasdaq overnight. Indices showing some recovery as well this morning. Tata Motors doing fine. Eternal, TCS, all of them pretty decent kind of mix over here with not too much red on the screen. What's hurting? A bit of Bajaj Auto, Kotak Mahindra, but not massively, less than 1% down on some of these stocks. HUL ahead of numbers, showing some signs of weakness, but not really. So a mix of auto in the lower band. Grasim also feeling some heat, but it's all about IT this morning. Banks also holding up, 6% up now on an HCL Tech. That's really the story of this morning, Alex.
Picture, isn't it? And by the way, Sensex crossing 80,000 once again is another landmark to look at. Let's look at the broader markets also and see how they're doing. They're more or less holding up. Remember, in trade yesterday, they outperformed the benchmark. Let's look at the mid-cap index. Once again, just about outperforming, 0.8% or so for the mid-cap index. Small-cap index, let's see where it is at this juncture. It is also gaining about 0.8%. Let's very quickly pull up the sectoral heat map, and that's going to present a picture that Tamanna told you about. And indeed, it is the IT pack right on the top of the screen that is gaining about 2.4%. You have realty once again that is up and about. Remember, in trade yesterday, it was one of the heroes. It gains about 1.3% in trade today as well. The defense pack in focus once again. And let's see what else. So auto is not doing too badly. Metal is up about 0.8% or so. On the other end of the spectrum, not too much in the way of losers, but you have pharma that is just about treading water at this point, and healthcare as a pack is about 0.25% higher right now. But let's look at individual stocks, and some of them are rollicking in trade, if you can call it that. Waaree Energies. This is a set of numbers that looked fantastic, and the outlook for FY26 is as robust as well. So on the back of earnings, you're expecting Havells to start perhaps in the green, but it has not. It's down about 3%. We'll look back at the numbers and see what is triggering the street right now. But Waaree is a clear thumbs up about 5% or so. Ashoka Buildcon, let's pull that up as well. It's on the back of an order win. It's up and about. It's that kind of a market with even a small update, 570 odd crore order. It is up about 4% or so. on the back of earnings. AU Small Finance Bank, it's a beat operationally and it's an inline profitability. This is a thumbs up once again. The stock is up about 3%. You just heard Cyient, DLM and the management speak to us. There is a one-off in the margins, but the wind down in that defense segment is something that they had anticipated, that worked towards, and going forward the mix, as if you're talking about the segment mix for the revenues, is going to look healthier according to the management. That's the commentary coming in, and that has been seen very positively. Of course, it's off the high point of the day, but it's still gaining about 8.5% or thereabouts. What else is on the radar? You have on the downside Mahindra Finance, not the best numbers coming through, and it is down about 1% or so. Perhaps to a certain extent you can say that maybe the margin deterioration that you've seen in the recent past has bottomed out, and maybe there's an improvement in operations going forward. Tatacom, reacting to numbers, there was a one-off here as well, exceptional gain that boosted the profit as much as 4 times compared with a comparable quarter, is up about 0.6%. We'll speak to the management very soon. And Swiggy, finally, there is a note that has come through on Ambit. It's initiated with a sell call of as much as a 10% downside is what they're saying, but the stock is reacting. It's up about 0.4% or thereabouts. So all told, Neeraj, it's a pretty picture. It's the kind of market seemingly where bad news is not getting punished as much and good news is being looked at very favorably. Rose-tinted glasses.
Just the nature of the market, and after Trump's comments maybe. So the standouts, HCL Tech, arguably yes. I mean, 2 to 5% growth versus 0 to 3% for Infosys. I mean, that's the giveaway. But Bank Nifty is at all-time highs. And look at that, AU Small Finance Bank leading the charts out there. But after yesterday's all-time high, yet another all-time high for the Bank Nifty as well. So good going. By and large, you can't complain too much. Havells is probably the sore spot in the markets this morning. But let's get in. Okay, I think we have our guests with us. Very quickly, opening thoughts from all of them before we get in a special guest as well. So Chandan Taparia, opening thoughts. Would you take any trades at these levels?
So I'll be positive on the Nifty, or in fact, if Nifty corrects by 40-50 points, if it comes to us 24,250, then we can look for a bounce to us 24,444. So that is the first trade I'll focus on, Nifty index. And apart from that, I can look at the selective auto name. After a long time, I believe that IT is doing well and selective auto counter can do well. So I'll focus on counter like TVS Motor. With the support of 27.15, TVS Motor can head towards 28.50 kind of level. So HUL, United Sprit already discussed. TVS Motor, I'll add one more name to play some momentum in the morning hours.
Your opening thoughts, anything that you are trading? Sudeep.
Yeah. Morning, Neeraj, I feel we need to wait for some kind of a dip on Nifty, say a 40-50 point dip towards 24,280, 24,300. Early morning signs, 24,300 put writers are also getting active. So I feel a minor dip also could do well. Adding to Chandan's list of auto stocks, I feel Tata Motors also now is showing some signs of a bottoming out process, as well as Mahindra and Mahindra. So I feel auto as well as select IT names we need to see for IT for next couple of hours. But yes, auto names can be looked upon on dips.
Okay, Jamin, all of you, thank you so much for taking the time out and being with us today. Really, really appreciate your time on an important day of trade. And on an important day of trade in our studios is Manish Sonthalia. Needs no introduction. Manish, great having you. Thanks so much for taking the time out. And thanks for being here.
Thanks for having me, Neeraj.
No, the pleasure is ours. It's a good day, really. Manish, tell us, what does a money manager think like? Because there was uncertainty, tariffs, markets getting punished. Indian markets got punished before the tariff uncertainty came in as well, right? Now from 22,000, it's almost been a one-way move all the way to nearly 24.5. We've done more than 10% already from the lows.
Absolutely.
What's next?
So, it is all about temperament. At 22,000, plethora of pessimism all around. You got to barely hold your horses and believe that, this far and no further on the downside.
Sorry, I must say, you called it, right? At 22,800, he came in and said, 22,000 jayega, we might buy at those levels. Sorry, please continue. Credit where it's due.
So basically even now, I think, 22,000 to 25,000 for the next 3 months is very much doable. If you were to cross 25,000 in a hurry in the next 3 months, again you would be creating excesses on the upside. So I think the band is 22,000 to 25,000 in the next 3 months. Lot of uncertainties around the tariffs will be over. US has imposed 100% tariffs or more on China. China has imposed 100% tariffs on US. I don't think these numbers are sustainable. You know, this is all brinksmanship. Either ways, this will all get settled
Saber
between...
rattling. Saber rattling, yeah.
Yeah, so this will all get settled between 20 and 30%. So obviously, coupled with that, you look at the US, there will be tax cuts, etc. That will boost sentiments quite a bit. A lot of this is being preempted, is happening in the marketplace as far as the global markets are concerned. Global markets broadly have rallied from those equivalents of India's 22,000, you know, except for the US, which has been falling. So I think that's where we are. You know, it's a range-bound market. Nothing has changed as far as the numbers are concerned. Earnings trajectory on the Indian market, or Indian Nifty 50, stays good at that 10 to 12%. On the conservative side, consensus street estimates are still 14-15%. Yeah. I would still believe 10 to 12%. Lot of uncertainties are there. It's rather, better to err on the side of caution. So 10 to 12% broadly at 25,000, you'd be fully valued for the near term. I would believe it that way.
Okay. Of course, Manish, at these moments, the debates turn once again to those people that held cash. I'm talking about money managers, and in retrospect, everything seems flawless, right? As always. So when the markets were going through that turmoil, those that held cash were saying, wow, you knew something that nobody else does. But now in 6 sessions, as Neeraj is pointing out, we're talking about 1,800 points in the Nifty 50. It looks a little dicey. So would you say that the best strategy at this point, even now, is to be fully invested in the Indian equity market?
See, my 3 decades of money management tells me that human beings are not wired to time markets to perfection, right? No matter how dire the circumstances appear, and you keep a bit of a cash, and a bit of a cash is nothing more than 5, 7, 10%. If you go beyond 10%, then you're really taking a very bold call. And mind you, the benchmark is always invested, irrespective of all ups and downs in the global place, right? So if you were to be so sure that you tick all the boxes in terms of knowing what is about to happen, it will click maybe 1 in 10 times.
Even if you know everything?
Even if the world knows everything about everything. Markets are too smart. Markets are too smart. You will get it right 1 or 2 times out of 10 times. But the rest of the 8 times when you go wrong, it will take care of the 2 times where you have been right. So it's better that we don't try to fight the markets as far as the cash calls are concerned. Because, if you're fighting the benchmark and the benchmark is fully invested, you'd rather be somewhere close to what the benchmark is posing before you. That looks like a very big shortcut that you try to gain that alpha when something is on the momentum on the downside by creating cash. So it's very good to create cash. You get a comfort of mind that, you are right and the markets have fallen, but you really don't know when to buy it back.
Yeah.
That's the big problem. I have seen that even in Lehman crisis. Lehman crisis, everything was falling like line pins. And March 2009, when the markets turned, there was still a lot of funds which were holding a lot of cash. So it's a catch-22 situation, really, I tell you. And the best possible situation is keep 5-7% cash, that's good enough. But taking a 15, 20, 30% cash, I mean, you got to be really super confident in your approach, as far as the direction of the markets are concerned, which is rarely the case.
Super confident, or I suppose super negative. But then let's talk about the other extreme of it. And a bit of that being seen in Indian investors right now. Consistently optimistic, saying that no matter what, it will come back. And the markets have proven this time and again. Is that a bit of a foolhardy approach as well?
Look, where the whole world is currently, the flux that the whole world is, India is in a relatively better situation. But there is a big but. To say that we'll be an outlier in the global context, etc., nothing is going to matter as far as India is concerned, is out of the place. Of course, there will be a bit of decoupling as far as the monetary policies of the US are concerned or global markets, developed markets are concerned, India, somewhat deviating. You have interest rate hikes or let's say pause, you have inflation problem, here interest rate cuts are happening, you don't have an inflation problem, healthy demand because we have a 75% domestic facing economy, not so dependent like China, which is majorly export oriented economy. So a lot of positives as far as India is concerned. I think maturity of the retail investor has gotten better over a period of time. If during the last 3 months, SIP flows have been very healthy, in spite of January, February and March, I mean, it tells you about the maturity of the retail investor. No matter what the pundits come and tell you.
So it's not overt optimism, it's maturity.
It's maturity, it's financial literacy. Because I think the retail investor has only gotten smarter with the passage of time, seeing a lot of ups and downs. They have become very discerning. It's not like one size fits all. It's not like a herd mentality. There's a pick and choose. Of course, there is momentum at the margin which people get swayed to, but it self-corrects, and excesses which get created on the upside gets corrected. But the same story is again back. Go to find the next bit of stocks which are fundamentally sound and deploy your capital. So I would think it's a lot to do with the maturity of the Indian investor. Nothing more than that.
Where?
No, I mean, across the marketplace. See, the retail money
No,
is...
I'm asking, so you said deploy the capital, right? So now my question is, at 22,000 you would have bought some stuff. Where is it that you're still confident?
Neither I've been optimistic about consumption in a big way. I've been articulating that consumption is going to move at the margin in terms of sectoral preferences. There's so much of... See, the cat is out of the bag as far as the US is concerned, the uncertainties around the macros out there. There'll be a lot of if and buts. As far as capex is concerned, as far as tech spends are concerned, and that is going to have ramifications for all import-related sectors, export-related sectors. That is for one. Secondly, when things are moving in the right direction, as far as the domestic consumption side of things is concerned, the income tax cut of 1 lakh crores, right? The interest rate cuts that are happening, the collapsing of the inflation number that we are seeing, the 8th pay commission recommendations that are due from April 1st next year, which is again going to boost incomes of the government employees. That's all positive at the margin as far as the consumption are concerned. IMD has come and said that monsoons are going to be normal. If the rural income, which is showing some green shoots, vis-a-vis the conditions that prevail over the last 2 years, you're going to have a Goldilocks scenario as far as the consumption is concerned. And that is where the pendulum is going to shift away from the capex to consumption. That is where the next round of growth, according to me, will come in the Indian market.
Okay. I have a follow-up to that, because if traditionally, and I'm only talking about my own experience, we're talking about a decade and a half back or so, 2 decades, right? So, but traditionally, if you say that you're trying to map rural consumption and you're saying that consumption is going to improve, you would look at two-wheelers, you would look at certain other things for the agri sector, you would look at tractors. Do you play it the same way though, Manish, when you say consumption and you say that there's going to be an uptick? What would you deploy in if you look at that big, it's a pretty big basket?
So discretionary side of things would be preferred as opposed to, let's say, staples. Staples are very fairly penetrated categories with anemic volume growth, because penetration it's a play on premiumization, and you compare that with valuations. Valuations have little comfort in most of the known staples, right? But consumer discretionary, a lot of things can go right. When you are talking about, let's say, premiumization or per capita income going up, and within the two-wheeler space, it's not the entry-level bikes. It's the mid-premium segment.
150 plus, 150 cc, yes.
These are the segments which will see growth. Let's say Bajaj is talking about, or let's say Eicher is talking about. They have already guided for, let's say, million bikes plus. That is an upgradation in terms of the volume. This is a story which is going to play out very well. Or let's say travel, airlines, hotels, the shortage of rooms all over the country. This is only going to get accelerated when the common man has some money in their hands. Let's say QSRs, the Zomatos of the world, then you have fast fashion, retailing. These would be some of the area, leisure, entertainment, mediclaim. I also think housing demand, the mid-income housing segment, which had collapsed over the last 2-3 years because the savings were not there, because there was a lot of inflation, there was a lot of hit on the common man's spending on housing, home improvement. These are some of the segments which will come back in the latter half of the year. These are some of the areas of consumption where you should look at. Tractors, you alluded to, when you look at the rural side of things. Tractors is one of the areas where definitely things are going to move at the margin. Premiumization in groceries, these are some of the areas which will play out. And mind you, these are some of the names which have really not done well over the last 2 years. You know, they have been at the receiving end of the momentum, you know, which has gone to the capex related themes. Now it is their turn to actually lift the heavy metal when it comes to the direction of the market. So allocation moving away from investments to consumption is the big theme that is likely to play out. And I think BFSI is a no-brainer. And within the BFSI, you should also include insurance. The insurance companies' valuations are at rock bottom levels. You know, if you consider the long-term
trajectory. They haven't done anything for the last 5-6 years.
Yeah, that's what I'm saying. The health insurance companies, the life insurance companies, when you have clarity around the taxation, you know, aspects of the insurance company, these are some of the sectors which are available at very reasonable long-term growth at very reasonable valuation. This is again the time to look at some of these names.
How big a factor for you while looking at a company or a clutch of companies, Manish, is their exposure to global trade volatility? Because we keep talking about India being relatively fine, and then sometimes there is the kind of excitement which is not really rooted in fact. For example, you have one set of export-oriented companies suddenly running, thinking that everyone's going to move their facilities from Vietnam and Bangladesh overnight to India. It probably will not happen anytime soon. So how do you distinguish there, and would you then play safe with more domestic-facing companies that are relatively untouched by global trade headwinds?
So I think you've got to understand India's relative positions in which of the sectors does there exist a right to win. So let's say export-oriented sectors like pharma. You know, there is a right to win for India.
Correct.
Very, very difficult for other countries around the world to do what we do with formulation exports to the US, you know. And again, I think this narrative around tariffs, you know, headline that Vietnam is adverse to us, or let's say Bangladesh is adverse to us, or Pakistan. You know, these are because our rates are lower and their rates are higher. So, you know, there's going to be a shift of trade happening, China +1 and all of that. That's very good in terms of narrative for the short term. But at the end of the day, I think it's deal making, it's brinksmanship. Ultimately, the numbers, even for China, are going to get settled between 20 and 30%. Then this whole narrative about China +1, it's not going to be that easy. But within the export-oriented stories of India, an IT, a pharma, some bit of auto components, gems and jewelry, apparel, we have established a place. You know, we can get benefited at the margin, but it's not going to be earth-shattering, at least in the short term. It's more about narrative rather than reality as far as the numbers are concerned for the short term. I think we got to all wait for the last word on tariffs to come out. You know, and this whole deal making and 90-day pause, etc. We'll hear a lot of things.
The problem is last word could be in 90 days, 60 days, after 4 years. We don't know that big.
But then the markets could be at 26,000 too.
No, it's just pure maths, you know, 26,000, let's say 22,000 if it's that floor, and 10% on that growth.
We are at
24.5. We're already there.
Yeah.
Now it's about the next year's growth of 10 to 12%. So in all probability, in the next 1 year, we'll be crossing that 26,277. It's just based on the fact that 10% growth you build on the Nifty, which is very, very doable, you know, because, you know, we are mostly domestic centric.
And
so.
you're saying 25 bakes that in? 25 at this juncture bakes that in?
100%. For the next 3 months, if you were to move beyond 25, again, there'll be a propensity for the markets to correct. But the thing out here right now is that previously the DIs were buying, retail was buying, FIs were selling. That was getting balanced out. Today, the FIs are buying, the DIs are buying, and the retail is buying. With 20,000 crores just put in, you have a 10% vault in the Nifty numbers.
Yeah.
That is the surprise factor. If the numbers come in like this from the FIs, good companies will be available at a premium. It won't be available at reasonable valuation.
So Manish, then tell us. So one is the Nifty, right? Let's assume the index consolidates, right? You guys in the MK conference had a plethora of mid-sized names which did really well, right? where is it within the non-Nifty 100 basket that you still find both the combination of value, growth, and the appetite to buy?
Consumption.
Only a consumption again.
Consumption, you
but
have.
But then FMCG is out because FMCG is large cap. So what do you buy then? Two-wheelers is out, all large caps.
Yeah, it's a large cap.
So
but
what do you buy then?
Let's say consumer durables. Look at air conditioner companies.
Havells has said that it is a problem this quarter.
No, but yesterday BIS standards have got relaxed for compressors. Compressors was the big problem. If BIS certifications were not relaxed, India could have had a shortage of compressors, which means that this season we are going to sell 1.5 crore ACs.
Okay, but then in ACs, would you say that you like the volume players, or do you like the guys who are slightly more premium?
No, it's a mass play. It's going to be a very hot summer. You look at the Voltases of the world and the Blue Stars of the world, and this is a story which is going to play out over the next 2, 3, 4 years also. India is now getting backward integrated except for compressors. We are mostly backward integrated. Penetration is very low, below 10%. The right to win is there. Some of the smaller liquor companies available for less than $1 billion market cap, that's a premiumization play. Like you look at some of the IPOs which have corrected 30, 40, 50%.
Yeah.
Going is not that bad.
So not platform, not your platform plays necessarily.
Platform, I am not negative on Zomato. I think if there is somebody who has a right to win, it's Zomato who is going to be the last man standing. I hear a lot of stories and research reports around competition coming in. I think again, if there's too much of discounting, these companies, these competitors will run out of cash. The rationality will prevail, or one of the players are going to go out of the business, which will lower the competitive intensity. Amazon, Flipkart, Reliance have a long way to go before they crack the unit economics.
Wow, so eternal it is. All right, thank you so much, Manish. Pleasure having you in our studios and speaking with us. It's always great. Not more than 5 to 7% of cash, even at worst times. I think that's one top takeaway for me from this fantastic conversation. All right, Tata Communications in focus for us. We're speaking to the management in just about a minute, but let me get Swami to set up what their Q4 look like.
Well, yes, if you look at the Q4 of Tata Communications on a consolidated basis, it was a weak set of numbers. In fact, the numbers are much below than what the street was estimating. The revenues have increased nearly 3% on a sequential basis to close to 6,000 crore rupees. But the EBITDA number that has come in 5% lower compared to last quarter at close to 1,122 crore rupees. And the margin number, that's a key number for Tata Communication, that has come in at close to 18.7%, while the street was estimating this number to be anywhere between 20.5 to 21%. Net profit, however, shows a 4.4 times jump to close to 1,040 crore rupees, but this is largely on the back of the sale of non-core assets. They had sold some LAN assets and the ATM business, and they had recorded the profit on this in the P&L, and that's the reason the net profit has jumped nearly 4.4 times. Now, one of the reasons why the margins were impacted was because of the spillover impact of the cable cut cost, because apart from this, there was rebranding cost of cloud services and some cost related to project execution as well. The data revenue, which is the key business segment for Tata Communication, there the revenues have increased nearly 4% on a sequential basis, and this means that there is some acceleration and execution of the orders that they have won, because of which we have seen 4% growth in the data revenue business. On the balance sheet side, the net debt has moderated to close to 9,400 crore rupees as against 10,500 crore rupees in the previous quarter, while the leverage has largely remained stable at around 2.1 times as against 2.4 times. However, the company has also announced a big dividend of 25 rupees, which is the highest ever dividend that the company has announced at least since 2001, and the dividend yield at this stands at close to 1.5%. Now, the key questions to ask to the management would be, what is their revenue growth outlook, what are the macro challenges they are facing, margin guidance for the upcoming year, and if there is any revision to their FY27 guidance that they had given back in June 2024, would be important to know from the management.
Well, Somit, I'm sure Kabir heard you entirely, so I'm just going to toss over to him and say, answer Somit's questions because he's given the complete detail. But thanks for putting this up for us, Somit. And Kabir, great having you as always. Thanks for taking the time out. I hope all is well. It's been a while, so thank you for joining in.
Yeah, lovely to see you, Neeraj. And yeah, Somit did a great job. Of doing a very, very good succinct summary out there.
Yep, thanks. So, Kabir, let's start with that, right? And I'll start off with the... how do I say, the pickles, if you will. And let's start off with the operational metrics. So you can sum up the quarter, but the one question out there in the quarter will be that the Q4 EBITDA numbers or margin numbers came in lower than what was penciled in, right? Now, what led to this and what's the outlook there?
Yeah. I mean, before I talk on the EBITDA for the quarter, I actually would like to zoom out. This year has been a very, very important milestone year for us. We had announced a few quarters ago that we are doing a strategic review of our non-core assets. The ATM business we announced last quarter, we closed it this quarter. So I'm quite delighted that that is now in the hands of someone who will take it to its true potential and value. So that was one big tick. We have been, in this program talking much about our real estate strategy. Now we are already starting to see monetization of land. We've been doing small parcels. In the past, there was one large parcel about 850 crores. Which again was there in the public domain as we went for shareholder approval. So that's also it's starting to fructify. We've also taken action on Net Foundry. We got out of some onerous contracts and loss-making contracts in our transformation services business. I think we are making some excellent progress in freeing up the bandwidth for management from all of these non-core activities so that we can focus back on growth. So I'm delighted to see that the data revenue this quarter has actually delivered a 4% sequential growth, which is kind of one of the highest that we have done, and which sets us from a growth perspective going forward. This is amid the kind of macroeconomic uncertainties that we've been witnessing as well. With that said, I would say the margins for the year as a whole has been in the range that we had indicated to the market. We said we will be in the 20% range. We are closing the year with 19.8. So I'm happy that we have delivered what we said for the year. For the quarter, yes, there have been some, as Shaunvik pointed out, there are certain cable cuts. This is the first time ever that we had 3 cable systems go down in this year, all together at the same time. Various issues. Also, the time to repair was unusually long because of the geopolitical conflict and things that we all know of. So those were the costs. We did launch one of our cloud platform, Vayu, Tata Communications Vayu, very recently as well. So there were a little bit of a step up in marketing costs. So I would say when I look at the delta of what is the drop of margin from previous quarter to this quarter, quite cognizant of the cost that actually went in and completely in control.
But okay, appreciate that. But did you in the previous call speak about your ambition to improve margins to previous levels of 23 to 25, and therefore is that a possibility in FY26?
We will make progress towards that, Neeraj. Our ambition of 23 to 25 stays, right? I mean, I believe that this business should operate in that particular range. If we unpeel, why did we depart from when we were at the middle or north end of the range a couple of years ago? We departed for 3 reasons. We departed because we made acquisitions. We made 3 acquisitions, and all 3 were loss-making acquisitions. So the mathematics of it took about 3.5 to 4 points, down just on account of that. From the very top end, at like 25 that we were, declaring a few years ago, I mean, that was because of COVID savings, and all of those things have now vanished, and we've now come back to normalcy levels. And then finally, as outlined in both in the Investor Day last year and also in subsequent quarters, we are making continuous investments organically as well, right? We are investing about $65 to $70 million of organic investments in fueling innovations, including, we talked about AI cloud and launching of our AI studio. All of this are not yet yielding, revenue for us. So these are all in the investment phase for us. Are these the right thing to do? Absolutely, yes, because we are in the digital space. And if we do not fuel innovation, we will become irrelevant in a couple of years' time. So I wouldn't be myopic about what is the margin today, because these investments are being made to keep us relevant with our customers.
That's a fair point, Kabir. Hi, Tamanna here. Very good morning and good to talk to you again. I completely agree that you can't be myopic in the space that you are in. You have to think of the bigger picture, and of course, companies in that space do it. The only tricky bit is to get the timing right. So the AI innovation you're talking about, the cloud you're talking about, you're in a space with a low moat and very tight competition. Do you have a time period in mind when all of these plans become revenue accretive?
Tamanna, each of the products have a certain, milestones that we internally measure by. See, on specifically talking on AI, I would say we are in a very experimental phase. The corporate use cases are still not that clear. So everybody is dipping their feet and testing their waters. We have the capacities, we have the capabilities, and we are inviting people to come in. And in fact, a lot of offers that we are doing are completely freemium to start with, as well, so that people can come and test this out. And once those use cases are established and organizations see benefit, as a result of it, I'm sure this will come through. So I don't want to throw the baby out of the bathwater as yet. So we made the initial investment of 1,000 GPUs. We will make now further investment only when we see revenue coming through. But the initial investment of 1,000 GPUs, I have put in so that unless until I have those capacities, I won't be able to invite customers to come and even try it out to start with. So that's the kind of cautious approach that we are taking on. And that approach is very different from product category to product category.
Okay. So then what is going to be the revenue driver for you? What is the outlook on deal wins? What is that pipeline looking like? And where is the revenue driver coming from?
Yeah. In fact, when we announced in the first 2 quarters of the year, we had the largest, order book ever. And that's why we see, that revenue coming through in Q4. Our revenue drivers are quite clear. We will continue to focus on core connectivity, and we want to take that business. This quarter has been a little soft, 1.6% growth on core connectivity for various reasons of cable, that I talked about. We want to get that back into the 4, 5, 6% range, low to mid digits, single digits we talked about. Then all the digital platforms and services this year we grew at about 30%, as a whole. That needs to again step up as well. So that will also, yield. Then if I give a geographic cut, we've again said India, we will like to retain our market leadership. In international markets, we will step up and improve our competitiveness there. So we are investing in feet on street in the international markets as well. So those are the other dimension. And from an innovation perspective, we have launched Vayu Cloud. We will look at last mile zero connectivity. All of those new products are also coming in. So a combination of all of those things will result in both innovation-led turnover, product-led turnover, and market-led as well.
The clients that you lost because of the cable cuts, Kabir, because in the calls this is mentioned that you're trying to get some of them back. Any update that you can share with us?
We haven't lost anyone. It's just that we won't bill them if there is downtime. Okay. So they are already with us. So that revenue will come back up.
Okay, so no issues over there. I just want to talk about your non-core assets, and it's looking good on your balance sheet this time, monetization of non-core assets. But there's more in the pipeline. Is that part of the plan? And can you share with us any perspective on how you want to approach further monetization of non-core assets?
Yeah, absolutely yes. There is more in the pipeline, and I'll only be able to share when something is concrete and the board has approved and the disclosure permits us to do so, Tamanna. So pardon me if I'm not able to give you more details concrete than that. But of course, we will, I want to have, 2 ways. One, there are some one-off identified, assets. Hopefully, as, we are able to make progress, we will disclose them. On top of it, I would like to, and I mentioned this when I was there last time with Neeraj in the studio as well. I want to have the discipline of a continuous review, of our assets, and everyone needs to perform. They will have very differential asks on a margin and a growth and a ROCE, but to their internal markers, they need to deliver. And if they don't deliver, then they are on the axe. So very, very clearly, we will be ruthless in pursuing the opportunities, and they need to deliver the returns for all stakeholders, our customers and our shareholders. So that focus will continue. So there will be an ongoing review of every asset, core and non.
Okay. And so, Kabir, just trying to circle the square, right, if you will, or square the circle as the saying goes. What happens going ahead? Now, you've given me some idea about your ambition to take, let's say, operational metrics higher from where they are right now. Does that get coupled with comparable revenue growth as well? Is there some inkling that you can give amidst all of these challenges that the world is facing currently on what's the kind of revenue growth outlook that you have for FY26 and FY27?
I don't want to give a guidance or an outlook, but I'll tell you our focus very clearly. If when we have the investor day, we will probably outline a little bit more. I want to move away now the direction from voice, which is declining, move away from non-core where we have made some progress on subsidiaries, and then start focusing on data growth and data EBITDA as well. Because that's where the entire business is actually moving towards. So we'll be able to give more color on it. But we are currently sitting in a situation of extremely volatile, trade and geopolitical, situation, and every passing day, is giving us. Thankfully, we are not directly impacted as Tata Communications, but our customers are going to be impacted, and we need to work very closely. And I'm delighted because our products work both on the cost side and revenue side outcomes for our customers. So we have an opportunity to work with our customers to navigate these uncertainties. So with that, I would say positive that we should be able to sustain the growth momentum, that we have. And all the operational metrics fall into place only when growth happens. So the focus is definitely on growth.
So then this focus on data revenue and your earlier guidance, I believe, of doubling data revenue by FY27, which I believe was given in June 2024. Now, has the world changed sufficiently for you to alter that right now, or do you believe you will be able to do it with the focus that you have?
Look, the world has changed. Macroeconomic situations have been, quite of a headwind, with us. But we will talk more of it when we have the detailed investor conference in a couple of months from now.
Last clarification, Kabir, your margins, which we've seen this time round, any one-offs that have impacted that?
Well, I don't want to call off one-offs, Tamanna. At the end of the day, these are all business as usual. Every business is going to have one-offs, but we need to navigate those one-offs and still deliver the numbers. So I can give explanations, but these explanations are not justifications. So if we have told a number, we need to achieve those numbers.
Okay. No, I'm talking about your Q4 margins, your current ones.
As I explained to Neeraj, there were certain cable cut related. I mean, I think Shomit captured it exceedingly well.
Okay, so your cable cuts is the impact that you've seen.
That is one of them. Plus, we spent on marketing, as well. Plus, there were other things to help for the future as well. So all of those costs that went into the quarter.
All right. Thank you so much, Kabir. We always enjoy our conversations because you answer all of our questions with a smile, and we do what we do and you do what you do. So that works out great. Thank you so much. So, all right, that's the CFO of Tata Communications talking about the quarter gone by. Stock doing okay this morning, about 1% up. We'll take a very short break, but we're all set for an interesting conversation on the other side. This is the buzzing stock of the morning. I want to pull up Waaree for you just for a second, because Waaree Energies, they've reported great set of numbers. Stock up 8.5%. We're speaking exclusively and first with Amit Paithankar after this break.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The second buyback is in Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
2061 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
You couldn't have found a fault, Amit, with the kind of delivery that you have done, or is there something that you thought you could have done better in the quarter or for the year?
Well, there's always room for better, Neeraj, and that's relentless pursuit of excellence and performance that's what we at Wari try to do. But a great quarter for us and a great year for us. I would say almost a breakthrough year. And the primary drivers for that have been the demand and the customers and the trust that the customers have bestowed on us, the financial capability to put up factories and capex, and then of course to execute those projects at scale and at speed, and then ultimately deliver to the customer. I think that's been the not so secret sauce to get this thing done.
Yeah. Okay. So let me start with the good part, the margins. Okay. Let me start with the top line. Chalo. I mean, good quarter, good year. You have the capacities out there to execute. Is the order book addition looking accretive enough for you to be able to meet the numbers that you guys have been talking about? And parallelly there, the order book addition for quarter 4, was it a bit lower than what you estimated?
So the order book is very strong. It stands at 47,000 crores. And that again gives us the confidence that 26 is going to be a very, very strong year. Again, customers, the first reason, they have bestowed their trust on us. And that's why we have the 47,000 crore order book. We have new capacities planned. So 3.2 gigawatts of, and you have been to the Chikli facility. We are going to have 3.2 gigawatts of addition to our module capacity. Our 5.4 gigawatts of cell manufacturing is going to be fully functional. And we have the financial muscle to ensure that all of these projects move fast and on time.
Yeah, most certainly. I mean, it's not often that we meet a company which is large in size and so averse to debt, and having the capability, therefore, to raise debt and leave out projects if the cash flows don't quite meet up. But I know the order book is good, but was the order intake a bit weak, or was it a anomaly for the quarter?
Not really. The order intake is something that we execute on, like we execute on all the other projects. We look at orders in much the same way. We have a pipeline that we can see right now of 100 gigawatts worldwide. And so there is no dearth of business at this point in time. And our disciplined sales team is always ready to ensure that our order book continues to hover around the 45,000 to 50,000 mark.
Okay, fair call. Margins, exceptional performance there. Now the question only, Amit, that comes in, it almost seems meteoric, if you will, quite unreal to have this kind of quarter 4 margin performance that you've done in. Is this a new normal, or was this a one-off and you will revert back to slightly lower levels?
So if you really look at our P&L, so if you really look at our P&L, right, this is the year where actually a lot of leadership changes have happened. and a fair amount of, I would say, SG&A is actually now baked in. And that structure is not going to change as much. Our expenses from a factory perspective are also pretty much going to remain constant or raise in line with the revenues. So overall, costs are going to be very much where we want them to be, and we will therefore expect margins to continue the paths that we are seeing. And that's the reason why we have this EBITDA guidance, right? We have gone ahead and we have said that we will have 5,500 to 6,000 crores of EBITDA, and we are confident about that.
Yeah, but because I'm not able to quite match it at short notice with the revenue numbers, am I hearing you tell me, Amit, that you might actually log in annualized FY26 margins at around 20% or northwards of that?
The way we are going to manage the business, Neeraj, is a razor-sharp focus on EBITDA. That's an important controllable parameter that we have in our hand. And we have, broken that down internally into detailed matrices for almost every CXO to go and chase. And so that's how we are confident that we are going to deliver the EBITDA numbers.
So northwards of 20% for FY26 as an average?
I would say let's take home 5,500 to 6,000 crores of EBITDA that I've talked about.
Come on, you might do very well on the revenue front and then the margins may not look that great. So I'm trying to pin you on one of the two things.
I know you are, but I'm not taking the bait, as you can see.
Okay, fair call. Let's work with the actual numbers. Okay, fair call. The 5,500 to 6,000 crore. But broadly, you believe that the trajectory of margins is sustainable without getting into an exact number. You
100%.
Believe it's higher. Okay,
100%. And the reason for that, like I told you, is we have clear sight on costs, and we have clear sight on top line, and so the P&L as it is going to evolve throughout the year is pretty much crystal clear in front of us.
I was talking to somebody who tracks you very closely, and the person mentioned that there has been significant working capital improvement as well. I wasn't able to see it, but has there been, and what's led to that?
Again, strict financial discipline. This company runs on a very, very strict financial discipline. Like you said, we are debt averse. That's because it's fiscally very prudently run. And that's the same deal. I mean, we make sure that, we have the right advances. We make sure that we just have an eye on the working capital as we move forward.
Okay. Now, there is uncertainty around tariffs, but there is uncertainty around the negative impact on the tariffs as well with Donald Trump is what he's done overnight, right? For China, for Jerome Powell, etc. So my question to you is, are you guys really worried about what will, and maybe it is a good thing to be worried about, but I'm just asking, are you worried about what's happening in the US geography and what it could do to your US plans as well as export plans? Or do you believe it's business as usual out there for you?
I don't think business as usual exists anymore anywhere in this world. And I think you have to be having your eye squarely on what's going on in the US and everywhere else in the world, right? Now, the good part is, Neeraj, we have a manufacturing facility in the US. We have substantial manufacturing facility in India. And we are closely watching the moves around tariffs, and then modulate our response accordingly. From our perspective, what we can do is we can, go in and dial up our production in the US or dial down our production in the US, and likewise for India, and make sure that we deliver again on the EBITDA control parameter that we are going to drive our business on.
Awesome. My final question, and I can ask you about battery energy storage, but maybe we'll do that another time, because in a conversation that we've had with your colleague and co-founder or your founder, Mr. Doshi, he mentioned that BESS could be as large as solar. So I'll save that for another day. But due to paucity of time, one final question, Amit. Global. Europe is coming back on capex of all kinds. My question to you is, would you believe that emerges as a large market for a player like you, which has got global capabilities and ambitions?
So Europe, we continue to have an eye on. At this point in time, it is a very small part of the overall pie. But we do believe that Europe has a huge potential, and especially for some specialty modules that we have, which are flexible in nature. And some of these niche products, we are sure, are actually going to have a very strong offtake in Europe. So you're right, very big market, which we have to have an eye on.
All right, Vari's talking, Vari Energy is in focus, stock is about 8% up. Now, what's also in action in the primary market is Ather Energies. It's a new IPO set to launch on April 28th. It'll be the first main board IPO for FY26. The almost 2,626 crore IPOs a fully fresh issue. In fact, my colleague Tushar spoke to the co-founder and CEO of Ather, Tarun Mehta. Take a look at the slice of that conversation.
It's been 11 years, it's been 12 years plus since Swapnil and I graduated from IIT Madras, and it's been more than 11 years since we've been running Ather. Practically, this is all that we have known our working life, this company and this business. Couldn't have predicted this, couldn't have foreseen this. It's been an amazing journey all this while. I would love to say, this was a dream, but I honestly never thought this through, that the companies go public. That just emerged as a natural maturity, natural maturation step after so many years. But now that we are here, I am very excited. I think both of us are very excited because it feels like the business is finally getting into that big league. As you go through this journey, you just realize going public is such an important step. Not only you're finally creating liquidity for everybody, but you're standing to a very high, you're being held up against a very high standard of that of listed companies. So your overall corporate governance, overall maturity of practices, they all really have to hold up really high. So very excited about it. It's taken us a good decade to get here. But we're excited about what's ahead.
Okay. And only the brave are going in for IPOs now.
Yeah.
Because the timing is become very, very crucial. This is no longer 2024, end of 2023 kind of an IPO market.
Not breezy for sure.
Not breezy for sure. But an EV play in this space will be interesting and rival for Ola, at least in the listed space.
Yeah, maybe if the markets stay the way they are, though then it might be okay. But Tamanna must mark that the indices are off from the highs of the day and led down by the bank nifty, by the way, which is down 0.4%. In the morning, we spoke about this possibility, some resistance levels as well, and 0.4% lower the nifty bank. The small caps are down 0.77%. But the one which is really making its presence felt is Nifty IT. 3% higher for that index. Boy, it's moving around like a mid-cap index, I must say, or maybe more than that. The last few days, if you look at the gyrations in the Nifty IT, it's almost like a mid-cap or a small-cap index. But since broadly the last few days, it's staples and banks which have been outperforming, Mahima and Harsh joined in to tell us what is driving or what are the factors behind this rally in the sectors respectively. Well, usually I'll go to Mahima first because ladies first, but Harsh, let's make an exception today. Banks are really ruling the roost except for today. So I'll come to you first.
Well, yes. Thank you for that, Neeraj. First off, you're seeing an easing regulatory environment, at least over the last 2 to 3 months since the new governor has taken charge. You're seeing the RBI take proactive steps to try and ease the regulatory burden, which is already or which was difficult for lenders in general, at least over the last year or so. The second piece is obviously on liquidity. As part of the same breath, liquidity has eased substantially. Now you have better visibility even on an asset quality. There are visible signs that asset quality likely is improving, is getting better in the few pockets where there have been concerns. One is microfinance, the other one is unsecured lending. The third one is obviously valuations have been reasonable for some time now. But with some of these headwinds receding, the valuation suddenly looking really good because the headwinds are coming off, and that's what's really standing out as well. The fourth piece is growth likely to pick up, better liquidity conditions. Also, you are expected to see new draft norms of LCR actually benefit some of the lenders, and therefore you might likely see more upside to credit growth over the next year or so. That was all that came through yesterday. And the fifth piece is FII buying. That's happened for 5 sessions on the trot for the first time since September of 2024. So after a 6-month span, we've seen FIIs come back and buy, which is obviously positive for lenders because that is the largest go-to place for FIIs, and it has been under-owned for a while now. So just a combination of all of those factors playing out.
Okay, let's go across to Mahima though to talk about what's driving FMCG stocks.
So, the first point being, of course, valuations have corrected significantly since October. About 35% has been the correction in terms of the major FMCG staples. Now, because valuations are being attractive, there are fund flows being seen in FMCG counters. Plus, we're also observing that now FY26 outlook looks positive, which is why brokerages are also turning positive in terms of the FMCG staples. Second is tax cuts we've seen will see its benefit from first quarter of FY26. The approximate tax benefit in the hands of an honest taxpayer will be around 8,000 rupees, which is around 5%, and that will aid demand, especially in the urban areas for these consumer staple companies, which has remained weak so far. The third is lower interest rate because of the repo rate cut by the RBI will also lead to an overall boost in consumer spending. So there will be a recovery in terms of urban demand as well as rural recovery, which has been the case in the past few quarters. We'll also see an up move. The fourth point is that investors are shifting focus towards defensive plays like FMCG. We've seen uncertainty in markets because of Trump tariff and a lot of global economic uncertainty is also playing its part, which is why investors are now turning to something more defensive, and FMCG is the best way to play that. And lastly, like I mentioned earlier also, FY26, a lot of brokerages are turning positive in terms of the outlook for these FMCG companies because now raw material prices are kind of easing out. Inflation has played its part, but price hikes will now be matching the kind of inflation hikes that have been taken in the past, which is why margins will also see a slight uptick from Q1 going ahead. That is why these are the 5 reasons as to why Nifty FMCG is seeing good gains.
All right, thank you for that, Mahima. Now, on to a story that we've been tracking very closely right here at NDTV Profit. We've been talking about the Gensol engineering fiasco. Remember, we touched upon it way before anyone else and told viewers and investors enough that they knew trouble was brewing. Now, for the last few days, stories have been doing the round that Blue Smart, which is, owned by the Gensol promoters, has found a white knight, which is Eversource, who's going to come out and buy it. It turns out that's not the case at all. Agni joining in with those exclusive details.
That is right, Tamanna. So as you know, there have been media reports floating around which have been saying that Anmol Jaggi had sent out an email to investors of Blue Smart painting out 3 options on how to take the company forward. Now, the email mentioned one of the options as a slump sale of the ride-hailing business to Eversource Capital. However, me and our colleague Tushar, we tracked that Eversource is unlikely to have ever been part of this conversation. In fact, the last time they ever valued Eversource was in the last calendar year, so that's at least 5 months ago. And even then, there was no binding agreement to acquire any of the company's businesses. Also, the PFC's complaint against Gensol at the economic offences wing is likely to have soured sentiments with the other options that Jaggi had put forward to the Blue Smart investors. Now remember, till this point, the entire Gensol Blue Smart fiasco was a regulatory problem. Now with the EOW coming in, it is becoming an executive level problem. So in essence, a third of Blue Smart's fleet is now part of a police investigation, which is something which investors or potential investors are not looking at kindly. So Anmol Jaggi's email then seems to have misled investors into making them believe that the company Blue Smart is going to survive and is likely to come out well and good, but as we are bringing you the details, that does not seem to be the case. Now we have reached out to Eversource and Blue Smart for comments on the story, but this is a developing story at this point, so do stay tuned.
When was this email put out, Agni?
So we were not able to see a copy of the email ourselves, but from what we have been told by sources, this was right before the SEBI order came out. So Anmol knew trouble was brewing within the company, investors knew there was trouble brewing. So right before the SEBI order came out, this email was sent out.
So, you know, that's what really is the big red flag. I'm going to pull up the Gensol Engineering stock, not completely related to Blue Smart in that sense, except actually it is, because that money was being diverted to Blue Smart and we don't know where else, languishing at the 5% circuit. Thank you for that exclusive details there from Agni. But markets are coming off actually. It's just as of Nifty IT's 4%, 3.5% roar has sucked up all the energy from the markets. Nifty about 0.25% up in the green, so no complaints there, but definitely not managing to keep up above the 24,300 mark. So that's important to mark this morning as well. Meanwhile, Bank Nifty down about 0.5% in the red. I'm going to pull up the advance decline ratio very quickly just to get a sense of what the broader markets are doing. Because all of the BFSI pack is in the red. The advance decline ratio is adverse, but not massively worrying at this point. It is adverse though. At this point. So all of that opening boost seems to have come off. Let's pick up some of the winners this morning. HCL Tech definitely making that list because of the kind of guidance that they've come off with. We'll pull up the intraday of HCL Tech and seeing if it's staying up. HCL Tech has managed to stay up almost 6.5% up. Let's look at some of the others. Havells, and you know, a lot is going to be about corporate results right now. Havells is one that we should see. A good set of numbers that have come in. We look at Waaree Energies, we've been talking about. Havells actually 3% down right now. Waaree Energies, AU Small Finance Bank. These are some of the companies that have been on radar because of their results. AU Small Finance Bank, also a good set of numbers. Havells, the street doesn't seem too excited. Mahima is joining in with more details. Mahima, it seems like a beat on all fronts, but some concerns that the street is looking at right now.
Right, I think so. The street is concerned about the commentary that came in from the management, and they've said that summer is set with some delay in the secondary sale for the RAC segment, which might impact the first quarter of FY26, and which is one of the reasons I believe why the stock is down today. But overall, in terms of Q4 performance, well, it was a strong beat across the four numbers. Revenue growth was led by cables and wires as well as the Lloyd's segment, which grew around 40%, of course, on the back of a lower base. EBITDA margin was led by robust performance in switchgears as well as Lloyd's. Now, in terms of the segmental performance, Lloyd's reported an EBIT margin of 6.1%. Cables and wires grew by 21%. Switchgear revenue was up 6%. ECD revenue was up 10%. Lighting is where the pressure still persists. Revenue was up only 1%, but overall EBIT was down by about 8%. In terms of what brokerages are penciling in, well, Nuvama has reiterated a buy with a target price of 1890. They've also raised their overall estimates by 4 to 5%. In terms of forecasting the overall EBITDA CAGR, they are expecting EBITDA CAGR at around 20%, revenue CAGR at 16%, and overall PAT CAGR at 22% over FY25 to 28, and they're also valuing the stock at 52 times. In terms of Jefferies, they've maintained a hold with a target price of 1800, which they've hiked from 1740. Q4 is a beat and driven by healthy sales, but they're saying that inflation and commodity volatility will be key monitorables going ahead, and slower growth mainly in secondary sales was seen in summer, which could be a disappointment going ahead in Q1 as well. So this is the overall view as to how Q4 has panned out for Havells.
All right, thank you for that, Mahima. We caught up with Anil Rai Gupta, Chairman and Managing Director at Havells India. My colleague Hiral spoke with him. Listen in.
Is this growth sustainable? Taking into consideration the overall demand segment, which is probably soft except the industrial cables. So how would you bifurcate it?
I think we've seen a strong quarter, and if you break it down business to business, we have seen a good growth in the cables and wires business also. Cables with the new capacity coming at Tumkur is giving us enough opportunity to have a decent growth. As far as Lloyd is concerned, there had been a very good summer last year, first quarter, fourth quarter, and hence there is some amount of positive stocking at the channel level. It is a little bit dampened by the fact that this summer has been delayed, but going forward, I think let's see how it pans out because there has been a decent growth, and it is also coming over a softer base as compared to last year. But the other businesses, while they may show high single digits or low double digit growth, we are actually quite enthused with the fact that the residential switchgear business out of the switchgear business has grown decently. The lighting business has shown volume growth despite the deflationary trend in prices. And also the ECD, various segments of the businesses are growing. Again, because of the delayed summer, there has been some delay in the pickup of fans, but otherwise, generally speaking, it has been a good quarter. So going forward, let's hope for the very best, but this has been a good quarter.
Right. So, Anil, absolutely, the quarter has been good. Is this going to be sustainable in the coming quarters with all the challenges that could come in for the industry? And secondly, do you think it will be volume-led growth or value-led growth?
I think pretty much, hopefully if the raw material prices stabilize, we should be seeing a volume-led growth. I think what really, if we separate the summer-led products, I think the other businesses we are expecting, decent growth in the coming quarter. It all depends upon how summer pans out for summer-led products like fans and ACs and air coolers. Otherwise, generally, we are hopeful.
Right. Anil, Lloyd's again, a 40% year-on-year growth is what we've seen. So there is that strength that Lloyd's is also getting onto the table, and the cables and wires business is doing good. What is the outlook looking like going ahead then for these segments?
I think as far as Lloyd is concerned, I've always maintained that we are investing for a long-term structural growth in Lloyd and not just be dependent upon one product category or the season. And there is continuous investment going on in terms of deepening our distribution presence, our presence to the consumer, our digital presence, our brand building activities, the focus on R&D to bring out newer technologies which hitherto have not been there in the air conditioners in the past, giving much more consumer choices. So I think that's a huge investment going on, which probably Havells has done over years, but Lloyd is now gaining out of it for the last few years. And I think we are going to see some structural growth in Lloyd. Cables and wires, as far as wires are concerned, it is led by the residential growth and also deepening of our distribution channel. Underground cables, we had been a bit weak in terms of delayed capacity expansion, which is now coming on stream, and I think it should benefit us in the coming times.
Okay. And when you talk about, the cables and wire segment from here on as well, taking into consideration there is increased competition that is coming in now. I'm sure, yes, it'll take time for the capacities for the new players to, time for them to build their capacities. But how are you looking at that aspect of the business and in terms of the market share loss that could potentially come in?
The way I look at it is that cables and wires is probably the largest business of the electrical segment, and it has huge potential to further consolidate into organized manufacturing abilities. We still see a lot of local and regional brands, and I think with more brands coming in, there will be consolidation of market shares towards from unorganized to the organized sector. But what has happened in the last few years, and it will probably increase in the future, is the opportunity to grow not only in India, but also in the global markets. And I think that's something which will augur well for the cable and wire industry. So we are quite hopeful for the next few years.
Right. And on the back of the delayed summer that you mentioned as well, what is the kind of near-term impact that you're anticipating? Because clearly the street is concerned about emerging on RAC. Particularly, this is with regards to secondary sales that are happening in the southern region. So how has it been for Havells in the month of March and April?
I think we've also seen a delayed summer, which has led to a lower than last year's secondary sales. But I think, it is very early days in the first quarter, which is the biggest quarter for ACs. And we have to see how it pans out in the northern region, which is a large part of our sales. So I think we are still waiting and watching to see how it pans out as secondary sales are concerned.
Okay. And does anything change with regards to your capacity expansion plans? What are we watching out for?
No, I think as far as ACs are concerned, we are well equipped for our capacities for the next couple of years. And we have done a capex overall for Havells and Lloyd put together about 750 crores last year. The next 2 years capex plan is about 2,000 crores, out of which 1,200 crores is going to be invested this year, primarily in cables, refrigerators, and a new R&D center. And those plans are continuing.
Okay. And with regards to the recent approval for the 600 crore investment in Goldie Solar, what is the strategy on that front? Because, you are looking at a supply chain management from that aspect, but the quantum of stake that you have purchased versus the benefits that you will get, how are you looking at that side?
I think Havells has been in the renewable space for the last few years, more for our residential consumers and C&I consumers. And I think, the fact that the way the supply chain is changing all across the world, it warranted for a fast growth, because this is a very fast-growing sunrise sector. It warranted an investment either in our own capex or, tying up with already a large panel manufacturer. So we have taken the latter decision, and I think it'll augur well for a multiple growth in the coming times in the renewable sector.
Okay. And if you have to look at even the inflation and the commodity volatility that you're seeing, Anil, right now, do you think that warrants a sign of cautiousness for the company and for the industry? Is that something that you will take into consideration?
Well, we are always a conservatively ambitious company, and I think we're always watchful of, how things are panning out. Raw material fluctuations have been quite rapid in the last few months, and I think we are always taking that into consideration, both looking at the revenue growth as well as our margins. I hope it stabilizes, but the world is moving through a lot of volatility right now, and we just have to play it out, how it seems in the coming times.
Right. One question I have, Anil, on the overall business is that, when you look at majority of the businesses, yes, there are good businesses, good segments that are aiding Havells in terms of driving growth, but the overall earnings growth probably is not accelerating to that extent because of the adverse mix, etc. How would you have to look at that aspect of it to balance it out?
I think if we look at our overall business, there are faster growth areas, large markets where we need to increase revenues, and that impacts the mix a bit. But overall, our eyes are always on the margins, and hence a lot of initiatives towards, for example, you saw Lloyd profitability. Most of it came through efficiency and productivity improvements, and I think that is a continuous process which Havells will continue to do and continue to enhance profitability in the coming times.
Okay, so a 13 to 15% margin scale is what could be on the cards, taking into consideration the focus that you have on the drivers.
Yes, ex-Lloyd, that's what we are always aspiring for.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The second buy pick is a Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome, you watching Ask Profit. This is NDTV Profit. I'm Mahima Vachajani. With me is Alex Matthew. Well, before we move on to the show, let's take a quick look at how the markets are panning out to be right now. The Nifty 50 is trading within a flat range right now, about 0.1% trading higher. The Sensex also trading within a similar range. But the pressure really is in the broader markets. The mid-cap 150 is down by about 0.14 odd percent, and the small-cap 250 is taking a hit of about 0.7 odd percent. Let's also pull up the sectoral heat map and see what sectors are buzzing in trade today, and also then pull up the Nifty heat map. There you go. Nifty IT seeing significant gains, up by about 3 odd percent, led by the earnings gains seen in Cyient DLM as well as HCL Tech. There's Nifty Auto up by about 1 odd percent. Nifty Realty also seeing gains of about 0.7 odd percent. Nifty Pharma seeing gains of about 0.6 odd percent. But something that's not doing well is Nifty PSU Bank. Nifty Finance down by about 0.7 bank. Private banks also taking a hit today in trade, about down by about 0.7 odd percent. Let's also pull up the Nifty heat map and see what counters are buzzing in trade today. There you go. HCL Tech on the back of its earning doing very well in trade today. Trent seeing some pressure down by about 1.6 odd percent. There are some counters like Dabur, so some defensive names also not doing very well in trade today. Although Nifty FMCG and Nifty Bank have been two sectors that have done well in the past few weeks on the back of Trump tariff, and of course the defensive plays playing its role. In terms of some counters which are not doing well in trade today, there is JNK Bank down by about 9 odd percent. Senco Gold taking a hit of 4.7 odd percent. There is Havells down by about 3% after its earnings. Probably the management commentary is not being taken well by the street. There's Alok Industries, Thirumalai Chemicals, Ratan India Power down by about 4 to 3%. But some counters doing well. IT names, of course, on the back of earnings. There's Vari Energy also doing well in trade today. These are some of the counters that you should definitely focus on. Vari Energy is up by about 8% on the back of its earnings. AU Small Finance also another counter which is doing very well in trade today on the back of its earnings, up by about 5.4%. But with that, let's also welcome in our guest for the day, Rajesh Agrawal, Head of Research at AUM Capital, and Vaishali Parekh, Vice President Technical Research at Prabhudas Leeladhar, joining us now. Welcome to both of you and a very good morning to you. Our first question is on HAL. We don't have the name. Do we have the name? Okay, we do have the name. Philip is holding 394 shares of HAL, bought at 642 a piece, and wants to know whether what should be the next course of action for this counter. He's not mentioned whether this is for a longer term perspective or short term perspective. So Vaishali, I'll come to you first on this one. What's the view like for HAL?
I'm very good. Yes, so HAL is doing well, but if he's holding, continue hold with the trailing stop loss. But if he needs to buy, then I think ideally market is now once again getting into whipsaw. So 4,000 would be the good ideal level to get into the stock, because when we are looking at the longer term perspective, I think this can go towards 5,000 levels. So 4,000 as support, continue buying and look for higher targets.
Okay, look for higher targets on HAL. HAL has been doing particularly well since that bottom that it hit in March. Good morning to the both of you as well, Rajesh and Vaishali. Thanks so much for joining us. We've got our next caller, Dheeraj is calling us from Hyderabad, and I believe the question is on Canfin Homes. Dheeraj, very good morning to you. How can we help?
Good morning, sir. My query is regarding Canfin Homes.
Yes.
So I'm holding 100 shares of Canfin Homes at 730 rupees. Today are the company's results actually.
Yes.
For the next 3 months, can I hold this counter? And one more small concern is, sir, I had 42 shares of Siemens. So this is not a query actually.
Okay.
So the stock got split on April 7th. But the bonus shares did not add to my demat account yet. So what might be the reason, and how could I proceed with it?
So in this case, you would probably have to get in touch with the broker where you have the account, and you'd probably have to ask them to help you out with that. So, but your specific question on Canfin Homes, perhaps we can take up. And since you've got a shorter term view on the stock and only 3 months or so, 730 is your buy price, Vaishali, and come back to you on the technicals. How does it look like right now? And particularly in the context of the financial space that has moved up very substantially, but you're seeing some signs that a cool off might be on the cards.
Yes, I agree that financials have given a good run up, but purely on technical basis, as far as Canfin Home is concerned, hold with a stop loss of 716 and look for a target of 760, because right now there is still no exhaustion seen on the charts, and we don't play results. So purely on technical levels, I would say 715, 716 is the support level, and once we see this stock picking up, this can go towards 760, 770.
So that's the view with regards to where Canfin is concerned. Our next question is from Anil. His question is on RVNL. He's bought it at around 29 rupees and bought 13,000 shares, and wants to know whether this is a good time to exit or not. Rajesh, I'll come to you on this one. 29 entered at a very attractive price, sitting on a profit of 44 lakhs despite the kind of pressure the stock has seen in the past few months. What's the view like? Should he continue to hold or book profits now?
Good morning, Mahima, Alex. Good morning, Vaishali. As far as RVNL is concerned, I think one should continue to hold at these levels, because already it has taken quite a lot of beating from their higher levels, but their order book is strong. They're doing very good. I think all the exaggeration and the valuation has already been discounted, and it's trading. All these railway stocks are trading at almost good levels, I would say. So what you can do is, since you are bought at a very low level, sitting at a huge profit, you can book at least 25% of that, so that your rest of the stock becomes totally free, and continue with the rest. And one thing more I would like to add, like somebody was asking about Siemens right now with Alex. So if you allow, I can reply on that.
We were discussing just that, Rajesh. We were looking at the data, and when we looked at it, we've remembered that there was a demerger that was announced. Siemens Energy is the demerged entity, and so as normally is taking place when there is a demerger and listing, there will be a price discovery mechanism that takes place when there's a listing process, and only once that is done, that will reflect. Is that correct?
Yes, you are absolutely correct, Alex. And the share the gentleman said has not been credited to his account. That will take at least 3-4 months to be credited. It's not so fast. So it will be credited eventually when all the formalities have been taken place, stock exchange approval, SEBI approval has been got. So it will take time. He has to wait for some time, maybe 3-4 months.
Okay, thank you so much for that, Rajesh. That's pretty comprehensive, and I hope that answers caller's query as well. Our next caller, Sandeep, is calling in from Mumbai. Sandeep, a very good morning to you. How can we help you?
Yeah, good morning. I'm a big fan of the show.
Thank you so much, Sandeep.
Really compliment all of you all. Achha, my query was, I have got around 3,000 shares of Trident.
Okay.
And my buying price is of 47 rupees.
Okay.
So I would like to know, like, should I average it out? Should I hold?
Okay, Sandeep, you are ready to hold this from a longer term perspective?
Yes, I don't mind.
Okay, so I'll take this up with Rajesh then. Rajesh is sitting on a loss of 54,000 rupees right now on Trident. What's the outlook like considering, everything that's going on with respect to tariffs? I mean, overall, what's the view like, first of all?
See, you said it right. But tariff is the biggest concern with this company because this is into terry towels and exports mainly to US and European countries, and the tariff problem looming large. I think there would be problems in the short term because nobody is very clear about quantifying how much the hit would be. So it's better not to put new money into this until things are clear. At this point of time, it's a hold from our side, but adding new money is not suggested.
Okay, we're seeing a first today. The first question that is coming through from Poland, from Krakow specifically, and Sandeep is asking this question. He did ask this question yesterday, and we messaged Sandeep saying we're taking it right now, but it's pretty early in Poland. It's 7:15 or thereabouts in the morning, and hopefully, Sandeep, you get to see this at some point. But the question is about Suzlon, and he's accumulated 10,000 shares at a price of 50 rupees a few weeks back. The stock is currently trading at 58, and so therefore he's making quite the gains, even though it is just a short while back that he's made the acquisition. He's wondering whether he can add any other potential counters in the renewable energy space from a long-term perspective. And I'll come back to you on this one, Rajesh. We're speaking on a day when Waaree Energies is absolutely romping on the back of the numbers that it is posted, on the back of the outlook for EBITDA as well. 5,500 crore to 6,000 crore in FY26. There's capacity addition that has come on stream. There's more on the cards. Is this an option? Valuations are too steep, or would you pick something else in the renewable space?
See, as far as Waaree is concerned, no doubt the numbers were pretty good, which were declared yesterday, and the commentary was very exciting. But almost at 3,000 odd levels, I think there would be very little scope for upside, considering the fundamentals. Better choices in this space, I would say, would be Tata Power or NTPC Green, which are trading at a reasonable valuation, I would say. These counters are better in the renewable space. With Tata Power, you have not only renewable, but the conventional energy also. And I think these two are better picks. As far as Suzlon is concerned, I think one should wait for around 60 odd rupees to book profit. They have a huge capacity, reduced, rather almost debt-free after the fundraising and all. But still on valuation parameters, I think 60 would be levels to watch out for.
Too far away actually at this juncture at 58.65. So watch out for that very closely. Sandeep, I hope you look at this later. We've got a next caller, Kumar, who's calling us from Hyderabad, speaking about a company that is operating in a space that a lot of people are focused on right now. Kumar, you bought Lemon Tree at a price of 137. What would you like to know?
Yeah, good morning, sir. Good morning, Alex, sir. Good morning.
Good morning.
Sir, I have purchased Lemon Tree at the price of 2,000 shares, 135 rupees.
Yes.
I think somebody has for long-term investment, sir, at least 10 lakhs I have invested for the actually. Is it right time to enter or wait for some time, sir?
If I've got, so your voice is not coming through very clearly, Kumar. Unfortunately, what I'm trying to understand from you is whether you can deploy more at this price. Is that right?
Yes, sir. Yes, sir. Yes.
You want to buy more at this point, right? Okay, fine. So Rajesh, in the hospitality space, which I think a lot of people are focused on, and incidentally, we were speaking to Manish Sonthalia earlier today as well, and he's also talking about the consumption space, and in that he's also talking about hospitality, he's talking about travel and tourism. So would you hold on to this first of all? Would you add more into Lemon Tree? And there are several options in that hospitality space now. Would you buy something else?
See, I am also convinced with the hospitality space as a whole, and we have some of the reports covered in some of the companies covered in this space. Lemon Tree is doing very well in the mid-range space. They are adding rooms, but at these valuation, I don't think putting new money would be a decent idea. A better choice would be ITC hotels, which have been doing very well. They have large room capacity. They have presence in every price points, and they have said that they're going to expand their rooms by anything by 2030. The best part is the debt-free company belonging to the ITC brand. Everything is in favor of this. I think one should deploy new money into ITC hotels for a target of maybe 240 to 50 odd rupees in the next 6 months, and maybe even higher if somebody is holding for a period of 2 years.
Very interesting take coming in on the hotel sector from Rajesh, and he said that you can deploy money in ITC hotels if you can right now. And the 6 months target that he's given is quite ambitious. It's 240 to 250. All right, our next question is from Aniket, who's writing in from Karnataka. He is holding Suntec Realty at the price of 400, and he's holding 20 odd shares. And he's bought this from a longer term perspective, but wants to know the best exit price for this counter. Rajesh, I'll come to you again on this one. Suntec Realty, what's the view like, and also a broader based outlook on the realty sector as well?
See,
Rajesh, this was for Rajesh.
See, Myanmar Realty as a space has done very well in the last 1.5 years. All the stocks have zoomed up based on the projects they were having and the kind of numbers they declared, the bookings they declared. But at these levels, I think these mid-cap names are already trading at their optimum level, unless, of course, they announce new projects at this point of time. We have heard that in some cities, there has been huge build-up of inventory. The only positive point is with the rate cuts started, RBI already done 2 rate cuts and maybe more is in the offing. So the rate cut is the only positive if the rate cuts are passed on to the consumer as such. That will eventually happen. So I would say stick to bigger names like maybe a Lodha or a Goddess Properties, even Shobha is good, and try to exit Suntec Realty.
Okay, so that's the fundamental view. Vaishali, what are the charts indicating for Suntec Realty? Is buying price is 400. Should he continue to hold or exit?
I would say continue holding. Keep a stop loss of 380 because Realty Index on the whole has corrected so much. It does call for a bounce. And talking about Suntec Realty, I think it's made a good base at 350, 360 levels, and now it's getting in a trend. So 380 should be the near-term support, and I think this can go towards 480 to 520 in days to come.
Okay, so that's the view with respect to where charts are concerned for Suntec Realty, and hold is the view coming in from Vaishali. Our next caller, Murli, is calling in from Bengaluru. Murli, a very good morning to you. How can we help you?
Good morning, madam. Thank you very much for taking up my queries.
Sure.
And you are giving a very detailed things about the project, from technical as well as fundamental.
Thank you so much.
Very
Murli.
nice of you, though you spend a lot of time on individual queries.
Thank you. You made our day.
Yeah, thank you. And this query is to the fundamental analyst.
Okay.
I bought TBO TEK.
Okay.
A firm which is in the hospitality industry, which you are aware.
Correct.
And which is having a very high ROE. The debt-free status from 2,000 rupees peak, it has come down to 50% almost.
Right.
I bought it recently at 1,080 rupees, all-inclusive cost.
Okay.
Can I hold for some more time? I am willing to wait for another 1 year.
1 year. Okay.
With a return of at least 15%.
Got your query, Murli. I'll take this up with Rajesh. Rajesh, TBO Tech is the counter. For the next 1 year, he's expecting 15% returns. What's the view like? Sitting on a loss of around 7.5 thousand rupees right now.
One can continue to hold. The numbers are pretty good. If you look at the ratios, there has been very good. Company is doing well. The last 2 quarters numbers have been okay type. I would say wait for this quarter numbers and then take a call. But at this point of time and these valuation, I think one can continue to hold.
I don't know what is happening. We're suddenly getting a lot of questions, apparently from overseas, because we've got one from Germany, we've got one from Prague, we've got one from Africa. I hope you guys are not pulling my leg, because it seems like we've gone international and how, right? Okay, so so did we just take VST? Because I was distracted by all the messages that came through right now. All right, so VST Industries, this is a question from India in Bengaluru, of course, and Prashant wants to know, he's wondering whether he can accumulate at the current price. He's already bought at a price of 275. He's holding 75 shares. So, Vaishali, this one's for you. He's making a small profit. Should he add more for the long term?
Not to be added. 300 is a level, but long-term perspective, I think wait for a little bit of a retracement. 280 to 300 is the support, near-term support. And I think it has got a good upside horizon going up to perhaps even 480 to 500. So that's the way to start buying in trenches.
Okay. We've got our next caller from Andhra Pradesh. Man Singh is calling us. Hi, Man. How can we help you today?
Hi, sir. Good morning, sir.
Good morning. Please go ahead.
I'm holding the PCBL Limited company, sir. I'm holding 1,000 shares, average price 419, sir. Should I accumulate more shares, sir?
What is your time horizon and what was the thesis behind it?
2 to 3 years, sir.
Oh, 2 to 3. Okay, so 2 to 3 years. I'm guessing you bought it because of the outlook on carbon black and all of that, right?
Yes, sir. Yes, sir.
Okay. So, Rajesh, coming to you, PCBL is a counter, of course. I'm trying to remember which is the other company that we discussed earlier this week that is expanding capacity in carbon black. I'll remember, it'll come to me. But would you hold on to this, Rajesh, and would you add more to PCBL?
It's a buy from our side. Company is doing very well. And despite that, the market cap has corrected quite a lot in the recent past, maybe, or if I'm not wrong, 20-25% or even more correction has been there. It's a buy from our side. They have 4 plants doing very well. One of the biggest players in carbon black. They have recently acquired a chemical company. Almost all their plants have their captive power, and the extra power is sold to the grid, and that again adds to their numbers. Margins are very good, and the company has already made capex, and the expansion has almost been done. That would again add to the numbers in coming quarters. So it's a buy from a side, maybe 20-25% upside from these levels in the next 9 to 12 months is quite possible.
The company I was trying to recall, and thankfully my team is on the ball. They've pointed out it's Himadri Specialty Chemical, right? And it was in focus, and it's gained this week 3%, was up and about, but it's cooled off just a bit from those higher levels. Of course, it's got more than just carbon black, but since it's looking to double capacity, is this also on your radar, Rajesh?
Yes, this is on our radar. Yesterday they came out with numbers. Yesterday or day before yesterday, if I'm not wrong, the numbers were pretty good. This company has taken over Birla Tires and Dalmia Bharat Refractories from the NCLT. They are not only into chemicals, carbons, black, but other things they are also diversifying. They have made a capex in their Singur plant, which is doing very well. And I think this company can also be accumulated for a target of 600 odd rupees.
Okay, so that's the view with regards to where Himadri Chemical is concerned. Our next question, as Alex mentioned earlier, is from Germany. James is writing in from Germany. He's holding 100 shares of NCC purchased at 235 a piece and wants to know as to what's the technical outlook for this particular counter. Vaishali, what are the charts indicating for NCC?
So I would say right now NCC, well, as far as trading strategy is concerned, it's got into a trend. But well, right now, seeing the market scenario, there is a little bit of a correction which cannot be ruled out. So I would say 210 is the near-term support. Exit, if it's from a trading perspective, if 210 levels break, because that could call for a further downslide. And if this stock moves about 220, it's ready for higher targets going towards 240, 250. So I would say keep your stop losses and hold for now.
Okay, hold is the view coming in on NCC. With that, it's time to slip into a very short break, but we'll be right back with answering more queries on the other side, so stay tuned.
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
The second buy pick is in Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
To India specifically, I really think India has a fascinating opportunity, because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Welcome back. You're watching Ask Profit from across the world. Today, a lot of you tuning in from across the world, and thanks so much for joining in. Our first caller this side of the show is from Bengaluru, though, and Sandeep is calling us. Hi, Sandeep. Morning. How can we help you today?
Hi, Alex. Good morning.
Good morning. Please go ahead.
I just have a quick question. I wanted to understand, is it right time to enter Canara Bank and how the short-term outlook is looking like?
Okay. And when you say short term, have you defined that? What is the kind of time frame you have?
Up to 3 months.
3 months. Okay. All right. So it's a simple enough question. Let me go across to Vaishali on this. Vaishali, in fact, it's tied to what we discussed earlier on Canfin Homes, if I'm not mistaken. You've seen a run up in quite a few of these banking names. Would you venture out right now and buy, or would you hold your horses?
I think I would wait a while because we've seen really a good run up. And talking about Canara Bank per se, I would say 96 would be an ideal level even for a short term, because we have seen good run up coming in Bank Nifty on the whole. There could be some profit booking. So I would look at 96 levels to get into the stock.
Okay. All right. 96 levels are what you should watch on the charts, Sandeep, and keep that on your radar. The next question is from Shwetang Shah, who's writing in from Uganda in Africa, and he's asking about Ratan India Power, which he's bought at levels of 17. It's given up from that point, and usually we say we don't take companies that have this kind of a price, but then I'm still going to take a chance and go to you, Rajesh, on this one. Would you hold on to this? Stock is under pressure, down about 4% at 11 rupees a pop. Would you hold on?
There are a lot of stories going on in Ratan India Power, but still I would say that it's best to avoid these kind of companies because in bull market everything runs up, but then again quality comes in the forefront. So it's better to exit on any upsides.
The view with regards to where Ratan India Power is concerned, and just before the break we were discussing that anybody is making an investment who's an NRI will see tax rate at similar levels of what it's taxed in India, that is 12.5 for stocks, 12.5 for LTCG and 20% for STCG. But if the person selling is an NRI and selling in from NRE account, there will be a TDS which will be applicable at 10%.
Oh,
10% for long term. So that should be something that should be kept in mind before buying and selling your investments. All right, our next question is on Exide Industries. Aditya from Delhi has bought 130 shares at 382.5 a piece 7 days ago, and he wants to know as to what should be the long-term outlook for this particular counter and what are the decent returns that he can expect in the next 1 to 2 years. Rajesh, I'll come to you again on this one. What's the view like for Exide Industries?
15 to 18% in the next 1 year. The company is doing very well. They are moving to, they one of the biggest players in the OEM space, have tied up with almost all the major auto names. They have even moved into EV space now, and the capex has already been done. There have been huge correction in the stock in the recent past, and now it's on attractive valuations, I would say. Somebody watching this program can even add at these levels for a target of maybe 450, 480 odd levels in the next 1 year. So it's a accumulate sort of stock, buy on every dip.
That's the view coming in on Exide Industries. Our next question is from Kiran, who's calling in from Andhra Pradesh. Kiran, a very good morning to you. How can we help you?
Very good morning, ma'am. Yeah, I bought share of National Aluminium.
Okay.
Called NALCO.
Right.
Around 173 price.
Okay.
Quantity of 7,000.
Mm-hmm.
So I got a loss of 1 lakh.
Right.
So I got query about short term.
Okay.
Around 2 to 3 months.
Okay.
Please help us.
Okay, got your query, Kiran. I'll take this up with Vaishali. Vaishali, what are the charts indicating? He's sitting on a loss of 1 lakh rupees right now because his buying levels are at 173. Should he continue to hold for the next 3 months or book losses right now?
I would say it is better to continue holding, because once you see clarity in the stock of an up move coming in, this can go towards 200, 210 also. So I would say don't have that 3-month horizon as your stop loss, but I think continue holding. You will see good returns coming in the stock.
Okay. All right. Our next question is from Nidhish, who's writing in from Prague in the Czech Republic, and he has moved to Prague from Bengaluru not too long back, I believe, and he's got KPIT Tech that he's holding for a period of 2 to 3 years, or he intends to hold. He's holding 50 shares with a small loss, about 2% or thereabouts. The stock is up and about in trade today, though. So what should he do? The entire space in focus, though, Rajesh, would you say a hold on KPI Tech is a call?
Yes, one can continue to hold, although it's in IT space, but it operates in a niche space of auto software. Two companies are basically into that, KPIT and Tata Tech. It's doing very well, KPIT. One can continue to hold, seen a lot of correction. The numbers are still good, order book is good. One can continue to hold.
Okay, so that's the view with regards to where KPIT Tech is concerned. Our next question is from Kavita, who is writing in from Ohio, USA, and she has purchased 15,000 IDBI bank shares at 89.9 a piece. Wants to know whether she should continue to hold it for the next 3 years or not. Rajesh, what's the view like?
See, if I talk of valuation, valuations are on optimum level. The only trigger being the disinvestment, which has been talked about so many times in the recent past. If something of that sort happens, that can be a trigger. Otherwise, at these levels, I think the valuations are on an optimum level. Unless some surprising numbers come out, I think there might not be any big upsides from these levels. So if you're hoping for a disinvestment in the long term, then you can continue to hold. Otherwise, there are better opportunities in the banking space as such. Maybe a HDFC Bank or a Kotak would be a better choice in the private sector space, or in PSU basket, you have likes of State Bank of India, Bank of Baroda, Bank of Maharashtra doing very well.
Hey, yeah, quite a few of them, in fact, are doing well in the banking space. Speaking of the financial space, our next question is from Shrishel, who's writing in from RPC Layout, he says, in Bengaluru. And he was lucky enough to get 5 lots of Bajaj Housing Finance from the IPO. And he's obviously sitting in good profits right now. Let's pull up, if we can, the gain since IPO for Bajaj Housing Finance. Of course, the stock has given up some ground, if I remember correctly, but it's still a healthy gain. There you go. So 85% or thereabouts from that issue price of 70 rupees per share. Should you hold on if you've got a long-term perspective? Rajesh, the question is for you.
It's a buy from our side. Despite the fact that from 70 odd rupees of IPO price, it's almost trading at 130 odd rupees. But still, it's doing very well. The CAGR growth in the AUM has been very well. The numbers are exciting. And the best part is, as we talked just now, sometimes back, that with interest rate being cut, the housing space is doing very well, especially the housing finance companies. So considering the growth in the AUM and the CAGR growth it has company has shown, I think for a target of 170, 180 or in the next 12 to 18 months, one can continue long. And the other one in this space could be LIC Housing Finance. These two companies in the housing finance space is looking very exciting.
Raj from Kolkata also had a similar query on Bajaj Housing Finance. So Raj, I hope that answers your query as well. Our next question is from Chike Gowda, who's writing in from Bengaluru. He's bought 1,000 shares of Vishal Megamart at 102 a piece. Vaishali, on the charts, can he continue to hold for the next 1 year?
So we're talking about Vishal Megamart. How does it come? I don't have this chart.
Okay, till then, Rajesh, what's the view like? This is one of the counters which, has seen significant gains in terms of its revenue growth, where tier 2 and tier 3 city play comes into picture.
Yes, it's a recent listing, doing very well. The numbers have been good, got good subscription in the IPO. When you look at the numbers have been good, very good. They are trying to expand in tier 2 and tier 3 cities. Although the margins are under pressure somehow, but going forward, I think things would improve from these levels. A target of 125 is quite possible. Continue to hold.
Checking, Vaishali, I know that it's a December listing, if I remember correctly, and VMM is the name of the counter on NSE. I don't know if you have enough data on the technicals.
I'll just have a look.
Yeah.
So yes, VMM, that is 110. What data I have, it's just in a sideways move. But yet, considering the shorter term period, 105 acts as a support. And once we see the stock moving above 115, this can go towards 125, 130.
Okay. Okay, so we've got a caller, I believe, from Hyderabad. Suresh is calling us. Hi, Suresh. Good morning. How can we help you today?
Hi, good morning. Thanks for this call. I'm holding PFC at
419 levels, yeah, 419, yes.
Yeah, 419 levels. I'm holding around under 100 shares. Today, I saw a news saying that regarding this dental engineering issue, and there are around 400 crores or some around 50 crores already got, but they are trying to get that remaining balance also. But how this impact on the stock, and how can we? Can I add more for another 6 months to 1 year?
Yeah, it's a fair question. So 6 months to 1 year is the time frame, and actually, Suresh, yes, it's an important update that they sent out. But in the context of the larger book for PFC, and Rajesh can weigh in on this, 400 crore is not a very substantial amount. Of course, it is not something to scoff at. But Rajesh, if I remember correctly from my days tracking CPs, that is commercial paper issues, one issue of PFC can be as much as 500 crores. So it's not the end of the world for them, right?
I agree, totally agree. That considering the kind of AUM, the book they have, it's a very small percentage of their entire portfolio. So yes, there might be a knee-jerk reaction when the news comes in finally. But I don't think at these levels there's something to be very worried about. The company gives out good dividend, they have a good AUM, and doing very well. And considering the fact that the kind of power scenario in our country and government's focus in power sector as such, improving that, the companies like PFC, REC, REDA are going to do well in the longer term. So there might be knee-jerk reaction due to news flows, but it's a hold from our side. Continue to hold. By any chance it comes to maybe 390, 380 odd levels, that would be a good levels to add.
Can we pull up the intraday chart for the Nifty 50, please? And it's just about flat, if I'm not mistaken, right now. Yeah, 0.1% higher and up about 22 points or so. We've got a viewer who's asking whether it can lose another 30 points. Well, it can happen in the next 2 minutes. And particularly because the Nifty 50 has gained about 1,800 points over the course of the last 6 sessions. So yes, of course it could. I guess you need to slightly broaden your horizon and look at the bigger picture right now. So Bajaj Auto is the name of the counter that we're talking about next. And by the way, I didn't need Vaishali to answer that question for once on the technicals. We've got Mahalakshmi writing in from Hyderabad asking about Bajaj Auto. 9,800 is the buy price, and Mahalakshmi is in the loss right now. She can, I'm assuming, please clarify if I'm wrong, Mahalakshmi, can hold for a period of 1 year and wondering whether to average at this point. Vaishali, on the charts, what would you do?
I would definitely agree that, well, it's time to average out so you can get good returns because going ahead, I think this can go towards 9,500 to 10,000 to start with. So I think it makes sense to average out at these levels.
Okay, average out at these levels is the view coming in on Bajaj Auto. Our next caller, Raj, is calling in from Bengaluru. Raj, a very good morning to you. How can we help you?
Hi, I just want to, good morning.
Good morning.
So I have a query regarding JSW Energy. I already having a 90 shares.
Okay.
So which amounting, which is at the price of 589.
Okay.
Or 584.
Okay.
Okay. I am thinking to add some more stocks, around 70 stocks. Is it a good time?
Is this a good time to sell?
Is it a good time to add?
Add 70 more shares. Okay, got your point, Rajesh. Raj, I'll go to Rajesh for this one. Rajesh is holding JSW Energy. Already 90 shares are there in his basket. He wants to add 70 more counters. Is this the right time?
See, if you are for a long-term investment, yes, it's the right time. There might be some dips due to market conditions and all that can't be predicted. But at valuation levels, I think it's a decent valuation. Trading a decent valuation company has been doing very well, large capacity, and not too much of a debt. And last week only, if I'm not wrong, they inaugurated a new plant in West Bengal. So everything is in their favor. Capacity has been expanded. One can buy.
Right. We've gone truly international today, I must say. Okay, we've got the next question from France. Tamil Selvan, who is a regular viewer of this program, is asking about REDA. He's done his research on the technicals. Vaishali, he's looked at the Fibonacci levels, and based on that, his target is 196. His acquisition price is 160.35. And he's wondering what the short-term prospects are. Is his target appropriate and can it be hit?
I would definitely agree so because it's getting into a trend, technically very well placed. In fact, if this continues to show strength, it can go towards 210 knots.
Okay, so that's the view with regards to where IIDA is concerned. Our next question is from Smriti Sharma, who's writing in from Bengaluru. She has 140 shares of GSFC bought at 261 a piece and wants to know whether she should average at the current levels or not. Vaishali, on the charts, what is it indicating? Should she average or continue to hold or sell?
So GSFC, I think it's already getting into a trend. It has shown signs of bottoming down. I would say accumulate. Follow a range of 185 to 195. That would be the range to accumulate. And because since I said it's getting into a trend, it can go much higher from here on. So yes, accumulate from here on.
Accumulate from here is the view on GSFC. Smithy, hopefully that answers your question. Amar has got a question. He's calling us from Bengaluru. Hi Amar, good morning to you, and how can we help you today?
Actually, I hold 20 shares of Sula Vineyard.
Okay.
The average price I have bought is somewhere around 350. Currently, it's dipping a lot.
Yeah.
So my initial intent was to hold it for one and a half year.
Right.
But current trend is not showing so good. So what would be the stop loss and how to go ahead?
What is the stop loss and how do you hold? This is so. Can you reiterate what is the time frame that you have?
I'm okay with for another one and a half year.
1.5 years. Okay, fine. All right. Rajesh, Sula Vineyard has not rewarded shareholders as much as some might have hoped. But there are several options in that Alco-Bev space that a lot of people are starting to talk about right now, particularly if you talk about the premiumization play and not necessarily very near term, right? You're talking about things that will happen over the course of the next 2-3 years. Would you say you book your loss, which is not a very substantial loss, in this counter and move to something else?
See, the stock has not been doing anything in the last even more than 1 year, I have to say. It's stagnant, consolidating for a very long period of time after the kind of run-up it witnessed after the listing. It's not only a play on Alco-Web, but also on play on a tourism, I would say, because they have the vineyard tourism and all. Valuations are okay. Somebody willing to hold for a period of 12 to 18 months, I think one can continue to hold for a target of 330, 350 odd levels. And as far as other options are concerned, I think Radico can be had a look up upon because of their premium products. The numbers have been very well, and they are doing very well. And they have launched new products too. So 3,000 would be a level to watch out for in Radico.
Right. So, Radico over Sula Vineyards is what Rajesh is preferring. In fact, even in terms of how business updates have come in for the counter, we've not seen revenue growth in the past few quarters. Own brands are not growing at all. Wine tourism is something that is growing, but that growth pace has also lowered for the counter. So, keep that in mind. The next question is from Sandeep, who's holding 200 shares of Zensar Technology, bought at 839 a piece, and wants to know as to what should be the outlook for the counter. Vaishali, on the charts, how is Zensar Technology faring?
So Zensar also is showing signs of reversal. So once the stock moves above 700, well, as a trading target, one can look at 760. But if it's for a longer term perspective, then 760 is a level to watch, because above that, it gets into a further on a good upward trend. So that's how I would look at this stock.
All right, so that's the view with regards to where Zensar Technology is concerned. Our next caller, Sharad from Patna, is calling in. Sharad, a very good morning to you. I believe you have a query on Indian hotels.
Correct.
Right. Go ahead with the query.
So I just like to know that I can hold it for 5 years as portfolio stocks.
Okay.
As my acquisition price is very low, so
Right.
I'd like to know this.
Your position size is very low.
Yeah.
Buy price. Okay,
Sir,
got it.
acquisition price.
Acquisition price. Okay, got your point, Sharad. I'll take this up with Vaishali. Vaishali, on the charts first, how is Indian hotels looking? Because Rajesh did mention that he likes Indian hotels as well as ITC hotels. So from a longer term perspective, I believe he is positive on these counters. But what are the charts indicating?
So I totally agree with Rajesh, because even on chartical view, I think the stock, even on a monthly chart, since 5 year is the horizon, I guess he can in fact add more. 700 is a very good support, and the projected target that comes to is 1100 to 1200. So that's my view as far as the long term period is concerned. 700 would be the support, 1200 would be the target.
Okay. We just got a question on IREDA, which we answered. I think, Mr. Reddy, we've taken a question on IREDA for the short term, if I'm not mistaken, didn't we? Yeah, we did. All right. I know that we've also addressed Suzlon. I came to you, Rajesh, on this one, where the buy price was 50 rupees. I want to ask you a follow-up, because Manthan is writing in from Ahmedabad in Gujarat, and he's acquired at slightly elevated levels of 1400. He's bought at levels of 69. And he's wondering whether to hold for 2 to 3 years. Is that a good idea? Would you switch to the names that you mentioned, Tata Power, for example?
I would like to switch to Tata Power or NTPC Green rather than sticking with Suzlon. Although the capacity is huge, they have made a zero debt company after the fundraise and all. But still, considering the valuation, I don't think 69 would be a far call. 60, 62 would be the optimum, which I am looking at these levels. So it's better to switch from Suzlon to better names like Tata Power or NTPC Green.
Okay, all right. The next caller is from Mysuru. Raghu is calling us. Raghu, hi, good morning. How can we help you today?
Good morning. Good morning, sir.
Please tell me.
Sir, I bought ITC share, 140 pages, 70 days price.
Okay.
Can hold or can hold long time?
Long term.
Long term.
Yeah. Okay. Rajesh, do I need to ask you this question?
The reply, it's ad from my side at these levels too. Company has been doing very well. Cigarette business has shown volume growth. FMCG has taken up. They are moving into dairy, cash positive balance sheet, debt free, giving out good dividends. And top of all, the management is very clean. No corporate governance issue. Why ITC?
The next question is Ajay, who's a senior citizen writing in from Meerut, and asking about this, right? So he's got okay. I'm not actually able to. Housing. Is this right? Is it HDFC
Home First
Bank?
Finance.
So it's Home First Finance.
And HDFC Bank, yes.
It's HDFC Bank. Okay, so I think, if I'm not mistaken, he's got HDFC Limited at some point, and now he's got HDFC Bank. Between the two, which would you prefer to add more on for the long term? Rajesh, between HDFC Bank and Home First, which would you pick?
HDFC Bank anytime. It's one of the largest bank across the world. After the merger, the size has become very big. Asset quality is very strong. The fourth quarter updates were very exciting. Deposit growth or AUM growth, everything went up. They have a lineup of HDB Financial IPO coming in the near future, I would say. So everything is doing well, despite the fact that it has run up quite a lot in the last 1 month or so. Still, we think the valuations are very comfortable. It's a buy from our side.
It's a buy from Rajesh's perspective on HDFC Bank. Good set of numbers. It's time to hit the rapid fire round, and this is where Rajesh and Vaishali, we throw as many questions at you over the course of 2 minutes to keep your answers as quick as possible. Adani Enterprise is the name of the counter. 2,272 is a buy price, and this is Kumar from Vizag wants to know, would you hold or book profits at this point? Vaishali?
Hold.
Okay, Sanjay Krishnan wants to know whether he should buy more or exit PVR Inox. His average price is 1360 and the quantity that he's holding is 30. Rajesh, your view?
Hold and try to exit on upside.
Canara Bank we've already discussed. We've got a view. Jivan wants to know, he's bought at levels of 101. Would you hold or sell? Vaishali?
Hold.
Okay, Pavni from Vijayawada wants to know whether she should continue to hold Welspun Specialty Solutions. She's bought at 41.2 a piece. Vaishali, on the charts?
Well, I'm not tracking this.
Okay. JSW Holdings, is this the right time to buy? JSW Holdings, this is a question on the fundamentals. Sridhar wants to know. Rajesh?
One can buy, low liquidity, but one can buy.
Okay, Dixon Technologies, Sanchit from Bengaluru is bought 10 shares at 15,200. Should he buy more or sell? Rajesh?
Book profit.
Okay, Midhani, buy price is 493.95. What is the outlook? Should you hold? Shibani wants to know. Vaishali?
I think hold.
Okay, the next question is from Johnson, who's writing in from Kerala, and Texmaco Rail is the counter. Vaishali, on the charts, how is it faring?
Buy. It's good favorable risk reward ratio, go for it.
Okay, Ease My Trip holding 400 at a price of 20.5 is Akshita from Mumbai. Would you hold on the fundamentals? Rajesh?
Exit.
All right, UTI AMC is the next counter. Tushar Rajpurohit is holding at the levels of 1188, 135 shares he has. Vaishali, on the charts?
Hold.
Tarun from Singapore is holding Enviro Infra at price of 294. Hold or sell is the question. Vaishali?
Enviro, one minute.
Okay, it's fine. Rajesh, on the fundamentals?
Exit.
Exit. Apologies. If I'm not mistaken, it may not be very old. It's a recent listing. Okay, so that's fine. All right. Thanks so much to the both of you for joining in, for answering all the questions. Vaishali, Rajesh, as always, an absolute pleasure having you on the program.
Thank you.
All right, that brings us to the end of this particular edition of Ask Profit. Thank you so much for joining in from all around the world and indeed from our very own India. I'd encourage you to stay tuned for the next program. It's going to be an interesting one. It's Know Your Company. Do check it out. Do stay tuned. This is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
These second buy pick is in Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? No. Hello and welcome. You're watching KYC here on NDTV Profit. I'm Harsh Saita. Now, on to the company that we're going to track in today. It's going to be KFin Technologies. Outside of it being a darling with regard to the theme that it covers, which is Indian capital markets, and given the fact that it's so much more domestic facing and so less impacted by all the geopolitics that's going on globally, from a business standpoint, of course, maybe not from a client addition standpoint, but from a purely business standpoint, and hence we feel that this one surely entails, or rather deserves conversation. So let's quickly put out as to why we've picked KFin. The first one, of course, the big theme being Indian capital markets, and this is a clear play with regard to Indian capital markets. In terms of growth, it's a high growth company, recently listed. Whether this growth can really sustain is the question that we'd like to ask them. The other one is market share gains. So while we've seen very strong growth come through for a company like this, we're not seeing very strong gains in terms of market share. Is that really something that we should be concerned about? The fourth piece is possibly chances of yield compression. Mind you, a lot of their revenue is linked also to how mutual fund SIPs and mutual fund flows are, and it's a variable revenue based on the quantum that is being invested, and therefore any tweak in the yield could impact profitability. The fifth one is with regard to AUM growth and flows. This could, of course, well get impacted if markets don't perform. So that's one possible, very real risk which the company carries. And the last one, or the second last one rather, is the risk of regulatory changes. Any changes with regard to regulation could impact the revenue as well as the model, the business model itself of the company. They are also going global. So the global foray, what should we expect from this? Because incrementally it adds in terms of the acquisition that they've made of Ascent, adds to the revenue, the top line of the company clearly right from day one. But what does it mean from a big picture standpoint? What does it mean for cash flows? What does it mean for valuations at this point? Is it looking good, and is this the best play in that sense for playing the capital markets? And we'll try to discuss and break down all of these angles and aspects. Let's first talk about what KFin does. Let's try and simplify it. So first one, it's a technology-driven financial services platform. In the most basic sense, it helps investors as well as mutual funds, as well as AIFs, as well as a PMS in terms of client onboarding and purchasing of units. So it caters to the capital market ecosystem. That's the theme it caters to. It's the largest investor solutions provider to Indian mutual funds. In fact, it boasts to service 26 of the 48 mutual funds in India, AMCs in India. Now, let's break this down a little bit further. First, on the investor solutions side of things. One, it provides solutions to asset managers, corporate issuers across asset classes in India. It services around 26 of 48 AMCs in India, and these are broadly the solutions that they provide. So all of these are provided by KFin Tech to the service recipient. In terms of issuer solutions, mind you, this includes IPOs as well, but I'll try and trim it down and say that these are only corporate issuances, and the largest issuer solutions provider in country in terms of number of clients. It also offers investor and issuer solutions, and it caters to over 7,000 corporate clients currently. It also does international investor solutions. The piece at this point is small, just about maybe very, very low teens or maybe just 12% of top line, but that share might likely go up because they've acquired a business in Singapore, and we will talk about that as well. The fourth piece is with regard to AIFs and wealth investor solutions. They command a 37% market share within this space, and therefore something to look out for as well. The National Pension Scheme, the NPS, it has 15 lakh subscribers within the NPS and growing fast. Currently just 9.5% of the market share it commands in this space as well. So has good potential for growth in this pocket as well. In terms of metric, it's a market leader. The domestic mutual fund investor, the overall AUM or market share is around 32.1%. This is FY24 numbers. We'll talk about the current numbers as well. The equity AUM market share is around 33.5%. And we also have the SIP market share, which is almost 40% of the monthly SIP inflows. These are all FY24 data, which I'm culling out, but largely it's stable across the 9 month as well. In terms of issuer solutions, it commands 46% of NSE 500 by market capitalization and 42% by number of folios, and in terms of number of companies, it's around 37%. So number of clients around 37%. So that's how the split is made. In terms of revenue mix, around 72%, 73% of the revenue comes from domestic mutual funds, around 13% from issuer solutions, again around just about 12% from international, we spoke about this, and around 3% from other business services. So that's broadly the breakup. The largest chunk of that is domestic mutual fund investor solutions, and they are diversifying fast away from that, or rather focusing on that and along with it doing other things. Let's look at the AUM trend now. Now this is where it starts to get very interesting, and we have 9 month FY25 numbers for perspective. Look at the AUM. The AUM trend is clearly on an uptick. You're seeing almost 2.5x in terms of the AUM versus FY21, currently at FY25. So looking very healthy, but let's look at the market share here. It's gone up from 27.5%, very, very slow climb, to around 32.5%. It's taken them around 5 years, 100 basis points each year. Roughly that's how it's gone up. The other one is the equity AUM, and this is pure equity. Look at that. That's gone up 3x in the last maybe 5 odd years, and you're looking at market share, which is up from 32.5% to just 33.4%. So no real trend here. This is where there could likely be a concern. Market share gains may not be happening, even though growth is extremely strong. So while that is a big positive, can they gain market share? Because that would be a double engine, which could be formidable. Investor folio trend as well. Investors have doubled virtually in terms of folios between FY21 and FY25. So in the last 4 odd years, the investors have virtually more than doubled. So that also is positive. The key here is going to be market share and whether they can play that well enough or not. Okay, let's now quickly look at the metrics we'll track on this one. And I'm going to keep this as quick as possible. Income statement, balance sheet, cash flows, return ratios, shareholding pattern, valuations, street cred and street coverage. We'll cover all of those 8. Let's quickly look at the income statement. Again, no concern with regard to growth here as one would expect. 20% 3-year CAGR. Look at the last couple of years, 720 crore being the top line. FY23, FY24 was 840 crore, and FY25 is going to be more than 1000 crore likely. That's the likely glide path that the revenue is taking, at least at this point. EBITDA as well growing in line, 20%. The margins, there's been a slight bit of dilution versus FY22 from 45%. It's come down to around 43.8%. It was down to nearly 40% and thereafter has rebounded. Net profit also fairly healthy clip in that sense, 29% 3-year CAGR with regard to net profit. Clear thumbs up. Not too many businesses that can do this and looking sustainable as well in terms of how they are doing it. 808 crore is the number, 9-month FY25 growing at 32%. Look at the EBITDA number, 36%. EBITDA margins coming in at 44.1% and a profit after tax of 250 crore versus the 250 crore they did in full year FY24. Clearly demonstrating nearly a 30% plus kind of growth clip. So clear thumbs up with regard to income statement. No questions asked. Balance sheet. Again, balance sheet looks good. You're seeing around 170 odd crore of equity. Mind you, the market cap of the company is roughly 20,000 crore. So it's nearly 15 times the current, or rather around 12, 13 times, 14 times the current equity share base, and therefore price to book is quite high in that sense. You're looking at reserves, healthy reserves that the company is sitting on, and cash and bank balance too is fairly decent, around 250 crore of cash bank balance. Of course, some of this will go in the new platform that they've invested in, which is Ascent, which is to help them go global with regard to the services they are providing. Want to quickly add, debt is negligible to very low, and therefore clear thumbs up with regard to the balance sheet as well. Let's look at cash flow. Again, you're seeing a healthy growth in terms of cash flow, near 30% growth H1 FY25 versus H1 FY24. And what you're also seeing is largely in line with the kind of profits that they're making. And therefore, no concerns there. With regard to the cash flow, the growth clip is quite decent and in line with the way in which the EBITDA metrics are playing out. Net cash flow may be negative, but they are making heavy investments in their back end, and therefore that makes sense at least at this point. But therefore, what becomes more relevant is the return ratios. Look at the ROC number, look at the ROE number. ROC above 25%, well, on a consistent basis over the last 3 years. ROE is also above the 20% mark over the last 3 years, and therefore, would you mind whether this company is really making investments straight back into the platform that it services? Maybe not, and therefore a thumbs up with regard to return ratios as well. So at least these 4 metrics is a clean thumbs up with regard to operations. They're doing very well there. Now let's look at shareholding, and this is where it starts to get tricky. Now, first thing, I want to highlight the kind of shareholding changes that have happened, and within that, of course, the last 3 months not reflective of those changes, but promoter holding has fallen from 39% at the end of FY24 to around 33% at the end of FY25. So something to keep in mind, promoter holding has shrunk. but you're seeing very strong interest from FIIs as well as DIIs. Both of those largely, DIIs maintaining their stake of 20%, FIIs have actually hiked their stake from 16.5% to nearly 23%, and that is a clear positive. But the promoter ownership falling slightly, even post the IPO, it's fallen, and therefore we'll give this a neutral on that count, and something that we'll watch out for as well. The other piece is with regard to valuations. Now, when I'm looking at the valuations of the company, it's valued richly in comparison to peers, deservingly so. It's in a business and it's growing faster than peers. If you look at the shrink in terms of price to earning ratio, current versus 1 year forward, the shrink is the sharpest when it comes to a KFin versus pretty much all other players. Prudent, slightly different business in that sense, and therefore that shrink I'm not completely factoring in. But what you'll see is while it commands a premium, it also anticipates a better growth clip in terms of the way the street is seeing it. Therefore we'll give this a neutral. Street coverage, 10 analysts have a buy, 3 have a hold, 3 have a sell, negative 8% in terms of return expectations. So street coverage will give a thumbs down simply because the return expectations negative 8, despite 10 analysts having a buy. But the return expectations not good. We've seen a sharp run up on the stock price, and that's what gets me to the street coverage. 1 month returns are 9%, 3 months are 15%, 6 months are 25%. There's been a sharp fall in the stock price. Thereafter, there's been a recovery, and now we've seen a very strong recovery. But even over the 1 year period, stock has done very well for itself. It's nearly a doubler over the last 1 year. No concerns with regard to street cred. And therefore, let's quickly line up the ratings on our KYC rating list. And when we line it up, of course, the first 4 metrics, we spoke about it, a clean green on all 4 of those, given the way in which this has worked operationally. Shareholding, valuations, a bit of a concern. Street coverage, a bit of a concern. Street cred is clearly a thumbs up, given the way returns have played out for shareholders. It's a 6 on 8 on our KYC rating list for KFin Tech. And to talk about this and understand this a bit better with regard to the business and what the risks could be, we have with us Shrikant Nadella, Managing Director and CEO at KFin Technologies, joining us. Welcome, Mr. Nadella. It's good having you. I want to first start off with how you anticipate growth to be for a KFin Tech, maybe over the next 2 to 3 years. There are plenty of levers for you. One is, of course, the global market, but it's the larger domestic market which you're currently leaning on. So give us some color on both of those so that viewers can understand where the business is headed.
Thank you so much, Harsh. Great to be here on your show. Very
Absolutely,
fascinating.
my pleasure.
Great coverage.
Thank you.
That's and KFin Tech, I think your viewers have already seen the historic metrics in terms of the growth, its balance sheet strength, its relative valuation, so on and so forth. Broadly, I want to start with anchoring in terms of what is the goal of this organization, what is the vision, what is that we want to do. KFin Tech is a registrar and transfer agent. It's one of the 2 on the investor side of it, and one of the 3 on the issuer solution side of it. As an organization, it had been our stated goal over the past 5 years to create the first and probably the largest global fund administrator based out of India. It stems out of the fact that I believe the capital market infrastructure space is exactly the same place and position where Indian IT and IT industry was in late 90s. And over the past 2.5 decades, we have seen the rise of spectacular Indian companies. And I'd like to believe that there is a similar story that can be orchestrated here as well. Our direction and our execution over the past 5 years have been in the direction, whether it is about acquiring 5 different companies during pretty much 5 years, literally 1 organization every single year. These are all with the with a view to get to that stated objective. Our tactical steps in terms of growth driven by either business line addition, cost optimization to significant technological transformation are also all in that direction. The top line had been growing at a CAGR of 25% and the bottom line too had been, both PAT and EBITDA level. We have completely cleared out our debt. We have no debt on the books. And in that context, we believe that we have the ability to continue to grow in the similar clip as we have done in the past 4 to 5 years.
And Srikanth, apologies for interrupting. So you've done around 20% or so in the last 3 years in terms of CAGR. You've done a little bit more if you factor in this year as well, full financial year, right? Would it be fair to say that that's how the domestic business will continue to grow? And then you have your international lever, which should add a bit of more fillip and zinc to that number, right? So just trying to kind of add those things up.
Yeah, so our international journey, Harsh, had started not just because of the acquisition of the Ascent, which we have announced just a few days back. We started the international acquisition 4 years back. Today, it occupies about 5 to 6% of our total book, and it had been growing at a CAGR of 60% year on year.
Correct.
What we have also done is grow other asset classes within India, which is alternatives, pensions, private retirement schemes, and pure play tech solutions. So I believe that the Indian domestic story has the potential to grow in the similar clip. Whilst the larger share of book, which is the mutual funds, probably 24-25% could be a little too optimistic. I'd like to believe that it is late teens is a good number to go with. But the other business lines of alternatives, tech solutions, pensions have been and have the potential to grow up north of 35 to 40% year on year. And together, that will get the overall number, I'd like to believe, to close to 20% plus on the domestic side. And the international had been growing, as I said, in a much bigger manner. And overall, that will get us to the similar growth percentages as we've seen in the past few years. This is excluding the acquisition of Ascent, which I'd like to believe will add significantly higher clip growth.
I'll come to Ascent in a bit, but let me first understand, Srikanth, how you view gains in market share, because with regard to absolute AUM, you've done phenomenally well. I highlighted that as part of my metrics. But what happens with regard to market share? Is there scope for expansion of market share from here? Is there too much competition? Give us some color on that.
Oh, certainly. Market share is measured in multiple ways. One is the number of asset management companies that exist in our country, and what are the total number of AMCs that we support as an RTA versus our competition. There are only 2 companies in this country which support this piece of work. Right? Today, we manage nearly 60% of the asset management companies in India. That is one market share metric we need to track to. The second market share metric that you want to track to would be the total AUM, which is the derivative factor for the revenue that we derive out of, correct? So that is what you have published here. The total market share of the AUM is roughly about 35% for KFintech. The 65% belongs to the competitor, the larger competitor. There is also another important metric that we all need to track to, which is what is the blended yield that we derive. The revenue the registrar derives is a multiplier of AUM with the yield that we derive. And on that yield factor, KFin does a much better job in vis-a-vis the competition. So adjusted for that, I'd like to believe the total market share is already above 40%. Now, what are the levers that we have to improve the market share of the AUM? Now, AUM is a factor of how the asset management company itself grows its business. We are merely offering the services around the technology, operations, compliance, so on and so forth. One, by winning more asset management company mandates, and their growth can help you. Second, and obviously we've been winning more clients over the past decade. We won nearly about 65% of all new asset management companies that have launched in the last decade. And their growth will happen sequentially over a period of time. Second, superior performance of many of our AMCs over a period of time. You have seen the trend over the last 3 years, but if you were to take a trend, Harsh, from 2018 onwards and see what is the overall AUM growth for KFintech, it used to be 26% and it has touched 35% at its peak. So there had been literally 100 basis points expansion every half a year on a market which itself has more than tripled in the last 6 to 7 years on the overall AUM. So I'd like to believe that there is definitely much more potential to grow the market share within the AUM. There is yet another metric I'll draw your attention to, which is the market share of SIP. Market share of SIP for KFin service clients is up north of 42%. Typically, that is the sticky retail book that remains within the AMC's overall market share of AUM. And we have always seen that the total AUM trends towards the market share of SIP, which means that there is a possibility that over the next couple of years or more, the trend line between the total 34-35% of our overall AUM trending towards 40% is strongly possible.
Okay, yeah, so point taken, there's scope for market share expansion. Question is, what's the aspiration therefore? Would you look to grow 100 basis points in terms of market share every year? That's my first part of the question. Second is, your equity AUM market share is fluctuating a bit or largely on a flat line kind of curve over the last 4 years. Would the aspiration be to grow that? And the underlying question to that is it better yielding, and therefore a growth there would significantly impact your numbers?
So if I have explained, so ability to increase our market share is pretty limited.
Okay.
KFintech is not the manufacturer. We do not sell mutual funds. We merely service the mutual funds that are sold by our clients.
Sure.
So when you talk about our market share, you are really talking about the combined market share of all our clients put together. So there is precious little that I can do to improve the market share, apart from, of course, delivering, fabulous services. As I said, however, that winning several new client mandates is an important step in the direction. And since in the last decade or so, we have won more AMCs than lost. So what it does is that several of the asset management companies take up north of 4 to 5 to 6 years to be able to establish their cred and grow much faster. We are at that inflection point where several of our AMCs, we believe, are going to grow, outperform the industry, and that will improve our overall market share.
Point taken fully. Appreciate that. I want to understand chances of yield compression. It's a competitive industry. Even the distribution industry is facing some challenges with regard to yields. Are you seeing any of that? Are you anticipating any of that?
So yield compression is a pretty normal business, parameter that we look at. It is no different if you look at any business for that matter. I mean, if you're dealing with manufacturing, you're dealing with logistics, so on and so forth. As the volumes increase, there is always a volume-driven discount every industry tends to offer. And part of that is because your costs do not tend to linearly increase commensurate to that of increase in your total revenue. And it is in that recognition and being a true partner to our AMC clients, we are always passing on some amount of scale benefits that we get to the AMCs in the form of yield, and it basically results in the form of discounts that we give in the form of yield. What is an important metric to track to is always your increase in AUM and overlay that with the decrease in the basis points. And when you take a look at all of those factors put together, are you still able to grow, close to about 20% is a metric. And that is something that we are confident we'll be able to do it. Our contracts are all designed to have telescopic pricing, which means that once the AMC goes past a particular threshold of AUM, there are inbuilt discounts already baked into it. Hence, this is a very natural phenomenon, something that had been happening for the last 25 years. It is nothing new, and I'm not overly worried about it.
Absolutely. Understood. I'm going to ask you two quick questions. The first one is with regard to global foray, and I'm running out of time. But with regard to global foray, your current global business contributes around 20%, and I'm including Ascent, taking that liberty to just add Ascent's top line as well, annualized, around 20% of your top line now. How quickly can it increase in terms of pie? What would the 2-year likely guidance be?
So we do not give guidance as such, but let me tell you that we, once the acquisition is complete, the total share of international revenue to that of KFin's overall revenue would be about 25%, be a little over the 20% number that you mentioned. We are working towards getting that number anywhere between 40 to 50% over the next 5-year period. Part of that would be through direct growth of SN Fund Services itself organically. And KFintech's own international fund services business has been growing very rapidly over the past 6 to 9 months. We need to keep in mind that both our organizations' growth had COVID impact for 2 years in between when we both launched around 2018, 2019, our international businesses, where international contracting wasn't very easy. So if you take that aside, our growth had been in multiples and not in percentages. 25 getting closer to 40 to 45% would be a realistic goal in the next 5-year period. Even as the overall business itself, I'd like to believe hopefully we'll continue to grow in the similar trajectory as we have in the past few years.
Shrikant, is it margin accretive for you, the international business? That's my first part of my last question. The second one, would you continue to do around 20 to 25% in terms of return ratios, ROCE, ROEs?
So international business, splitting it into KFin and SN Fund Services. KFin's own international business is definitely EPS accretive. Once it achieves scale, I'd like to believe that it offers actually significantly higher margin positioning as compared to that of even domestic, fund services. Very simply put, the average yield in India could be anywhere around, 3.5 odd basis points. The average yield we derive in international markets is anywhere between 5.5 to 6 basis points to begin with. So clearly there is a much higher revenue potential possible in international, but of course the scale needs to be there. SN Fund Services, currently it has just broken even in the previous half year. Based on the current revenue expansion and the cost optimization efforts that are there, it will nearly be EPS accretive this year itself for overall KFintech. But in terms of the overall margin itself, to get closer to KFintech's level of margin is probably a 2 to 3 year play.
Taken. Thank you so much, Shrikant. It's been an absolute pleasure speaking and great breaking this down. It's a phenomenal business and it's great having your views on it.
Thank you so much, Harsh.
Right, with that, in fact, completely out of time on this edition of KYC. From me and everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The second buy pick is in Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Benchmarks trade off lows. Nifty Bank reverses its 3-day record rally as HDFC Bank stock falls. Gensol hits fresh lower circuit after Power Finance Corporation says it's actively pursuing actions to recover dues from the company. IT major HCL Tech gains close to 8% despite reporting disappointing numbers in fourth quarter, but met the street's expectations. Commerce Secretary designate Rajesh Agarwal arrives in US to lead high-level negotiations with the team of United States Trade Representative. Top agenda includes greater market access for US goods like agri, lower baseline tariffs, and easing of non-tariff barriers. Home Minister Amit Shah visits Pahalgam to take stock of the terror attack, pays tribute to victims, meets the survivors. Hello and welcome to Markets at 12, and this is Malika Mishra. Before we dive into the markets, viewers, we must address a horrific tragedy, the Kashmir terror attack. The deadliest attack in Jammu and Kashmir since Pulwama. It claimed 26 lives and left many injured as terrorists targeted tourists in Pahalgam yesterday. Global and Indian leaders, including PM Modi, who cut short his Saudi visit, and Home Minister Amit Shah, now in Srinagar, have condemned this brutal act. Let's go to our colleague Nazir Masoodi from NDTV, reporting live from Pahalgam with the latest ground updates.
Well, that's part of any investigation. They go to the crime scene, they collect the circumstantial evidence, then there would be the eyewitness statement, and all those things are part of investigation in every such case. But this case is beyond investigation. This case has, this attack, massacre has impact beyond Pahalgam and beyond Kashmir also. When Kashmir is dealing with a shutdown, complete shutdown. And even appeals were made from the mosques to observe shutdown and protest against this massacre. I have never seen happening like this before, because everyone feels to be shocked. I am in Pahalgam, not a single shop is open today. Complete. It is a ghost town since yesterday afternoon. There's a sense of disbelief. Home Minister meeting the victim families, the relatives of the victim, clearly sending a message that it's not just your loss, it is a collective loss. And there has to be a collective resolve to fight it. So what would be that fight be? Prime Minister, that maybe there would be some indication after the end of Cabinet Committee on Security meeting, that would be chaired by the Prime Minister. And it's the second time after, Pulwama attack, we see this type of meeting happening soon after the attack. So, but here in the valley, everybody is saying how this can be ended, because when everybody was thinking valley is now free from militancy, all-time low, whole focus was on Jammu. We saw here in Pahalgam, terror struck here and killed 26 and injured 17. Condition of some of the injured is stated to be critical.
Right. So as Nasir pointed, this is definitely unfortunate and also shocking. Now, in response to the tragic Pahalgam terror attack, Prime Minister Narendra Modi will chair a critical cabinet committee on security meeting at 6 p.m. this evening today. The high-level discussion will involve key figures, including the National Security Advisor, the External Affairs Minister, and the chiefs of the armed forces to address the crisis and shape India's security response. Let's get in my colleague Aishwarya Jain from NDTV with more on this.
Well, and we'll only report what we know so far, and our team can take a note of it. The top sources have just communicated to us that the CCS will likely to be held at 6 p.m. and the reason behind that is Amit Shah, who is at the spot over there. The CCS wants first-hand information from the Home Minister, who had visited the spot and also met the victims over there. So at 6 p.m. most probably now, the top sources have just communicated to us that it will take place. They are giving time for each and every agency to take the note of the situation and can report to the Prime Minister, who will be chairing this meeting. Secondly, the government who has the zero tolerance policy towards terrorism, the government is in a view that they might call the all-party meeting very soon to take the entire opposition into the consideration as far as one cabinet minister, one very senior rank cabinet minister, will be handed over the responsibility to take the entire position together, and the government could give a brief on what action they are thinking to plan against those terrorists who India wanted to completely exclude. Apart from it, it is of course very soon the government who can also brief the entire opposition and call an all-party meeting. So these are two major updates. Prime Minister Narendra Modi since morning is constantly monitoring the situation with top ministers briefing him on every point of stage.
Right, Aishwarya, thank you so much for that update. And viewers, as we continue to give you key important details of many people are calling this a huge massacre in Kashmir, we will also give you some important insights into the markets. And starting with how the markets are currently faring, the benchmark indices have cooled off a bit, with the Nifty 50 and the Sensex trading in a flat bound range. If you see on your screen, the Nifty is hovering around 24,200 levels, while the 30-pack Sensex hit 80,000 early today and then slipped back to 79,700 levels as we speak at the moment. The broader markets are almost flat as well, with the Nifty mid-cap 150 about 0.3% high, while the Nifty small-cap 250 is trading with a negative bias. The top contributors to the strength of the Nifty 50 basket today are a whole host of IT names like Infosys, HCL Tech, TCS, Tech Mahindra, and also M&M. HCL Tech, in fact, came out with its quarterly numbers yesterday, and the main highlight was their optimistic revenue guidance between 2 to 5%. But on the downside of the same chart, you see that the weakness is largely being felt by major banks such as HDFC Bank, Axis, Kotak Mahindra Bank, ITC and Bharti Airtel are also adding some pressure. If we zoom out to check the Nifty 50 heat map, you would see almost the same amount of bulls and bears, keeping the index nearly neutral. Apart from the banking names that we just saw in the strength and weakness basket, you would see that there's Grasim, Eicher, JSW Steel, ITC, Power Grid, they're all shedding some weight as well. Let's take a look at the sectoral picture also, and you'd see that Nifty IT has shot up substantially by over 4%, followed by realty, auto, pharma, consumption, metal in the green. On the losing side, you have sectoral indices such as the PSU Bank Index, Finance, Bank, and oil and gas as well. The advanced decline ratio that sort of represents the market breadth currently stands skewed in favor of the declines, marking a bearish breadth at the moment. Now, let's get in some market opinion on that note. We spoke to Manish Sunthalia of MK Investment Managers and asked him, what does a money manager think of markets when we see a one-way move like the current one? Listen in to what he had to say to this.
On an important day of trade in our studios is Manish Sunthalia. Needs no introduction. Manish, great having you. Thanks so much for taking the time out, and thanks for being here.
Thanks for having me, Neeraj.
No, the pleasure is ours. It's a good day, really. Manish, tell us, what does a money manager think like? Because there was uncertainty, tariffs, markets getting punished. Indian markets got punished before the tariff uncertainty came in as well, right? Now from 22,000, it's almost been a one-way move all the way to nearly 24.5. We've done more than 10% already from the lows.
Absolutely.
What's next?
So, it is all about temperament. At 22,000, plethora of pessimism all around. You got to barely hold your horses and believe that, this far and no further on the downside.
Sorry, I must say, you called it, right? At 22,800, he came in and said, 22,000 jayega, we might buy at those levels. So, sorry, please continue. Credit where it's due.
So basically, even now, I think, 22,000 to 25,000 for the next 3 months is very much doable. If you were to cross 25,000 in a hurry in the next 3 months, then again you would be creating excesses on the upside. So I think the band is 22,000 to 25,000 in the next 3 months. Lot of uncertainties around the tariffs will be over. US has imposed 100% tariffs or more on China. China has imposed 100% tariffs on US. I don't think these numbers are sustainable. This is all brinksmanship. Either ways, this will all get settled.
Saber rattling, yeah.
Yeah, so this will all get settled between 20 and 30%. So obviously, coupled with that, you look at the US, there will be tax cuts, etc. That will boost sentiments quite a bit. A lot of this is being preempted, is happening in the marketplace as far as the global markets are concerned. Global markets broadly have rallied from those equivalents of India's 22,000, except for the US, which has been falling. So I think that's where we are. It's a range-bound market. Nothing has changed as far as the numbers are concerned. Earnings trajectory on the Indian market, Indian Nifty 50, stays good at that 10 to 12%. On the conservative side, consensus street estimates are still 14-15%. I would still believe 10 to 12%. Lot of uncertainties are there. It's rather better to err on the side of caution. So 10 to 12% broadly at 25,000 you'd be fully valued for the near term. I would believe it that way.
Okay.
Right, and HCL Tech posted its Q4 results, although the profit of the company is down by 6%, but it is largely in line with estimates. Revenue also surged about 1.2% on a quarter-on-quarter basis. Now, Puneet joins in with a breakdown of the key figures, and he's also going to tell us what brokerages think of the results. Puneet, take away.
Well, thanks for that. Definitely, it's a results that's largely in line with estimates as well, but in a weak environment, the company has actually come out with a decent set of numbers. Now, as you rightly mentioned, revenue up 1.2%, while EBIT was, down currently in this particular quarter at 18% EBIT margins versus 19.5%. This was largely baked into estimates because the company also had a salary as well as wage hike in this particular quarter. Now, profits also has increased, actually fallen by 9%, but that is because of the wage hikes, as we mentioned. Now, the company on a constant currency basis actually it reported a fall of constant currency revenue growth by 0.8%. On a quarter-on-quarter basis, but when you look at the services business specifically, that's actually grown by 0.7% on a constant currency basis compared to the previous quarter. So that's again a positive. Deal wins, another big number, $3 billion almost of the company. For FY25 as a whole, it's $9.2 billion, another big number there. And the guidance, which was the main one, they reported for FY26 expecting a 2 to 5% growth on a constant currency basis for revenue for FY26, and that's largely in line with estimates from analysts. But the important part is that Infosys had a similar estimation from analysts, but Infosys came out with a 0 to 3% revenue growth guidance for next year. So it's definitely seeing better demand environment within Infi, and I think that's why you're seeing a very strong reaction on the stock today as well. And brokerages, both Macquarie as well as JP Morgan, very positive on same. JP Morgan has actually upgraded the stock to an overweight rating. They have a target price of 1,750 rupees per share. And the one key aspect in the note, they mentioned that the large deal ramp up provides visibility of constant currency growth rate going forward as well. And they mentioned that the stock's trading at a 4% dividend yield, a 6% free cash flow yield. So that's another positive. And on the other hand, Macquarie has a target price of 2,160, and they are saying that Q4 did not see any kind of major impact of US tariffs, while 50% of the deal bookings were done in Q4. Most of them were closed in March. So definitely key positive for HCL Tech in this particular quarter. And I think valuation is now also looking very strong compared to the other peers.
Right. So a positive result of HCL Tech that you're reporting. Now, signed DLM is also gaining over 4% despite the Q4 numbers missing estimates, and the order book trajectory also looks muted. What's working for the company?
Well, definitely, it was actually quite a weak quarter for signed DLM as a whole. We've seen that results were largely below estimates for the company. Revenue at 420 crores versus estimates of 480 crores. Margins also, while they had increased in this particular quarter to 13.4% versus 10.5%, it had a 257 basis point positive impact, which is a one-time effect. If you remove that, the margin growth also hasn't been very strong. Net profit as well, it was up 36%, but largely, in line with estimates of about 30 crores that the company reported as well. Now, the other key aspect is that, the order backlog of 1,906 crores, it's fallen. The organic order backlog has fallen for 10 straight quarters now. If you remove the acquisition of Altec as well, it's continued in its downtrend, and that just provides a very low revenue visibility growth essentially for FY26, and that's something that Kotak also had a view on. They've retained the reduced rating, target price of 450 rupees per share, and the key aspect they're maintaining that a weaker than expected execution was basically because of a defense client, which was essentially BEL, pulling back some of the orders going forward. They've also said that they're continuing to be concerned because of the weak order inflow, and the order book to trailing 12 months order book ratio is just 1.25 to sales now. So Essentially, while the stock is reacting positively, it's actually fallen from the day's highs. And while the valuations provide comfort compared to the other EMS players, the order book visibility doesn't.
Right. Thank you for helping us make sense of that uptick that we're seeing in the stock price. And moving on, Waaree Energies Q4 EBITDA grew multifold on higher revenue and lower stock purchases. The company's top line growth was driven by 53% uptick in production. The solar module maker also gave an EBITDA guidance of 5,500 to 6,000 crore rupees for FY26. We spoke to Amit, whole-time director and CEO of Waaree Energies, to understand the factors that led to the company's Q4 earnings growth. Take a look.
Well, there's always room for better, Neeraj, and that's relentless pursuit of excellence and performance that's what we at Waaree try to do. But a great quarter for us and a great year for us. I would say almost a breakthrough year. And the primary drivers for that have been the demand and the customers and the trust that the customers have bestowed on us. The financial capability to put up factories and capex, and then of course to execute those projects at scale and at speed, and then ultimately deliver to the customer. I think that's been the not so secret sauce to get this thing done.
Yeah. Okay. So let me start with the good part, the margins. Okay. Let me start with the top line. Chalo. I mean, good quarter, good year. You have the capacities out there to execute. Is the order book addition looking accretive enough for you to be able to meet the numbers that you guys have been talking about? And parallelly there, the order book addition for Q4, was it a bit lower than what you estimated?
So the order book is very strong. It stands at 47,000 crores. And that again gives us the confidence that 26 is going to be a very, very strong year. Again, customers, the first reason, they have bestowed their trust on us. And that's why we have the 47,000 crore order book. We have new capacities planned. So 3.2 gigawatts of, and you have been to the Chikli facility. We are going to have 3.2 gigawatts of addition to our module capacity. Our 5.4 gigawatts of cell manufacturing is going to be fully functional. And we have the financial muscle to ensure that all of these projects move fast and on time.
Right, and now we have my colleague Harsh joining us from the newsroom to give us a detailed analysis of the Q4 results of AU Small Finance Bank and M&M Finance. Harsh, how do the numbers look like?
Well, I'll talk about M&M Finance first. Growth was more muted, or rather lower than broadly what you've come to expect of M&M Finance. Your margins also largely checked, but hopefully margins have bottomed is what the management has said. Likely some bit of recovery going forward with regard to the margin number. But at the moment, credit costs margins weighing in with regard to the numbers themselves. And in terms of profit after tax as well, and this kind of sums it up, the consolidated profit after tax, 456 crore versus the 671 crore same time last year, it's down 32%. Kind of goes on to underline that while asset quality was stable, the numbers still have taken a hit with regard to the expected credit loss, and that has impacted the overall ROA. Hopeful of an ROA inch up is what M&M says. What are brokers saying? And this is where it starts to get interesting. Morgan Stanley, they've maintained their equal weight, but they've hiked their target price marginally from 277 to 290. PAT miss driven by operating profit miss, they say. Outlook stays muted. Bad loan formation, credit costs were better than estimates as per them. They've cut their FY26 earnings for lower loan growth and higher credit cost. They're expecting a gradual lower funding cost driving FY27 earnings, and they've moderated their cost of equity assumptions and lowered rates with regard to M&M Finance. Investec too, they've hiked their target price to 300 from 285. Lackluster growth trends, NIM decline, asset quality stable, diversification and fee income growth are likely levers going forward. And that's on M&M Finance. Let me quickly also talk about AU Small. Growth extremely strong here, 11% deposit growth, QOQ 8% QOQ loan growth, 46% growth on the loan front on a YOY basis, so extremely strong there. Margins will take maybe a quarter or two more to recover. Margins were lower than or largely in line with estimates, but continue to be under pressure. OPEX also was a lever that they used, 27% growth in OPEX. Operating profit therefore doubled, and profit after tax was largely in line because provisioning was accelerated. So some bit of provisioning accelerated, 2.5% credit cost number. Even in terms of AU, overall views seem to be more positive than negative from brokerages.
Right, Harsh. Thank you so much for those updates. And now, Vardhman Special Steels has hit the upper circuit despite reporting poor Q4 results. Now, this is largely on the back of a major capex announcement, and my colleague Mihika gets us more on the results and how the company will benefit from the new plant.
So what the street is ignoring are the poor Q4 results. You've seen a 3% annual fall in Vardhman Special Steel's revenues due to lower realizations, only a 3% uptick in volumes to over 53,834 tons. EBITDA has actually fallen 35.64% on an annual basis in Q4 because of reduced realizations, stable raw material prices, and net profit has decreased almost 40%. But the stock is buzzing on a major capex announcement where the company is going to set up a new greenfield steel plant in Punjab for a total of 2,000 crore of capex. Now, this steel plant will manufacture special and alloy steel with a planned capacity of 5 lakh MTPA. Now, the project will be funded by a mix of internal accruals, equity as well as debt, and is expected to be commissioned in FY29, FY30. Now, in terms of the benefits of the steel plant for the company, it will address the capacity shortage after 2028, primarily from the company's existing product lines, and it also aligns with growing global trends such as green steel. It will also help the company meet quality standards that are required by OEMs, which are the customers of the company, and reduce the overall cost of the steel manufacturing for the company. And lastly, help diversify Vardhman into new product segments like wire rods, forging, as well as the non-auto sector.
Okay, so the news of a new plant in the horizon working well for the sentiment of this company. Now, moving on, India will begin its bilateral trade talks with US under the leadership of Commerce Secretary Designate Rajesh Agarwal. And let's go across to my colleague Rishabh for more details on this.
Right, Malika, what we're hearing is the fact that Commerce Secretary Designate Rajesh Agarwal has probably now landed in the US for 3-day talks with a team of the United States Trade Representative. What we're also seeing is that with the terms of reference that have now been finalized, the focus is now shifting to ensuring reciprocity. That has always been the United States' endeavor with regards to this bilateral trade agreement and the America First trade policy that Trump has brought in, is to actually bring down the trade deficit that it has with major trading partners, one of which is, of course, India. We'll see that now the agenda will now vary to getting the tariff, the average weighted tariff from India on US goods down to about to what the US also charges. We'll see that the US will push for greater market access for agricultural goods as well, something that India has strongly opposed in the past. And we'll also see that various non-tariff barriers that India has in place, such as quality control orders, such as rigorous customs procedures, things like that could also be discussed between India and the US in the next 3 days, with Commerce Secretary Designate Rajesh Agarwal being present there. He is the chief negotiator for all negotiations related to this US-India bilateral trade agreement talks. Another very interesting point is the statement that came in from the United States Trade Representative Jamieson Greer. He said that India's constructive engagement so far has been welcomed, and they look forward to create new opportunities for workers, farmers, and entrepreneurs. So the focus very, very clear in terms of what the US requires from India.
Okay, and thanks for that update, Rishabh. But viewers, that's all the time we have on the show. Do stay tuned to NDTV Profit for more news and updates.
That's huge. That is a biggie. It's out of it.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The second buy pick is a Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research.
Hello and welcome to NDTV Profit. You're watching Profit Buzzers. This is Hiral Dadia and with me is my colleague Mihika Barve. Let's quickly look at how markets are doing at this hour. Overall, if you see in terms of Nifty 50, let's quickly pull up that one on the screens. Overall, if you see, there is that little bit of pressure that did come in midday. From the day's highs of around 24,359, we've corrected to hit a low of around 24,119. Mild recovery again from that point, and now we're seeing gains of around 0.2%. So some bit of volatility that has creeped in terms of today's session. Let's quickly pull up Bank Nifty on the screens as well, and along with that have the sectoral heat map after that. Bank Nifty has been trading under pressure. There is some bit of profit booking that is coming in with Bank Nifty trading with cuts of almost 0.8%. And if you look at the PSU Bank Index as well, along with that, that's an interesting one to watch out for overall. You're seeing cuts of almost 1.4% on that front. Let's look at Nifty IT, 4.5% up move that's coming in terms of Nifty IT. And that's an interesting move that we're seeing on that sector. Nifty Real Estate is also bucking the trend over the last couple of trading sessions. Auto, Pharma are up in trade. Defense is pretty much on the borderline as we speak. Consumer Durables has been trading under pressure today. Oil and gas is down nearly 0.6%, as well as if you talk about Nifty Infra and Energy at the borderline. Now, if you have to look at, the gainers and losers in terms of Nifty 50, and then we look at the heat map in terms of contributors. Okay, so first we have the Nifty contributors coming in there. So Infosys, HCL Tech, TCS contributing to the kind of gains that we are seeing today. M&M is also contributing in terms of today's session. HDFC Bank is the one which is actually trying to squeeze Nifty because that's the one which is actually seeing profit booking along with the Kotak Mahindra Bank as well as the Axis Bank. ITC also pretty somber in trade. You have HUL that will be reporting numbers tomorrow, so that's going to be a stock that will be in focus as well. Tata Consumers is another one that will be in focus in today's day of trade because that's another counter that will be reporting numbers. So that's with regards to where what's happening in terms of sectoral trends, what's happening, in terms of large cap space. But Mika, what's interesting is in terms of the broader markets because a lot of stock specific action is what is on the cards as we speak.
Yeah. So if you could just quickly pull up the Nifty small cap and the Nifty mid cap on the screens right here. We've seen a pretty good day with the small cap 250, not so much, down about 0.2%, but the Nifty mid cap is up 0.4%. Some of the stocks that I do want to mark that are buzzing in trade, you have something like a Warrior Energies that's done well, even something like an HCL Tech, and a lot of IT mid cap counters like a Coforge that are bucking up the trend in today. Something I also want to highlight, and we'll speak about in just some time, is a Vardhaman steel pipes, which is special steel, sorry, which is buzzing in trade today. It's hit an upper circuit of 20%. Another counter that we've been talking quite a lot about is Gensol Engineering, and the stock has hit a lower circuit yet again, down about 5%, and has now seen significant market cap erosion and continues to not do well in trade. But Hiral, that's how the broader markets are performing. But something that I did highlight was a Warrior Energies. Now the stock has done quite well in its Q4 results. You've seen revenue up 36%. EBITDA has gained 121%. Margins have grown and expanded significantly to 23% versus 14.2%. And net profit has rose 34% in Q4. What helped earnings was the growth driven by a 53% uptick in production, EBITDA margin expansion on higher revenues, a 25% fall in stock purchases as well. On that note, let me just introduce Gaurang Shah, Head Investment Strategist at Geojit Financial Services. Gaurang, your basic outlook on something like a Warrior Energies, it saw initial euphoria. Then it didn't do well, corrected almost 40% between November first week to April first week, but the stock is up 25% in the last 5 days. Any outlook on the same?
Thank you, Mika, for having me on the show. Good afternoon to all of you all and all the viewers. So, we like the renewable sector as a disclosure, both conventional as well as renewable energy, we've been positive. While on Warrior Energy, while the IPO was there, we had come out with an IPO note and we had given a subscribed recommendation from a long-term point of view. Not to forget, it had a stellar run post it got listed, Mika, and then we've seen profit booking by the virtue of the markets also coming down. But the focus of the government is absolutely very, very clear to have more and more of renewable power generating capacities in India, reduce your dependency on thermal stroke hydro power, and get into more of renewable power because India has the capability and capacity. So from a long-term point of view, if I have to keep that IPO note as a base of my recommendation, we are positive. And like I mentioned, we had given a subscribe to the IPO from a long-term point of view.
Got it, Gaurang. We also spoke to Amit Pathankar, whole-time director and CEO of Warrior Energies, to understand the factors that led to the company's Q4 earnings growth. Let's see what he had to say.
Well, there's always room for better, Neeraj, and that's relentless pursuit of excellence and performance that's what we at Wari try to do. But a great quarter for us and a great year for us. I would say almost a breakthrough year. And the primary drivers for that have been the demand and the customers and the trust that the customers have bestowed on us, the financial capability to put up factories and capex, and then, of course, to execute those projects at scale and at speed, and then ultimately deliver to the customer. I think that's been the not so secret sauce to get this thing done.
Yeah. Okay. So let me start with the good part, the margins. Okay. Let me start with the top line. Chalo. I mean, good quarter, good year. You have the capacities out there to execute. Is the order book addition looking accretive enough for you to be able to meet the numbers that you guys have been talking about? And parallelly there, the order book addition for Q4, was it a bit lower than what you estimated?
So the order book is very strong. It stands at 47,000 crores. And that again gives us the confidence that 26 is going to be a very, very strong year. Again, customers, the first reason, they have bestowed their trust on us. And that's why we have the 47,000 crore order book. We have new capacities planned. So 3.2 gigawatts of and you have been to the Chikli facility, we are going to have 3.2 gigawatts of addition to our module capacity. Our 5.4 gigawatts of cell manufacturing is going to be fully functional. And we have the financial muscle to ensure that all of these projects move fast and on time.
Yeah, most certainly. I mean, it's not often that we meet a company which is large in size and so averse to debt, and having the capability, therefore, to raise debt and leave out projects if the cash flows don't quite meet up. But I know the order book is good, but was the order intake a bit weak, or was it a anomaly for the quarter?
Not really. The order intake is something that we execute on, like we execute on all the other projects. We look at orders in much the same way. We have a pipeline that we can see right now of 100 gigawatts worldwide. And so there is no dearth of business at this point in time. And our disciplined sales team is always ready to ensure that our order book continues to hover around the 45,000 to 50,000 mark.
Okay, fair call. Margins, exceptional performance there. Now the question only, Amit, that comes in, it almost seems meteoric, if you will, quite unreal to have this kind of quarter four margin performance that you've done in. Is this a new normal, or was this a one-off and you will revert back to slightly lower levels?
So if you really look at our P&L, if you really look at our P&L, right, this is the year where actually a lot of leadership changes have happened, and a fair amount of, I would say, SG&A is actually now baked in. And that structure is not going to change as much. Our expenses from a factory perspective are also pretty much going to remain constant or raise in line with the revenues. So overall, costs are going to be very much where we want them to be, and we will therefore expect margins to continue the paths that we are seeing. And that's the reason why we have this EBITDA guidance, right? We have gone ahead and we have said that we will have 5,500 to 6,000 crores of EBITDA, and we are confident about that.
Yeah, but because I'm not able to quite match it at short notice with the revenue numbers, am I hearing you tell me, Amit, that you might actually log in annualized FY26 margins at around 20% or northwards of that?
The way we are going to manage the business, Neeraj, is a razor-sharp focus on EBITDA. That's an important controllable parameter that we have in our hand. And we have broken that down internally into detailed matrices for almost every CXO to go and chase. And so that's how we are confident that we are going to deliver the EBITDA numbers.
So northwards of 20% for FY26 as an average?
I would say let's take home 5,500 to 6,000 crores of EBITDA that I've talked about.
Right, so that's the management of Waaree Energies, an interesting company to watch out for as well from here on. But moving on, another stock that is on focus radar is Tata Communications, and this is again on the back of numbers. If you see the profits, they've grown multifold on the back of a one-time gain, while the revenues have seen a marginal increase, margins have declined, and that's what is shown in the stock performance as well, which is down nearly 0.3%. We spoke to the CFO Kabir Ahmed Shakir, but before that, let's get in my colleague Somit with more highlights from the company's report.
Well, yes, if you look at the Q4 of Tata Communications on a consolidated basis, it was a weak set of numbers. In fact, the numbers are much below than what the street was estimating. The revenues have increased nearly 3% on a sequential basis to close to 6,000 crore rupees. But the EBITDA number that has come in 5% lower compared to last quarter at close to 1,122 crore rupees. And the margin number, that's a key number for Tata Communication, that has come in at close to 18.7%, while the street was estimating this number to be anywhere between 20.5 to 21%. Net profit, however, shows a 4% 4.4 times jump to close to 1,040 crore rupees, but this is largely on the back of the sale of non-core assets. They had sold some land assets and the ATM business, and they had recorded the profit on this in the P&L, and that's the reason the net profit has jumped nearly 4.4 times. Now, one of the reasons why the margins were impacted was because of the spillover impact of the cable cut cost, because apart from this, there was rebranding cost of cloud services and some cost related to project execution as well. The data revenue, which is the key business segment for Tata Communication, there the revenues have increased nearly 4% on a sequential basis, and this means that there is some acceleration and execution of the orders that they have won, because of which we have seen 4% growth in the data revenue business. On the balance sheet side, the net debt has moderated to close to 9,400 crore rupees as against 10,500 crore rupees in the previous quarter, while the leverage has largely remained stable at around 2.1 times as against 2.4 times. However, the company has also announced a big dividend of 25 rupees, which is the highest ever dividend that the company has announced at least since 2001, and the dividend yield at this stands at close to 1.5%. Now, the key questions to ask to the management would be, what is their revenue growth outlook, what are the macro challenges they are facing, margin guidance for the upcoming year, and if there is any revision to their FY27 guidance that they had given back in June 2024, would be important to know from the management.
Interesting conversation, Somit. Thank you for getting us the details as well. And key is going to be the key aspects that actually Somit mentioned with regards to a response that the management should be giving as well. And that's what the conversation is going to take us to. So that's with regards to Tata Communication. But if we can just have a long-term chart as well, that will be interesting. But before we head across to that, let's quickly cut across to Chief Minister Devendra Fadnavis, who's speaking at NDTV Marathi's conclave called The Unstoppable Maharashtra. Let's hear him out.
थांबणार आहे आणि या भ्याड हल्ल्यांना उत्तर द्यायचं असेल तर आपली कामं, आपले विचार असेच पुढे नेत राहणं हेच मला वाटतं खरी श्रद्धांजली असेल. आणि त्यामुळे त्या सगळ्या मृतांना त्यांच्या परिवारांच्या दुःखामध्ये सहभागी होऊन आपण या कार्यक्रमाला सुरुवात करूयात. महाराष्ट्राचे मुख्यमंत्री तुम्ही दुसऱ्यांदा झालात, पण गेल्या 10-12 वर्षांमधला महाराष्ट्राच्या इतिहासातला, राजकीय इतिहासातला एकही दिवस असा नसेल की जो देवेंद्र फडणवीस हे नाव घेतल्याशिवाय पुढे गेला असेल. त्यामुळे महाराष्ट्राच्या राजकारणातलं तुम्ही एक अविभाज्य भाग झालात असं म्हटलं तर चुकीचं ठरू नये. आता जेव्हा दुसऱ्यांदा तुम्ही महाराष्ट्राच्या मुख्यमंत्री पदाची शपथ घेतलीत, त्यावेळेस तुम्ही तुमच्या सगळ्या मंत्र्यांना, ज्यामध्ये बरेचसे नवे मंत्री सुद्धा आहेत, एक 100 दिवसांचा कार्यक्रम दिला होता, ज्याची माध्यमांमध्ये सुद्धा खूप चर्चा झाली. 100 दिवस आता होऊन गेलेले आहेत. कुठल्या कुठल्या मंत्र्यांनी आपापले कार्यक्रम पूर्ण केले, तुमच्या खात्याचे किती कार्यक्रम पूर्ण झालेले आहेत, तुम्हाला काय आवडलं आणि काय आवडलं नाही आतापर्यंत या 100 दिवसात?
पहिल्यांदा तर काश्मीरमध्ये जो भ्याड हल्ला झाला त्याचा मी निषेध करतो. आणि जसं आपण सांगितलं की हल्लेखोरांना हे हवं आहे की आमचं आयुष्य हे डिस्टर्ब झालं पाहिजे, आम्ही थांबलो पाहिजे, पण भारत थांबणार नाही, आम्ही कोणी थांबणार नाही. आपलं जे काम आहे ते आपण करतच राहू, पण त्याचवेळी हल्लेखोरांना आणि हल्लेखोरांच्या पाठीमागे जे काही मास्टर माइंड असेल त्याला योग्य उत्तर भारत निश्चितपणे देईल, हा विश्वास मी व्यक्त करतो. त्याचसोबत NDTVला 1 वर्ष NDTV मराठीला पूर्ण झाल्याबद्दल NDTVच्या संपूर्ण टीमला मी मनापासून शुभेच्छा देतो. निश्चितपणे संजयजी म्हणाले तसं गेल्या 1 वर्षात तुम्ही मराठी माध्यमांमध्ये आपली एक वेगळी स्पेस तयार करू शकलात, ही खरोखर एक अतिशय उल्लेखनीय अशा प्रकारची बाब आहे. आणि भविष्याकरताही मी NDTV मराठीला खूप खूप शुभेच्छा देतो. आमचा जो 100 दिवसाचा कार्यक्रम होता हा एक प्रकारचं सेटिंग ऑफ टोन ज्याला म्हणतात, की हे सरकार कशा प्रकारे पुढे जाणार आहे. आणि यात 2 गोष्टी होत्या. एक, प्रत्येक विभागाने आपले टार्गेट्स ठरवायचे होते. त्यांनी टार्गेट्स ठरवून आमच्यासमोर प्रेझेंटेशन केलं आणि आता आमचं असेसमेंट चाललं आहे की त्यापैकी किती टार्गेट हे त्यांनी पूर्ण केले. आणि या व्यतिरिक्त महाराष्ट्रामध्ये राज्य सरकारचे जवळपास 12,500 ऑफिसेस असे आहेत की ज्याच्याशी लोकांचा थेट संपर्क येतो. या 12,500 ऑफिसेसला आम्ही काही मिनिमम टार्गेट दिले होते. म्हणजे अगदी पिण्याच्या पाण्याची व्यवस्था करण्यापासून तर अधिकाऱ्यांच्या भेटीच्या वेळा निश्चित करण्यापासून तिथला कचरा साफ करण्यापासून तर रेकॉर्ड रूम्स तयार करण्यापासून असे सगळे काही ईज ऑफ लिव्हिंगचे आणि ईज ऑफ ॲडमिनिस्ट्रेशनचे काही मिनिमम अशा प्रकारचे बेंचमार्क्स दिले होते. याच्या आधारावर गेल्या 100 दिवसामध्ये महाराष्ट्रामध्ये प्रचंड काम झालेलं आहे. खरं म्हणजे सगळ्याच विभागांनी उत्तम काम केलेलं आहे. इतक्या मोठ्या प्रमाणात ज्या जुन्या रेकॉर्ड होता, जो अनावश्यक रेकॉर्ड होता, हा तर टनांनी याची विल्हेवाट लावण्याचं काम झालं आहे. मोठ्या प्रमाणात सफाई झालेली आहे आणि अनेक विभागांनी जे कार्य ते 2-2 वर्षात करायचे असं कार्य देखील 100 दिवसात केलेलं आहे. आता पहिल्या जे काही त्याच्यामध्ये असेसमेंट झालं आहे त्या असेसमेंटमध्ये अंतिम फेरीत 8 विभाग पोहोचलेले आहेत. आता या 8 विभागांचं संपूर्ण ॲनालिसिस क्वालिटी काउन्सिल ऑफ इंडियाच्या माध्यमातून चाललेलं आहे. त्यामुळे त्यातले पहिले 3 विभाग आम्ही निवडू. पण मला हे सांगितलं पाहिजे की कुठलाच विभाग, मी जसं सांगितलं होतं की 50% खाली गेला तर फेल, 50% वर नेला तर पास, कुठलाच विभाग 50% खाली नाही. कदाचित जर आपण फायनल ॲनालिसिस ज्यावेळेस येईल तर 75% खाली देखील कुठलाच विभाग असणार नाही.
So that's Honorable Chief Minister Devendra Fadnavis talking at the NDTV Marathi conclave. In fact, you can catch the entire conversation on our website as well. He's clearly, talking about the departments of Maharashtra that have done a good job so far, and congratulating NDTV Marathi on completing 1 year as well. But coming back to a Tata Communication, from what Somat explained to us as well, also let's understand what the management, that is Kabir Ahmed Shakir, who's explaining why the margins were below estimates and how they're focusing on specific segments of the business going forward. Let's quickly listen into that bite.
Before I talk on the EBITDA for the quarter, I actually would like to zoom out. This year has been a very, very important milestone year for us. We had announced a few quarters ago that we are doing a strategic review of our non-core assets. The ATM business we announced last quarter, we closed it this quarter, so I'm quite delighted that is now in the hands of someone who will take it to its true potential and value. So that was one big tick. We have been, in this program talking much about our real estate strategy. Now we are already starting to see monetization of land. We've been doing small parcels. In the past, there was one large parcel about 850 crores. Which again was there in the public domain as we went for shareholder approval. So that's also it's starting to fructify. We've also taken action on Net Foundry. We got out of some onerous contracts and loss-making contracts in our transformation services business. I think we are making some excellent progress in freeing up the bandwidth for management from all of these non-core activities so that we can focus back on growth. So I'm delighted to see that the data revenue this quarter has actually delivered a 4% sequential growth, which is kind of one of the highest that we have done, and which sets us from a growth perspective going forward. This is amid the kind of macroeconomic uncertainties that we've been witnessing as well. With that said, I would say the margins for the year as a whole has been in the range that we had indicated to the market. We said we will be in the 20% range. We are closing the year with 19.8. So I'm happy that we have delivered what we said for the year. For the quarter, yes, there have been some, as Sean pointed out, there are certain cable cuts. This is the first time ever that we had 3 cable systems go down in this year, all together at the same time. Various issues. Also, the time to repair was unusually long because of the geopolitical conflict and things that we all know of. So those were the costs. We did launch one of our cloud platform, Vayu, Tata Communications Vayu very recently as well. So there were a little bit of a step up in marketing costs. So I would say when I look at the delta of what is the drop of margin from previous quarter to this quarter, quite cognizant of the cost that actually went in and completely in control.
But okay, appreciate that. But did you in the previous call speak about your ambition to improve margins to previous levels of 23 to 25, and therefore is that a possibility in FY26?
We will make progress towards that, Neeraj. Our ambition of 23 to 25 stays, right? I mean, I believe that this business should operate in that particular range. If we unpeel, why did we depart from when we were at the middle or north end of the range a couple of years ago? We departed for three reasons. We departed because we made acquisitions. We made 3 acquisitions, and all 3 were loss-making acquisitions. So the mathematics of it took about 3.5 to 4 points, down just on account of that. From the very top end, at like 25 that we were, declaring a few years ago, I mean, that was because of COVID savings, and all of those things have now vanished, and we've now come back to, normalcy levels. And then finally, as outlined in both in the Investor Day last year and also in subsequent quarters, we are making continuous investments organically as well, right? We are investing about $65 to $70 million of organic investments in fueling innovations, including, we talked about AI cloud and launching of our AI studio. All of this are not yet yielding, revenue for us. So these are all in the investment phase for us. Are these the right thing to do? Absolutely yes, because we are in the digital space. And if we do not fuel innovation, we will become irrelevant in a couple of years' time. So I wouldn't be myopic about what is the margin today, because these investments are being made to keep us relevant with our customers.
So that's the management of Tata Communication. Gaurang, how are you looking at a Tata Communication, and would you advise a buy or a sell?
Well, to be very honest, and as a disclosure, we've been positive on Tata Communication for a very long time. And I'm quite pleased with the kind of business outlook and the commentary that was mentioned by the management. It's one of the essential companies in terms of enabling high-end technology communications. Targets that we have set aside, Hiral, is somewhere close to about 1900 plus. This is purely on the fundamental long-term view.
View coming in terms of Tata Communication as well. But let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
second buy pick is in Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Versus 3-day record rally. HDFC Bank weighs on the markets. The Nifty and the Sensex come off the lows of the day.
A delayed summer and fierce competition in the cables and wires industry could hit demand in the current quarter, says Havels. The management also tells NDTV Profit that they are expanding capacity of their cables division. The stock is down 3%.
And more skeletons stumble out of the Gensol closet. Co-founder Anmol Singh Jaggi misled shareholders about an alleged sale of Blue Smart to private equity firm Eversource Capital.
Then what's driving the rally in FMCG stocks? Cheaper valuations and the expectations of improved demand this quarter. Now that the income tax rebate kicks in.
And this is what the terrorists look like. Sketches of 2 out of 3 gunmen has been released by security agencies. A massive hunt is on to find them. A separate gunfight broke out at the line of control in Uri as infiltration was thwarted by Indian Army.
Welcome back. You're watching Profit Buzzers on NDTV Profit. We now move on to the Civil Aviation Ministry and DGCA ramp-up rescue efforts. Airlines have been directed to maintain regular fares and extend full cooperation. My colleague Aishwarya Patil joins in with more details.
Well, as the investigation and rescue efforts in the Kashmir Valley continues for the victims of the Kashmir terror attack, the Civil Aviation Ministry has directed airlines to extend their support for affected tourists as well as victims of the Pahalgam terror attack. Now, an urgent meeting was held with airline operators for a strong advisory being issued towards surge pricing as well. Airlines have been directed to maintain regular fares and extend full cooperation to all the victims as well as passengers who will be flying in and out of Srinagar is what the ministry has said. And as part of the immediate relief measures, 4 special flights from Srinagar, 2 to Delhi and 2 to Mumbai have been arranged. Additionally, on standby will be few more flights to evacuate affected tourists as well. Now, that is as far as the Civil Aviation Ministry is concerned. From the airlines part, they are offering, they are making more efforts to evacuate the victims of this terror attack. Air India, as well as Air India Express and Akasa and Indigo as well, all of them have promised fee waivers, free cancellations, as well as rescheduling to all the flyers to and fro from Srinagar. And as far as Air India is concerned, Srinagar to Delhi for the 23rd of April, 11:30 am flight was scheduled, and Srinagar to Mumbai at 12 noon flight was scheduled. So until 30th of April, most of the airline operators have extended support in cancellation, fee waivers, as well as rescheduling of flights. We are still here to yet to hear from SpiceJet, but that's that as far as the airlines are concerned. DGCA also has told airlines to increase the number of flights in response to the heightened demand and to ensure uninterrupted connectivity for to and from Srinagar to various destinations. Airlines have also been told, as I mentioned earlier, to waive cancellation and rescheduling fees. So that's the update as far as the support to be extended to the victims of Kashmir terror attack from the Civil Aviation Ministry as well as airlines and DGCA.
Thank you, Aishwarya, so much for getting us the details. And thankfully, special flights have been organized, as Aishwarya was mentioning, to and fro from Kashmir. But moving on, let's get back to what the markets are doing. You have a Havells India that is in focus. Now, what's interesting with the Havells India is that it's a strong beat in terms of numbers. However, the stock is what is trading under pressure. What is it that the street is concerned about? That's the key question for which Mahima joins us with more details. Mahima, we know what the numbers are looking like in terms of the quarter. What viewers want to know right now is as to what is concerning the street and what is putting pressure on the stock.
Right, so there are a couple of things, Hiral, as to what's not working for the counter or what the street is not liking. The first thing is that the management has come out and said that summer is set in with some delay this season, and this will impact the overall sales as well as particularly secondary sales in the RAC category. In terms of the overall demand scenario, that is also soft in FY26 going in. Cables and wires is seeing an increased competition with recent players making entry into the cables and wires segment, and inflation and commodity volatility remains something that will warrant for a caution, and that might go ahead and impact their margins and overall profitability as well. Now, in terms of what brokerages are saying, well, Nuvama has reiterated buy with a target price of 1890. They've raised their FY25 to 27 estimates by around 4 to 5%. They forecasted a revenue CAGR of 16 %, EBITDA CAGR of 20% and PAT CAGR of 22% over FY28, and they're valuing the stock at 52 times. Whereas City on Havells has maintained neutral but hiked the target price to 1900 from 1950. What they're saying is that they see profitability pressure led by relatively slow growth in switchgear and higher growth in low margin products, and they seek a better entry point as compared to the valuations that Havells is currently trading at versus the valuation that are already factored in with respect to where positives for the counter are concerned. Lastly, Jeffries and Havells have also maintained hold and hiked the target price to 1800 from 1740. They're saying that although Q4 was a strong beat, inflation and commodity volatility are key monitorables to watch out for in the near future.
Right, so that's with regards to where Havells is concerned. Gaurang, how are you looking at a Havells India, and with all the competition that's coming in the cables and wire segment, though the capacities will come on stream much later, how are you seeing the sector pan out along with your call?
Well, to be very honest, after we got the news of new entrants coming in the cable and wire business, the existing management companies came on various platforms and said that there is enough opportunity, enough space for many more players to come and do the business and everyone coexist together. It is not going to be a big negative for the existing players. Point number one. Point number two, as far as Havells is concerned, again, a prudent disclosure. We have a target somewhere close to about 1900. Near-term headwinds may be there in terms of what the management commentary is, all about. But long term, we do believe that there is a lot of opportunity, both in terms of discretionary and non-discretionary spend. And Havells happens to be a very dominant player in the northern market. And along with that, they are able to garner or capture much more market share in the other parts of this of India. So we remain optimistic, and like I mentioned, 1900. I think risk reward is extremely favorable from a long term point of view.
So risk reward favorable in terms of Havells India. Brajesh, in fact, let me also welcome in Brajesh L, who's from ID Bear Cap. Brajesh, good afternoon and welcome to the show. Your view with regards to Havells India?
Yeah, afternoon. So basically, even I believe there will be a positive bias in the Havells. Maybe on an immediate basis, some profit booking can be seen because for the last 2 weeks, there has been a consistent gains in the Havells. Some sideways consolidation and gradually 1750, 1800. That would be my technical view. So yeah, I would be betting for 1800 levels. So maybe on a slighter correction on a little, maybe somewhere close to 1580 level. So I think I would like to take the buy trades and would bet for 1800 on the higher side. So view is positive.
Got it, Brajesh. Thank you for giving those details. But we also have Agni joining us. Now, Gensol Engineering has been in focus for a while now, and Agni has some new details in this entire fiasco.
As you know, there have been media reports floating around which have been saying that Anmol Jaggi had sent out an email to investors of BlueSmart painting out 3 options on how to take the company forward. Now, the email mentioned one of the options as a slump sale of the ride-hailing business to Eversource Capital. However, me and our colleague Tushar, we tracked that Eversource is unlikely to have ever been part of this conversation. In fact, the last time they ever valued Eversource was in the last calendar year, so that's at least 5 months ago. And even then, there was no binding agreement to acquire any of the company's businesses. Also, the PFC's complaint against Gensol at the economic offences wing is likely to have soured sentiments with the other options that Jaggi had put forward to the BlueSmart investors. Now, remember, till this point, the entire Gensol BlueSmart fiasco was a regulatory problem. Now, with the EOW coming in, it is becoming an executive level problem. So, in essence, a third of BlueSmart's fleet is now part of a police investigation, which is something which investors or potential investors are not looking at kindly. So Anmol Jaggi's email then seems to have misled investors into making them believe that the company BlueSmart is going to survive and is likely to come out well and good, but as we are bringing you the details, that does not seem to be the case. Now, we have reached out to Eversource and BlueSmart for comments on the story, but this is a developing story at this point, so do stay tuned.
Absolutely. Thank you, Agni, for getting us the details. In fact, it's no point taking a view from Gaurang or Brajesh on a counter like this right now. But moving on, let's talk about 2 companies which have announced order wins. One is Ashoka Buildcon and the other one is Suzlon. My colleague Anushi joins us with the details. Anushi, what do the order wins mean for both these companies?
Right, so I'll start off with Ashoka Buildcon first. Now they have received a letter of acceptance award for a 569 crore project from the Central Railway. Now this is pertaining to construction of bridges, minor bridges, along with some miscellaneous civil works that are into play for the company's order consideration that we are seeing. Considering this project size, the order execution is to be executed within the next 913 days itself. Now do note that the company has been in focus on a couple of order wins that we've seen in this last quarter and this recent 2 months period that we are looking at. Order book, if we see as of December 24, that stood at around 16,457 crore. The second stock that I want to talk about is Suzlon Energy. Now this is in focus as the company has received a 378 megawatt of a wind project from NTPC Green. The company is set to supply 120 S144 wind turbine generators for the company, and the project is to be executed in the Gadag region of Karnataka. Now do note that this is the second order that the company has received from NTPC Green Energy in these last 8 months that we are looking at. So these 2 counters in focus on the back of these order wins.
Right, so that's with regards to Suzlon, which is nearly at the day's highest levels, and Ashoka Buildcon. Brajesh, what are charts indicating for both these counters?
So specifically, Ashoka, I don't believe there will be much of an opportunity. Whatever the news we heard, so it is going to be more of a sideways. So I think nothing to much on the chance. Some small bounce can be there, but then I don't think that can be a trading opportunity. But in case of Suzlon, I think that there can be some strength because I think Suzlon is at the verge of giving some reversals. And I won't be surprised if Suzlon goes back to 70, 75 levels. That can be immediate upside, maybe over the next couple of weeks. But then structure for the Suzlon is positive, and I think that we should be seeing some good bounce into Suzlon.
Could be coming in terms of Suzlon. In the last 3 months, the stock has seen gains of nearly 10%. Gaurang, any view in terms of Ashoka Buildcon as well as a Suzlon?
Unfortunately, we don't have current coverage. We used to have coverage on Ashoka Buildcon, but our targets were in place, so we've dropped the coverage. But on Suzlon, I concur definitely over here. We do have fundamental coverage on Suzlon buy side. Somewhere close to about 71 is the target over here.
Got it, Gaurang. Thank you for that view. But over the last 6 months, years, banks have outperformed significantly. The Nifty bank clock record highs yesterday, and we have Harsh joining us talking about what's driving the rally in the banks.
First off, you're seeing an easing regulatory environment. At least over the last 2 to 3 months since the new governor has taken charge, you're seeing the RBI take proactive steps to try and ease the regulatory burden, which is already or which was difficult for lenders in general, at least over the last year or so. The second piece is obviously on liquidity. As part of the same breath, liquidity has eased substantially. Now you have better visibility even on an asset quality. There are visible signs that asset quality likely is improving, is getting better in the few pockets where there have been concerns. One is microfinance, the other one is unsecured lending. The third one is obviously valuations have been reasonable for some time now. But with some of these headwinds receding, the valuation suddenly looking really good because the headwinds are coming off, and that's what's really standing out as well. The fourth piece is growth likely to pick up, better liquidity conditions. Also, you are expected to see new draft norms of LCR actually benefit some of the lenders, and therefore you might likely see more upside to credit growth over the next year or so. That was all that came through yesterday. And the fifth piece is FII buying. That's happened for 5 sessions on the trot for the first time since September of 2024. So after a 6-month span, we've seen FIIs come back and buy, which is obviously positive for lenders because that is the largest go-to place for FIIs, and it has been under-owned for a while now. So just a combination of all of those factors playing out.
Thank you, Harsh, for giving us those details. Brijesh, I'll come to you first. Let me start off with how does the Nifty Bank look to you on the charts, and if there are any counters in the BFSI space that seem attractive on the charts.
So basically, if I talk about the index, I believe today for the very first time we are seeing some selling, and even from the directional point of view, I think this 56,000 till the expiry is done, and we see a very clear picture on the Friday. This level of 56 is going to act as a resistance, so the risk reward ratio is quite favorable to take some short bets, maybe from the trading perspective. And there are stocks for example, just to continue with Bank Nifty, 53,000 was the breakout level. So as long as we don't break 53, the directional move on the Bank Nifty will stay strong. But since we have seen a good amount of rally, like close to 12% kind of a rally from the swing low, the recent low, some profit booking is expected, and that too specifically Bank Nifty around 56,000. So on the stock front, I think we should be taking a bet on the SBI because SBI has recently seen a very good breakout, and now yesterday almost at 830 level, and now it's correcting a little bit back to the 800 levels. I think it's again a re-entry kind of a structure where we should be thinking to take the fresh longs. And to some on the way down, whenever there is a slight profit booking in the HDFC and Kotak, I think we can look for some opportunity. Maybe we will avoid for next 1 or 2 trading session, but then gradually when the Bank Nifty come close to 54,000, I think we should be looking for the fresh buy trade setup in the banking stocks.
Got it. Gaurang, if I come to you, your top pick in the banking space currently?
Well, so before I answer that, Mika, what we've been advising at Geojit Investment Limited is that if you do have a dedicated portfolio in the equity market, I think it's going to be an integral part of the portfolio to have a dedicated allocation towards BSFI segment, especially focusing on private sector banks, public sector banks, and strong NBFCs. Our view is that there has been a sizable amount of improvement in the gross and net NPA. Provisionings are coming back, NIMs are maintained and moving up. CASA ratios are also very, very stable. You have interest rate cuts coming through after 5 years of pause. We expect 2 more rate cuts to be in the system by the time we end this calendar year, December 2025. Top picks amongst, there are quite a few, but if I have to name a couple of them, then the public sector bank, I think State Bank of India and Indian Bank. Private sector banks, Access comes out of the numbers maybe about tomorrow or day after, correct me if I'm wrong. But whatever we have seen up till now, HDFC and ICICI Bank preferred picks. Amongst the NBFCs, other than Bajaj Finance of the world, I think Cholamandalam and Shriram augurs extremely well as investment idea from a long-term point of view.
Right. So Shriram Finance could be one of the picks, as well as Chola Finance, another one that you should be watching out for. But shifting focus, a relief coming in for manufacturers of a chemical called aniline, which is used in pharmaceuticals, dyes, and polymer manufacturing. Now, in a move against China, the center has extended anti-dumping duty on this chemical. Varsha has the details. Varsha, if you could help us understand, what are the details in terms of the anti-dumping duty impact and how does it benefit?
Yeah, thank you for that. So already there was an anti-dumping duty on aniline from China, but now this has been extended for next 5 years. Now this product is used in pharmaceuticals, in your polymers, in your rubber chemicals as well. The amount of the anti-dumping duty has not been changed, which is $36.9 per metric ton. And if I were to talk about the impact on companies, according to B&K Securities, this continuation is neutral for GNFC, who is the domestic producer of aniline and which contributes significant revenue to the company. And this is also neutral for the other user companies like Aarti Industries and NOCIL, which use this product as a raw material for manufacturing other chemicals. The ADD, as I said, was already in effect and the quantum hasn't been changed. Just to give a little bit background, domestic manufacturer GNFC had claimed that Chinese imports harmed local production and therefore the anti-dumping duty was imposed, and had argued for government intervention through anti-dumping duties, and DGTR hence had initiated the sunset review due to the concerns of continued dumping.
Thanks, Varsha, for getting us the details. So let's quickly pull up 3 stocks, GNFC, NOCIL, as well as Aarti Industries, and see what the 3 counters are doing in trade as we speak. GNFC, though, is under pressure with cuts of nearly 1.5% coming in there. NOCIL as well as Aarti Industries are 2 other stocks. Marginal gains on that one. Brajesh, from the 3 stocks that Varsha was mentioning, anything that you like on the charts, because the news is in a way positive, it's a neutral impact, but 2 out of the 3 trading under pressure today.
Yeah, I do agree, but then GFC is some stock where already the stock is forming some base formation, and the stock is likely to see some bounce in the near term. So GFC is something which I can keep a watch on. NOCIL, I'm not too much of comfortable, and even on the RT, I will not take that view. Maybe GNFC is what I can keep a watch on, and it will take a good amount of time. But then slow and steady, I think it can go back to 600 levels. So there can be one opportunity in GNFC.
Okay. Gaurang, your view in terms of the anti-dumping duty that is coming in on aniline?
So keeping this in mind, I can comment on one company out of the 3, and that is Aarti Industries. That's in the specialty chemicals space. And my sense, Hiral, is that the government will definitely take all appropriate steps, whether it is to do with countervailing duty or the duty on the metal, steel, or whether it is to do with any kind of ingredient into specialty agrochemicals. There is going to be a highlighted activity as far as dumping is concerned all across the globe, more so in India, because we have very friendly countries like China, Vietnam, Taiwan, etc., who are eagerly waiting to dump into India.
Got it, Gaurang. The next, stock that we are focusing on is the big brokerage call, and that's Ambit, which is bullish on something like a flare rating. It's initiated a buy rating with a target price of 400 rupees. We have Mahima joining us with the key details of the same.
Right, so as you rightly mentioned, Ambit is bullish on flare writing, and on the back of that, the stock is also seeing significant up moves in trade today. It has initiated buy with a target price of 400 for the next 2 years, so that suggests an upside of almost 56% from its yesterday's closing price. Now, in terms of what are the reasons as to why Ambit is bullish on this particular counter, they're saying that growth will be driven by premiumization in this particular stationery space. Brand pricing and distribution are critical success factors for something like a flare writing. They're saying that flare writing right now is sitting on reasonable valuations, and a growth turnaround strategy is something that they're expecting from the counter. Non-paper stationery industry offers an attractive overall industry dynamics right now, according to them. Consistent innovation, high quality product, as well as low cost and wide distribution are the factors to watch out for. And premiumization, like I mentioned earlier, they've also said that that will be a key growth driver, and overall it's ranked lower versus that of other FMCG categories according to Ambit. So these are the reasons as to why and what makes Ambit bullish on something like a flare writing.
Got it. Brijesh, I'll come to you. Flare writing on the charts, is the call bullish there too?
Not exactly, because I'm not at this point. Maybe fundamentally I don't know, but from technical point of view, I'm not that convinced whether there can be a turnaround streak. There has been a good amount of distribution at the level of 300. So as long as this stock doesn't sustain a very strong base about 300, 310 level, I think that reversals checking on the reversals will be a little bit difficult. This has been in a downtrend. Maybe the risk reward ratio would be favorable, but there is no clear pattern or maybe a breakout which suggests that we should be jumping our guns. So basically, I would just wait for more confirmation. And 300, 305, that odd levels. Once we see a very strong weekly close above those levels, then I might take a call.
Right, so that's the view coming in with regards to where flare writing goes, but completely out of time. Thank you, Gaurang. Thank you, Brijesh, for joining us on the show and sharing your views. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The second buy pick is a Naukri Info Edge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
To India specifically, I really think India has a fascinating opportunity, because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations?
Strong quarter by Vari Energies. No surprise, but yes, there are a couple of surprise elements in that. The shoring up of margins has been, or rather not the shoring up, the outperformance on margins has been very, very strong. Amit Paitankar, whole-time director and CEO of the company Johnson, right now to talk about these numbers and the outlook ahead. You couldn't have found a fault, Amit, with the kind of delivery that you have done, or is there something that you thought you could have done better in the quarter or for the year?
Well, there's always room for better, Neeraj, and that's relentless pursuit of excellence and performance that's what we at Vari try to do. But a great quarter for us and a great year for us. I would say almost a breakthrough year. And the primary drivers for that have been the demand and the customers and the trust that the customers have bestowed on us. The financial capability to put up factories and capex, and then of course to execute those projects at scale and at speed, and then ultimately deliver to the customer. I think that's been the not so secret sauce to get this thing done.
Yeah. Okay. So let me start with the good part, the margins. Okay. Let me start with the top line. Chalo. I mean, good quarter, good year. You have the capacities out there to execute. Is the order book addition looking accretive enough for you to be able to meet the numbers that you guys have been talking about? And parallelly there, the order book addition for quarter 4, was it a bit lower than what you estimated?
So the order book is very strong. It stands at 47,000 crores. And that again gives us the confidence that 26 is going to be a very, very strong year. Again, customers, the first reason, They have bestowed their trust on us, and that's why we have the 47,000 crore order book. We have new capacities planned, so 3.2 gigawatts of, and you have been to the Chikli facility. We are going to have 3.2 gigawatts of addition to our module capacity. Our 5.4 gigawatts of cell manufacturing is going to be fully functional, and we have the financial muscle to ensure that all of these projects move fast and on time.
Yeah, most certainly. I mean, it's not often that we meet a company which is large in size and so averse to debt, and having the capability, therefore, to raise debt and leave out projects if the cash flows don't quite meet up. But I know the order book is good, but was the order intake a bit weak, or was it a anomaly for the quarter?
Not really. The order intake is something that we execute on, like we execute on all the other projects. We look at orders in much the same way. We have a pipeline that we can see right now of 100 gigawatts worldwide. And so there is no dearth of business at this point in time. And our disciplined sales team is always ready to ensure that our order book continues to hover around the 45,000 to 50,000 mark.
Okay, fair call. Margins, exceptional performance there. Now the question only, Amit, that comes in, it almost seems meteoric, if you will, quite unreal to have this kind of quarter four margin performance that you've done in. Is this a new normal, or was this a one-off and you will revert back to slightly lower levels?
So if you really look at our P&L, if you really look at our P&L, right, this is the year where actually a lot of leadership changes have happened, and a fair amount of, I would say, SG&A is actually now baked in. And that structure is not going to change as much. Our expenses from a factory perspective are also pretty much going to remain constant or raise in line with the revenues. So overall, costs are going to be very much where we want them to be, and we will therefore expect margins to continue the paths that we are seeing. And that's the reason why we have this EBITDA guidance, right? We have gone ahead and we have said that we will have 5,500 to 6,000 crores of EBITDA, and we are confident about that.
Yeah, but because I'm not able to quite match it at short notice with the revenue numbers, am I hearing you tell me, Amit, that you might actually log in annualized FY26 margins at around 20% or northwards of that?
The way we are going to manage the business, Neeraj, is a razor-sharp focus on EBITDA. That's an important controllable parameter that we have in our hand. And we have, broken that down internally into detailed matrices for almost every CXO to go and chase. And so that's how we are confident that we are going to deliver the EBITDA numbers.
So northwards of 20% for FY26 as an average?
I would say let's take home 5,500 to 6,000 crores of EBITDA that I've talked about.
Come on, you might do very well on the revenue front, and then the margins may not look that great. So I'm trying to pin you on one of the two things.
I know you are, but I'm not taking the bait, as you can see.
Okay, fair call. Let's work with the actual numbers. Okay, fair call. The 5,500 to 6,000 crore. But broadly, you believe that the trajectory of margins is sustainable without getting into an exact number. You
100%.
Believe it's higher. Okay,
100%. Okay. And the reason for that, like I told you, is we have clear sight on costs, and we have clear sight on top line, and so the P&L as it is going to evolve throughout the year is pretty much crystal clear in front of us.
I was talking to somebody who tracks you very closely, and the person mentioned that there has been significant working capital improvement as well. I wasn't able to see it, but has there been, and what's led to that?
Again, strict financial discipline. This company runs on a very, very strict financial discipline. Like you said, we are debt averse. That's because it's fiscally very prudently run. And that's the same deal. I mean, we make sure that, we have the right advances. We make sure that we just have an eye on the working capital as we move forward.
Okay. Now, there is uncertainty around tariffs, but there is uncertainty around the negative impact on the tariffs as well with Donald Trump is what he's done overnight, right? For China, for Jerome Powell, etc. So my question to you is, are you guys really worried about what will, and maybe it is a good thing to be worried about, but I'm just asking, are you worried about what's happening in the US geography and what it could do to your US plans as well as export plans? Or do you believe it's business as usual out there for you?
I don't think business as usual exists anymore anywhere in this world. And I think you have to be having your eye squarely on what's going on in the US and everywhere else in the world, right? Now, the good part is, Neeraj, we have a manufacturing facility in the US. We have substantial manufacturing facility in India. And we are closely watching the moves around tariffs and then modulate our response accordingly. From our perspective, what we can do is we can, go in and dial up our production in the US or dial down our production in the US, and likewise for India, and make sure that we deliver again on the EBITDA control parameter that we are going to drive our business on.
Awesome. My final question, and I can ask you about battery energy storage, but maybe we'll do that another time, because in a conversation that we've had with your colleague and co-founder or your founder, Mr. Doshi, he mentioned that BESS could be as large as solar. So I'll save that for another day. But due to paucity of time, one final question, Amit. Global. Europe is coming back on capex of all kinds. My question to you is, would you believe that emerges as a large market for a player like you, which has got global capabilities and ambitions?
So Europe, we continue to have an eye on. At this point in time, it is a very small part of the overall pie. But we do believe that Europe has a huge potential, and especially for some specialty modules that we have, which are flexible in nature. And some of these niche products, we are sure, are actually going to have a very strong offtake in Europe. So you're right, very big market, which we have to have an eye on.
Well, wishing you all the best for that. I know today time is truncated, or would love to have a slightly extended conversation at some point of time, Amit, on all things solar, if you will, or maybe even battery energy storage systems. Thank you so much for speaking to us today.
Pleasure. Always a pleasure, Neeraj. Thank you very much.
Thank you so much. And viewers, thanks for tuning in.
Hello and welcome to NDTV Profit. You're watching IPO Adda, and the big IPO for this year is Ether Energy. It's one of the largest IPO coming after a few months because of the kind of market volatility which we saw. The IPO, which opens on April 28th and closes on April 30th, is priced between 304 to 321. It's a fresh issue of 2,626 crores and an OFS of 354.8 crores. So total size is little less than 3,000 odd crores, which is coming in. And at the upper end of the price band, the company is valued at around 12,000 crores. And joining me today is Tarun Mehta, who is the ED and CEO of the company, and Sohail Parekh, who is the CFO of the company. Gentlemen, thank you very much for joining us on NDTV Profit. Tarun, let me start with you. It was the much anticipated IPO, but you had market volatility coming and this, giving a pause. And then you have cut down on your size of the IPO as well. And also, if you can take us through the valuations.
Right. So, we began the book building process a few months back. While there was obviously volatility for a while, bankers advised us well on both timing and the price. The size we've largely kept intact. Recent quarter's performance gives us a lot of confidence. If you see our Q2 and Q3 performance, so we decided to reduce our debt repayment because we have more conviction on our accruals than ever in the past. But otherwise, all our growth investments have been kept intact, and that's how we are going in the markets. Volatility aside, I just want to make a comment. What we saw on the road when we went and met investors and told our story is that the conviction on India consumption, conviction around India electric, and especially two-wheeler electric, was very, very strong. And that's what gave us the final conviction to launch the process.
Mm-hmm. the last round which happened, in which you had given it to the India-Japan fund, the adjusted price was around 267. You are coming at 321 rupees at the upper end today. Give us a sense of the valuation and why you've decided to take a premium over the last round, given that things means we are in a very uncertain time here with respect to global markets and foreign flows. And while there is a conviction with respect to electric vehicles and two-wheelers in particular, the two-wheeler category is also facing a lot of headwinds in terms of backlashes with one of your competitors.
See, the overall two-wheeler story, I think two-wheelers had a great FY25. Dispatches and retail grew at a very healthy pace. Scooters particularly continue to be very strong, which is where Ather is largely focused today. The electric scooter market, however, obviously grew much faster than the petrol scooter market. So this remains one of the strongest growth stories in our industry today. So I think all those pieces add up really well. Particularly for us, in the first 3 quarters of FY25, the data of which is there in our prospectus, you will see an incredibly strong growth, and that's what's giving us a lot of optimism and excitement. On the back of a new product launch, Atherista, which is this new family convenience scooter that we launched, we've seen a significant uptick in volumes, market share, and that's what's also driving a lot of store expansion for ourselves. So the last few quarters have been very satisfying from a business growth perspective, and what's ahead for us is a lot of expansion again on the back of a new product. So this is where our conviction comes from. On the price, once again, I'll say the same thing. That is nobody can time or nobody can predict the market. This is down to the advice, the solid advice that our bankers have had as part of the book building process.
Sohail, you're raising 2,600 odd crores. Can you give us an idea of where it's going to be deployed?
So we are very focused on the growth that Tarun talked about, with the expansion in distribution, with the solid response that the company has received on Rista, our new convenience scooter. We are seeing very strong demand. On back of that, we are working on new platforms. We are working on strengthening our R&D. We are working on further brand building. So as you would have seen, the bulk of the investment is going for our new plant in Chhatrapati Sambhajinagar. And we continue to invest in R&D. That is our strongest point, and we continue to bet on that with a host of development happening across product, across platforms that we have already laid out in the story. And we want all of us, we urge all of you to look at the story, look at the document, and see how strong conviction is in our strength and strategies that we have laid out.
It's coming through in the kind of investments that you're planning as part of and the proceeds which are going to be used, because you are the 4th largest player after Ola, TVS and Bajaj. And the kind of conviction that you're putting in investing in new capacities and building new capacities, gives confidence which you have that you're going to grow at a much faster rate. So give us a sense of the kind of the growth rate that you've been growing at, and going forward, how do you plan to ensure that the market share which you have between 10 to 11% at this point in time, it can be scaled up further?
Right, so you will see that with Rista launching last year, last FY25, our volumes have shown already in the first 3 quarters a very healthy amount of growth. There's an almost 40% growth in volumes in the first 3 quarters. And remember, Rista launched just in the 2nd quarter. So there's been a very significant jump, which has also led to an overall better market share. So if you see a recent month's performance, and this data is public on the Vahan portal, you will see the business consistently hitting 13, 14, 15% market shares. We continue to solidify areas where we are strong, for example, like the south of India, where we've been one of the, if not generally the largest player by volumes in all the 4-5 states put together. And with Rista expanding in a big way in the non-south markets, particularly West and North India, where recent successes and volume and market share growth in states like Maharashtra, Gujarat have been very heartening. So this is where growth is coming from. The biggest lever for us is expanding our distribution. And we mentioned, we've walked people through this in our document, in our prospectus, that Ather's achieved this kind of market share and this kind of volume despite a fairly limited distribution in the past. Our distribution was limited because we had a single product which was more focused in the southern markets. But now with Rista, a very large part of the country opens up to our products. We believe that the Ather brand is going to be equally successful there, and which is where we are very bullish about adding new stores and expanding rapidly.
You spoke about distribution, 280 odd experience centers that you have in India. Where do you want to take these experience centers? Because your competitor is talking about 4,000 touch points. How do you plan to do it? And I remember our interaction earlier when you said that distribution plays a key role in expansion and market share. And you've been able to do that in Maharashtra and Gujarat with the recent launches. So how do you plan to expand your touch points across India?
So on distribution, we have pursued a capex light strategy. We do not, for the most part, we don't run stores ourselves. This also keeps our operations simple and also has more partners working with us. So it's a dealer-led model where dealers put in the capex and dealers invest in the opex. This also makes for a relatively easier expansion with their support. Where we are largely expanding, I would say once again directionally, it's the non-south markets for us. You would notice that our throughput per store, if you were to calculate, has been substantially higher. Distribution generally is linked to how many products you have. The wider your product portfolio, easier it is to have more stores that can be profitable independently. And generally as a company, we've been very focused on profitability. This has been something we've kept right up in our radar. Adding stores, one of the most important question we ask is this store going to have profitability in the near term? And only if the answer is yes, do we progress ahead. With Rista, a lot of stores, those stores are now saying yes, which is why with dealers, we are adding a lot of distribution, especially in the recent months.
Soil, can you come in here and give us an idea of the kind of break-even point?
One more point I want to add here.
Yeah.
Yeah, sorry, just one more point I want to add here. India is a very large market, and I think our ICE peers have really given us a glimpse of the kind of potential that we can have with distribution here. Also, India is a very large market with very strong dealers and distributors. And I think many of them have shown an enormously strong interest. Some of the strongest dealers in the country are today Ather partners. So it's on the back of partnerships like that we're very bullish about expanding pan-India super fast.
So,
and just to add, at Ather, we are very, yeah.
Go ahead.
Yeah, so at Ather, the right unit economics and getting the operations right has been our foremost priority. And if you would have seen, when we started, we didn't started the selling of the product very aggressively till we got it right in 2022. And that strategy continues. Our top focus is getting an unit economics right and improving it day by day on the back of 46%, which is more than almost half of the workforce which we have deployed for just doing R&D and only focus on scooters, right? So this, I mean, you would have seen, right, in the numbers that we have filed, we have gone from 9% to 19% in adjusted gross margin. And this is on the back of solid, like if we have to take our flagship product, 450X, right? In last few years, we have done 31% improvement in the BOM. And the warranty costs are dropping year on year. So the product, the quality is really shining through with Rista, which is a low-cost platform. In fact, our BOM are lower than the 450X, which is our performance scooter. This has given significant improvement in the margins, along with obviously the cell cost reduction, which everybody in the industry have the benefit of. So with this, I think we have a very, very good margin structure even today, and very, very less reliance on the subsidy. And we would say that today we are very confident internally with what we have achieved so far, that the margin story is looking very solid.
Soil, Tarun spoke about the fact that they look at, you guys look at store expansion or distribution from a point of view of whether how quickly a store can become profitable. Can you give us an idea of normally what is the break-even time for a store to become profitable, or what is the break-even period for any store or any new store?
Sure. So I think you would have to do your own research, because we cannot share that data because it's not a public data. But if you had to do our own research, or anybody has to do that research, you would see that the throughput per store is significantly higher. Even what Tarun talked about, our expansion in South and the leadership that we that we have there, you can compare us with the competition, with the overall industry. What is our stores count, whole of South put together, and you will get a very natural answer on that.
One of the big questions which many investors would also be asking you is about the cash flows from operations. When do we see cash flows from operations turning positive, and what is the path to profitability?
You want to take that, Tarun?
Yeah, sure. See, so profitability is always two parts of the equation. How is your unit economics trending and how are your volumes growing? Our focus that Sohail highlighted on cost reduction, material cost reduction, and hence margin expansion has been incredibly strong, which is how our margins have almost doubled from 9 to 19% YTD and in FY25. And volumes have also grown. You will see again a Q3 data that volumes have grown almost 40% in just 3 quarters over previous 3 quarters in FY24. So both parts of the equation looking very strong. Our EBITDA losses have also substantially come down in FY25. So we're feeling very bullish about how we are moving towards profitability. And generally, Ather has been very focused on capital efficiency and capital overall. In fact, we talked a lot about this in our prospectus. We like taking, we always made decisions that preserve our flexibility, preserve our agility. We do not lock a lot of capital in singular decisions. And I think that's worked very well for the business, which is why we've been generally relatively more capex light than many other approaches in our industry. And I think that's worked out very well for Ather. Investing in tech, investing in product has paid out the best dividends so far for us with solid premium positioning, which gives us a selling price premium and a lower cost structure because of the investment in R&D, which overall expands our margins quite healthily. So we feel overall this takes us in the right direction, hopefully very quickly towards profitability.
And what I would like to add to what Tarun said is, you see our Pro Pack, right, which is a one-time accessory sale that we do.
The software pack that we have.
Software pack that we have. So that's an 86% attach rate. So everybody coming to the store, if 100 customers come, 86% of the customer opt to buy an Pro Pack. That has contributed 6% to our revenue and almost 53% in terms of an EBITDA. So I think that's a very unique thing, which is only Ather, where we are able to monetize this entire value proposition that we have. And this is what I mean. This is actually shows that we are actually able to monetize what we are investing in R&D as well.
Tarun, you're going to spend 750 crores on R&D, and your R&D spends range between 10 to 15% of your sales. Do you think that this is the kind of R&D expense which will be there over the next few years?
So just moving for a second away from prospectus and just my own personal feel, I feel as a country we need to invest a lot in R&D. Look at BYD across the border. I think if there's one thing we learn out of that approach, the time is there to not look at single-digit investments. The time is there to look at much larger investments. And personally, I really relate to that process. I believe investments in product, investments in tech, investments in R&D in a new tech industry like electric are going to pay dividends for the next 20-30 years, particularly in electric two-wheelers, where India possibly has a shot at becoming one of the most prominent players globally. So this could genuinely be a global play. Our peers in the industry keep talking about it, how India could be one of the best exporters. And I very strongly believe in that. So, and if you got to win a global game here, if you got to win a global game with a new technology business, you've got to invest in R&D. You should not shy away from it. Where we are putting our money, it's in projects like the EL platform, the new platform for scooters that we're developing. It's in things like the Zenith platform, a new platform for motorcycles that we're developing. And again, Ather is thinking not in terms of products, but full-on platforms there so that we can birth many more products on that platform in the future. We are investing in charging infrastructure. We are investing in new battery packs like LFP battery packs. And we obviously are investing in Ather Stack, our software on the vehicle, which is an important part of how the new experiences on the product come through. So we believe this remains an important cornerstone for how we differentiate ourselves and honestly how our entire industry is going to leapfrog global competition.
Tarun and Soil, it's been a pleasure talking to you today. Your IPO is opening on April 28th with the anchor book coming on Friday, April 25th. Price between 304 to 321. The company is raising nearly 3,000 crores, valuing the company at 12,000 odd crores at the upper end of the price band. Thank you for watching, and Tarun and Soil, thank you for joining us on NDTV Profit.
That's huge. That is a biggie. It's on.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
The second buy pick is a Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS. Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita, with me is Neeraj Shah. Quick check on where we are with regard to markets. 0.5% higher on the Nifty is where we're currently sitting at. And the Nifty Bank though not contributing much to Nifty. And that's a slight bit of divergence to what we've seen or what we've become used to in that sense, with the Nifty Bank really chipping in recent times with regard to the Nifty's move. So 0.5% up today nonetheless, which is a possible positive. Let's look at the intraday chart as well. And the Sensex, of course, has breached 80,000 sitting there. And yes, we're we are in decent shape versus how the day has panned out, because we are up obviously from the day's lows and up by quite a bit, around 180 points higher from that day's low, and that's one more positive. What's really driving markets higher are IT stocks, and let's look at the heat map. Likely dominated that top part, the top gainers with IT and auto. That's what we're seeing. 8% higher on HCL Tech on the back of numbers. Tech Mahindra, which has moved very well over the last few sessions, up another 4.5%. Wipro doing well for itself as well. Infi up 3+%, and you have TCS also up nearly 3%. So HCL Tech's numbers and commentary adding some bit of tailwind to some of these counters. Auto stocks also doing fairly well for themselves. Tata Motors up nearly 4%, M&M up 3+% as well. So that pocket, or those couple of pockets, doing well. Kotak, HDFC languishing, and that along with SBI, Axis seems to be dragging the Nifty Bank down. And that's basically how at least the top movers are shaping up. And IndusInd is up 1.3 odd%, something to keep in mind after the kind of move that we saw on IndusInd yesterday. The -3% thereafter followed by the clarification. So that one in focus as well. Let's look at how the advanced decline ratio is panning out. And let's look at it intraday. There you go. Not looking as pretty where the breadth is concerned. Nearly 1:1. It's gotten better. Initial bit of choppiness followed by the bears taking a bit of a hold. So broader markets likely are trending in a mixed fashion. So while the Nifty mid cap and small cap, if we can pull that up, are in okayish kind of shape. You're seeing a decent move of 0.8% on the Nifty mid cap. The small cap index absolutely flat, but there's a mixed kind of a move within the constituents. Neeraj, but it's dominated by earnings, at least the big moves. Something like a Vari is up and away in trade. HCL Tech as well on the back of earnings has aided the IT index. It's an earnings heavy kind of reaction. And broader markets are fairly mixed in that sense.
Yeah, I mean, very quickly, just a very, very cursory check, Harsh, before I give it back to you about for what's happening per se as a broad factor. So Vari clearly stands out. We'll talk about that with Mihika in moments from now, as well as with Shivangi, by the way. We'll ask her about this, even though the chart data might be limited. The cooling solution stocks, led by Havells commentary, I reckon, but Blue Star, Voltas, etc., are all down in trade today. So that's the bucket which is sulking because of what's happening. And some of these outward-facing sectors are, and the stocks there are doing really well. So from a Sona BLW, from the auto component space, I would reckon Bharat Forge might also be positive. I haven't seen that stock, but I would reckon that there should be optimism there. To a Persistent Systems, KPIT Technologies within the IT and the ER&D space, some very strong moves into these pockets as well, Harsh.
Right. So let's try and kind of sum all of that up, put all of it together. The Nifty is up for the 7th straight session, which is a big positive. We're seeing good traction pretty much at the latter half of April as we count down into the last week of April. Nifty IT is the top sectoral gainer and the largest contributor to the Nifty's gains, at least today. So Nifty IT taking center stage. Nifty Auto, Realty, Pharma also gaining a % each. So there's some bit of decentish kind of breadth as well in terms of sectors. The Nifty Bank and the PSU Bank are the laggards when you're looking at it sectorally. And we'll pull up the sectoral heat map in just moments from now. The breadth is negative. Broader market trends currently look mixed. Let's look at also last off. There you go. That's how it's shaping up. So consumer durables, but along with it, Fin Nifty is the key drag with regard to sectors. Neeraj.
Okay, let's get in Shivangi Shah, the analyst of equity derivatives and technicals at Motilal Oswal, to try and understand what to do in a scenario like this. Shivangi, good having you. Thanks for joining in. Your guys, you and Chandan, your optimism has paid off thus far, Shivangi. The question is, what now? What do you do with Nifty, Nifty IT, any of those, and Nifty Bank? If you had positions and if still not squared, should you square them off?
Very good afternoon, Neeraj and Harsh. Thank you for having me. So we've seen that the indices have played out quite well from the last 9 trading sessions. making higher lows consistently, and put call ratio over the last 4 sessions have remained above 1, which is also a positive indicator and a comfortable base formation by the put writers. So overall texture of the market is quite positive. Earlier in the week, we saw that the financials and banking were the star performers, but now IT and the other packs are also holding up and catching up with the rally. So of course there has been buying across board in the market, which makes the texture quite positive. And there has been a good cool off in the India VIX also, which is making the bulls very comfortable. So even today in the first hour, the decline that we saw, there has been a quick pullback move in the last 4 hours of the trading session, which indicates that the strength is going to continue for 24,650 odd levels. So this is what we're looking at for Nifty. So buy on decline to continue over here with a stop loss of 24,100 levels. This is the take for Nifty. Now talking about Bank Nifty, we've seen that of course today there has been some underperformance, but this entire market rally has been driven mainly by the financial space stocks, and we've seen that heavyweights which were earlier participating are now followed by the PSU, which have also contributed to some of the moves. But overall, again, buying can be seen across, the team, as I may say. But of course, we are looking at the more upside over here. 56,000 is what we're looking at, with a support of 55,200 levels.
Okay. What about specific ideas for the day today, Shivangi?
So of course, specific idea, I'm looking at TVS Motor as my first pick. We've seen that the auto rally, auto stocks have, started shifting gears over here. And this stock has witnessed short covering move led by long build up in the last 3 weeks. So of course, quite a lot of open interest activity can be seen here as well. And we have seen that, the volumes in the last 3 sessions have confirmed the price move. Even on a week-on-week basis, we've seen that the stock has surpassed its previous hurdle zones of 2720 levels. So looking quite positive, recommending a buy here with a target of 2870 levels and a stop of 2700 levels. Second up on my radar is one from the pharma space. This is Lupin that I'm talking about. This stock has, done exceptionally well, as compared to the other stocks in the space. And even on the long term, we've seen that this stock has been, performed quite well. Seasonality wise also, there has been a lot of action here. Now it surpassed its 50 daily exponential moving averages and looking quite positive. So, recommending a buy here with a target of 2170 and a support of 2050 level.
Okay. Shivangi, I would want one more view from you, but before that, let me get in my colleague Mihika to talk about what is arguably the stock of the day, and that is Waaree Energies. And Mihika, 17% for a stock which is not necessarily cheap. What explains this reaction?
Yes, the stock is up 17%, intraday high of 19%. It is actually around 2% away from the life high that it hit early in November of 2024 at around 3,116 rupees. And the 5-day uptick is over 35% on Waaree Energies. Now, this is mainly because of the optimism that built in for Q4. And Q4 was a strong show. When you look at the numbers, revenue up 36% on a year-on-year basis to over 4,000 crores. You've seen EBITDA see a 121% annual uptick to 923 crores. Margins have expanded over 880 basis points. In Q4, it stood at 23%, and net profit saw a 34% jump to 619 crores. Now, in terms of what helped the Q4 earnings, well, the top line growth was driven by a 53% uptick in production, which stood at 2.05 gigawatts, and margin expansion was one because of the higher top line growth, as well as a 25% fall in their stock purchases. In terms of your order book, 25 gigawatts currently, it's valued valued at 47,000 crores, and the order pipeline stands over 100 gigawatts, which is spread across worldwide. And they've also given an FY26 guidance. It's the first time the company is giving guidance. FY25 EBITDA was around 3,100 crores, but they've guided for an EBITDA in the range of 5,500 to 6,000 crores in FY26. Lastly, in terms of capacity addition, their solar capacity is expected to grow to 19.8 gigawatts by FY26-27 versus 15 gigawatts as of FY25. They're commissioning their 6 gigawatt ingot and wafer facility, which is under the PLI scheme, by FY27. Even the 300 megawatt electrolyzer manufacturing plant capacity 1 via PLI is expected to commission by FY27. And lastly, their entry into the lithium-ion cell storage area, which starts with a 3.5 gigawatt hour facility, will also be operationalized by FY27. So we have a lot of capacity additions coming in over the next 2 fiscals.
Very interesting. Stock, of course, a buzz, 15.5% higher. In fact, we spoke to Amit Pethankar, who's the whole-time director and CEO of Vari Energies as well. And, we'll probably get you a slice of that conversation shortly. But let's go across to Shivangi. Shivangi, what's, I know, limited in terms of chart and view, but is there any view at all that you can give us on Vari Energies? What should a holder do at this point?
Of course, there has been limited data that I can study over here for this stock, but overall, we've seen that the momentum in the last few sessions have been quite a lot, and we are witnessing, around about a good rally and a follow-up today as well. And overall, looking at this stock, this has performed quite well in the last 2 months, a good pullback from the lower levels as well. So definitely this is getting poised for a good move, but advice would be to take a stop loss and then maintain, because the volumes are a little shallow over here. But the next moves that we could expect is around about 3,100 levels, but closely watch out on the 3,000 mark as an important support level.
Shivangi, before we let you go, would do some injustice if I don't ask you views with regard to the Nifty IT and especially HCL Tech, which is really standing out in trade right today. What should one do?
So, Harsh, looking at Nifty IT, this entire index has been one of those indices that have, moved upwards to again fall in the last 4 months. So, of course, this move that we are, currently seeing, it's a short covering move. Of course, we'll have to see if it manages to sustain at these levels. Now we are, still trading in a lower top, lower bottom fashion on a longer time frame structure. Of course, there has been a good pullback from the lower levels, led by a good short covering move. But some of the stocks have actually tend to become lackluster after moving, after 4 to 5 trading sessions. So we'll have to see if it's sustainable. Of course, if I have to look at the entire pack, then Dixon is one such stock which is looking quite positive and has been resilient in the last 10 trading sessions. And the volumes have also been fairly good over here. So we can look at Dixon for the next potential target of 17,200 marks, and 16,300 would be an important support.
Okay. That's the view coming in with regard to both IT as well as Dixon Tech in particular. But so we thank you so much for joining us, Shivangi. We'll let you go on that note. In fact, thanks so much for taking our time, giving us those views. But time for the first management interaction on this show. We're focusing in on Puravankara. The stock was a buzz in trade yesterday. Today, another 2.5% higher on the back of that 10% move yesterday. The realty company has seen some sharp swings on the upside, so positive in that sense. And there was also a business update for Q4, which was less than impressive, slightly short in terms of what they had guided for. But likely that catch-up will happen in FY26. Essentially, that's really where the guidance is coming from. We're joined by Abhishek Kapoor, who's the group CEO at Puravankara, to speak to us about exactly that. Abhishek, hi, good afternoon. Good chatting with you. Harsh here. Abhishek, first off, want to understand how FY25 has panned out for you and contextualize the numbers. How much of the FY25 number gets carried forward to FY26 and how quickly does that translate in terms of pre-sales?
Harsh, pleasure to be on your show. Basically, if you look at FY25, the sustenance numbers have done very well. It's grown by about 22% in value. Out of the 5,000 crores, we have done 4,200 plus crores in sustenance. What's fallen short for us has largely been around new launches on account of, plan sanctions and approvals, which got delayed. And this is an industry issue that's happened largely starting from elections and post that period. So in the coming year, while the collections have been good, of course, collections went up by 9%. In the coming year, we're expecting to catch up. We had planned about 12.5 million square foot last year, of which we only took about 4 million square foot to the market. About 8 million plus square foot has been kind of spilled over to the next financial year. In the first half or first 6 months of the financial year 25-26, we are expecting to bring in the 6 million square foot, and we are hoping for the balance period with total of about 13 million square foot of launches in this year. We should be able to catch up on the lost sales for the previous year. So I think the cover up should happen, and I would like to believe that with the first 6 months, the second 6 months will see much more improved collections. So all in all, I think the next financial year should be a much better year for us compared to the 2025 year.
Okay, so point taken. How much in terms of a number impact, if you can quantify it for us, would the numbers change in terms of FY26 guidance? Where does that stand now post this little bit of rejig?
Look, we don't really give value guidance, but let me give you the area guidance, which is very clear here. We are looking at, so last year we did only 4 million square foot of new launches. And in the coming year, we are talking about 13 million square foot, of which 9 million is what we will open for sale, which means really it will be 3x of what we did last year in terms of new launches. To that extent, we are very optimistic with the pre-sales number for the next financial year. And of course, we have deployed significant capital in the last year, about 1,300 crores, where we have added GDV of about 13,000 crores. So some of that will also reflect in the coming year and the years after in terms of the kind of BD pipeline we are currently working on. So all in all, I think, the next year should show very good pre-sales numbers for sure.
Abhishek, when the cycle started, presumably in 2021, people spoke about how it's a 8-year cycle usually in real estate, and therefore we're at the beginning of it. Suddenly, I now see a lot of conversation around whether the cycle is already peaking. Just wondering, do you fear or do you feel that there could be some bit of slowing down, if not for you individually, then for the industry at large? And could your own growth rate be slower than, let's say, the average growth rate of the last 3 years for you?
Yes, that's a very good question. The way I'm seeing the industry now, I think there is, of course, prices have gone up, and I will kind of split it into two parts. I think one is the affordability and the ticket value at which people are buying. Because the prices have gone up, I think there was a general trend or shift towards larger units, and therefore, people affordability having gone up through COVID was allowing them to take larger units. And the wallet share was also split more towards savings and real estate versus today, where wallet share is going back towards travel and leisure and other expenses. So therefore, I think that one trend that most likely may happen is that you may again start seeing a reduction of size of units as a trend, and therefore the developers will start focusing on ticket value. That's one trend that I'm clearly seeing. The second trend I think that may happen as an industry is certain markets or certain micro markets may see a certain peak out of demand, because largely somehow the supply side both on account of price and account of typology of units and ticket value of units, has not been akin to the demand. And I think therefore it may see some amount of supply situation or oversupply situation. But those are more certain specific micro markets or market related issues where you may have some challenges. But otherwise, if I was to look at overall industry wise, I think the trend is very positive, and I'll share why do I say that. If you look at last year, right, more than 17 million square foot of commercial demand has been absorbed, right? And if you look at just Bangalore itself, we are looking at 23 million square foot of commercial demand. Now, what does that mean? And that means basically you will almost have at net basis maybe about 2 lakh jobs that will get created over next 1 or 2 years time frame. And as and when that happens, some of that demand starts to come in. And this is an annual absorption I'm talking about, right? I'm giving you just one example of Bangalore. And similarly, you have, different markets behaving differently. So I think, there is definitely a very, very significant end user demand. The economy continues to be strong. So I don't see that issue. The challenges that we may see as an industry will be market, as in micro market or city level specific. And I think that is something that one needs to look at deeply and understand where those challenges may come across, and then being mindful and careful for those investments or those buying decisions.
And Abhishek, last question with regard to pricing. Can you give us some color on what's evolving in various markets and what trends are you seeing in terms of pricing?
Look, I think pricing is not going to be going up the way it used to go in the past. I mean, we have seen high teens and early 20 kind of increase in prices. I think that period is over. Also, on the cost side, if you look at cost of metal, raw material, etc., we're not going to see that kind of steep increase, which may demand developers to pass on that kind of price increase. And therefore, to protect your margins largely on account of inflation, also, specifically in projects where you have new launches, and then as the project develops, you see meaningful appreciation, almost 50 to 70% appreciation over the 4 to 5 years time frame when the project get completed. Those are appreciations that you will continue to see. But overall, if I was to just look at the industry average, I would assume that you would do about inflation plus 2 or 3%, more likely single digits, as an industry average. Of course, there may be micro markets where you may see there's really shortage of supply, and they may see some meaningfully higher, price increases, or certain markets which may actually not see any price increase because there's too much supply. So those are things that one needs to look at. But on an overall industry average, I would more likely to land with a inflation plus couple of percentages.
Very interesting. Thanks so much, Abhishek, for coming in, speaking with us. Insightful as always. And thank you so much for those views. What we'll do, we'll slip into a very short break. We'll take an early one, and we'll bring you all the chatter from behind dealing rooms in our segment Heard on the Street on the other side of this very short break. Stay tuned.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The second buy pick is a Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 6770, 6780 odd range for the day, it can give you a good range breakout. And the targets would be towards 6900 to 7000 level.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Welcome back. You're watching India Market Close here on NDTV Profit. That time of the show when we go across to Somit Sarkar, who's here with all of the chatter from dealing rooms that he's been hearing today. Somit, what have you been hearing?
Well, firstly, dealers are indicating that there could be some small basket buying that we could see in the last half an hour of trade. The amount is still not known, but it is potential, or the dealers are indicating that might happen. Stock-specific announcement, firstly on Bajaj Finance, dealers are indicating that large HNIs have been selling this counter ahead of the Q4 numbers, which are next week. But then on the flip side, there's also a buzz that there could be a potential bonus announcement that could come in from Bajaj Finance with the results. So keep an eye out for Bajaj Finance in trade. Dalmia Bharat is another stock where dealers are indicating or suggesting their clients buy the dip strategy here. Now, dealers are saying that the price hikes that the company has taken in Q1 could result into a strong management commentary or strong outlook commentary that could come in from the management post the numbers. Apollo Tyres, now there's a buzz of a positive corporate development related to related to its European operations of European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm. And lastly, select FMCG names that have been in focus: Tata Consumers and HUL. Positional buy trades is what dealers are saying. Smart investors are taking ahead of the Q4 numbers for both these counters. I guess Tata Consumers will be reporting its numbers today, and HUL will be reporting its numbers tomorrow in the first half. So keep an eye out for Tata Consumers and HUL as well.
Well, interesting, Somit, especially from a perspective that when you spoke about IT yesterday, it seems to have played out very, very well.
Yes, I said it was the only sectoral loser.
You can actually be a tech analyst as well. But yes, so that one's worked out pretty well. So this basket buying that you're talking about, likely on the index more so, or
actually I seriously don't know whether it will be on the index or stock specific, and the amount is also not known, but there could be one in the last 30 minutes is what I'm getting the indication.
If it's large cap led, then it will have its impact on the index any which way, so it could be interesting.
Could be,
well, maybe some bit of it has happened in some of the IT names. If not, I know Somit is saying in the last half an hour,
but just look at that index. It's gone bonkers, literally.
4.5%.
4.5% higher in
In
trade.
fact, Sona BLW is also one of the counters that you should watch out. It's up 5.5% despite that BOFA downgrade, because there was some positive commentary that has come in from Tesla in the conference call. So that has also perked up Sona BLW.
Yeah, I think all global focused auto companies are doing well. All group of businesses, because you see that movement happening in Bharat Forge, you see that movement happening in KPIT Tech.
Right.
So I think that, I mean, KPIT Tech is not an auto Ank, but an auto ER&D company, and therefore I think some of those stocks are doing some really good moves. Interesting. We'll watch out for the basket buying as well. Somit, thanks so much for putting that into perspective. So that's the herd on the street. Just wondering, Somit, did you choose the music for?
No, I did not.
Okay, but it's very catchy, I must say. Okay, just paid attention to that today. Let's get in Kush Bora, founder of kushbora.com, who joins us right on the show with the technicals. And Kush, good having you. Thanks for joining in. And Kush, one very, very good call in the peak of the Bank Nifty uptick yesterday to call out that it is looking stretched and one should book profits, because that would have held people in good stead. So kudos on that. What does one do now if they haven't done it? Part one. Part two, Nifty IT and what's happening there. Give us a sense.
Hi, Neeraj. First up, very good afternoon. Thank you so much. I think you're being too kind.
It was a good call. It was a good call.
In fact, Neeraj, I'll probably take it a step further now that you've mentioned. In fact, I said let's go short on Bank Nifty around the 55,700 mark. So, and we did initiate, a buy put, call as well on our advisory yesterday on the Bank Nifty. While that stop loss was triggered by just a very thin margin because of the gap up opening, if anyone did hold on to that, then it's reaping good rewards right now. So, as I said, thank you so much. The reason I said I'm being you're being very kind is because we did miss out on about 300-400 points on the Nifty and about 1,000 odd points on the Bank Nifty because it seemed overstretched for a while now. But that is more of an opportunity loss. I'm glad that the short trade is playing out rather well. Still, I would say, I wouldn't really call it a very comfortable zone on the Nifty, on the Bank Nifty. To go out and create fresh long positions, I would be more comfortable on declines for Nifty. That level comes to 23,800. For Bank Nifty, that level comes to 54,400. And it might seem like those numbers, those levels are quite far off. But in a market and in a situation and a time like this, it's not really surprising that if indices do come down to those levels, even if it is just for a profit booking level. Let me reiterate that I remain bullish on the Nifty and on the Bank Nifty, and I've always said that if you've got long positions, continue to hold on to them. It was just a fresh trade that I've been avoiding for the last couple of days, just because the risk reward ratio didn't seem quite favorable.
Okay, what about picks, Kush, for the afternoon?
Sure. Just before that, I think you also mentioned Nifty IT. Just a quick word. Yeah, a quick word on that. While I'm still not constructive on Nifty IT, it's had a good run. If you see in the last week or so, it's taken support. The index itself has taken support near the 78.6% retracement level. That is to say, it's taken quite a beating and it's rebounding from there. When will I turn constructive on the IT stock per se? It's after this expiry. What we are seeing in the last couple of days could well be attributed to a short covering rally over the last 2-3 sessions. Given that we've seen a very heavy shorting on IT stocks, we know that that was a consensus trade playing out. If there wasn't anything else on the street, everyone was at least aligning towards a short IT kind of a call. So if this continues after tomorrow's expiry, then perhaps there is a case to go long on IT. But up until then, I'll hold my horses. Now, as far as the calls go, I've got a mix of a long and a short. On the long side, I've got United Spirit. Could move over the last month and a half, perhaps even a little longer. It took support near the 200-day moving average mid-March, but from ever since that level, it's just rallied one way. So on the upside, you're looking at targets of 1599, 1625, and 1545 is where you place that stop loss. On the short side, I've got Siemens. You do see the stock up about nearly 0.75% today. The only reason I can attribute of two of them is that the stock is rebounding from oversold territories, and also like IT Pack, this is perhaps seeing the expiry play out and hence some rollover activity happening, keeping the stock afloat. Other than that, structurally continues to remain weak. You could go short on this for the May series. Targets 28.25 and 27.55 on the downside, 27.75 on the downside, and the stop loss is at 29.25.
All right, so those are cautious calls for this afternoon. Let's though switch focus, move on, talk a little bit about fundamentals. HCL Tech posted Q4 numbers, and although profit of the company is down 6%, but it's largely in line with what estimates were suggesting. Puneet's here to break down the numbers itself, because stock is perked up and it's in fact pulled all of IT up with it. Puneet.
Well, definitely. I think it's, lending a hand to the mid-cap players as well. 5 IT earnings tomorrow, a couple of today as well with LTI Mindtree. But essentially, we spoke about the results a lot. 1% revenue growth, margins were impacted due to salary hikes in this particular quarter, and net profit, as you rightly said, down 6% for HCL Tech. But overall, I think there are 2 key big highlights also in this particular result. The one was deal wins. $3 billion of deal wins in this particular quarter. For the full year of FY25, we've seen deal wins now at $9.2 billion. And the second was the guidance. They maintained a 2 to 5% constant currency revenue growth guidance for FY26, and that specifically was in line with analyst estimates. How it differs is that for Infosys as well, the guidance was expected to be 2 to 5%. It's coming at 0 to 3%, and I think that is the big difference of performance of HCL Tech that's impacting all the IT stocks on a positive side as well. I also just want to highlight a couple of brokerage notes on the key aspects from these ones. JP Morgan has upgraded the stock to an overweight. Target price is now 1,750 rupees per share, and one of the major things that they've said is that stock trading at 4% dividend yield, 6% free cash flow yield is one aspect, but growth leadership as well as rare visibility of growth, that was one of the major things coming out of the particular report. They've also said the signings and large deal ramp up provides visibility of growth going forward, and similar view from Macquarie. They actually have a higher target price of 2,160 rupees per share. And the one major thing they saw that, and the company commented in earnings conference call, that Q4 saw no tariff impact essentially on any kind of deal wins, and actually 50% of deal bookings were done in fourth quarter actually happened in March. So overall, very positive, in terms of numbers, which are in line with estimates. But I think guidance as well as commentary has, perked up the stock to a valuation of just a little bit over, players like Infosys at around 22 to 20 times price to earnings. But, it's doing a huge favor for all the mid-cap IT companies that are expected to report results over the next couple of days.
Thank you so much, Puneet, for breaking that down for us. Opportune time to bring on board Samir Dalal, Natwarlal and Son stockbrokers, coming and speaking with us on exactly this. Samir, let me start off with, the one big result which has moved markets today, which is HCL Tech and the numbers. What do you make of HCL, the commentary, and the larger move that it has led to today? What's the sense that you get from all of this?
Okay, so first up, let's say that what I heard Kush saying earlier, that there was a bit of shorting in the market in IT, and I think that is a little bit of an unwind that's happened there. I have to agree, because honestly, if you ask me, the results were nothing spectacular. The guidance, although in line, is not spectacular. When you're talking of a company growing its top line by 2 to 5% in constant currency, let's assume a currency depreciation anywhere between 3 to 5%. We're talking of a 10% maximum on the top line growth. We know there could be some margin pressures given the fact that competitive intensity will also increase. Plus, US, Donald Trump is obviously going to ensure that more jobs happen or at site rather than offshoring it to India. And if that sees some momentum somewhere, that puts pressure on margins, then what are we giving this company 27 times or 26 times earnings when their growth is going to be in mid-single digits, right? So for me, the PEG is really expensive. So yes, we've seen a bump up because probably there was a lot of negativity around. There were some shorts and they probably run for cover. But if you ask me if it makes an investment case at this point of time, no, I don't think it makes an investment case. Yes, the dividends are decent. Yes, the cash flows are decent. But then we buy stocks because we want to see growth momentum, right? India is the growth story. So if you're a low risk investor and wants, happy with the 5-6% dividend and maybe a 3-4% upside in a year and a half, one can make an investment at this point, especially after the run up. But otherwise, I think there are better opportunities than IT in the market at this point. Not as convinced, even though numbers were quite okay and guidance was actually 2 to 5 is fine, but I don't think that's anything exciting when you talk of Indian companies growing at 15 to 20%.
And Samir, could be a yes or a no answer. This is despite the fact that Nifty IT has actually fallen 33% from the highs, and the bounce back today is just about 4-5%. So your view remains despite the fact that we're probably 20% down from the highs on the Nifty IT.
Yes, so like I said, I'm more interested in getting returns over a 2-year period, which are going to be well ahead of 15 to 18%. I don't think I'm going to generate that. So I'm not in the camp to go out and buy it, even though the stocks are down 20%.
Point taken. Okay, Samir, a couple of other stocks which are moving around, and I'd like to talk about those themes as well. One is, while the banking pack is not doing as well today, you have something like an AU Small Finance, which is really standing out. Numbers were okay from an operating perspective. They were a decent, or rather slightly better than decent, to give them credit. But on the bottom line and on the ROA front, it's not reflecting. I wonder what your views are with regard to an AU. Of course, traditionally has traded at maybe 4 times price to book, trades at at a supreme deep discount versus that. But what's the sense like?
So, if you look at the numbers a little more closely, the reason the ROAs were not as good in that space is because they increased the provisioning coverage. The gross NPAs have not risen, right? So that is a big positive. When you are able to generate decent profitability even after making your higher provisions, which ensure your balance sheet gets stronger, that's a great thing. And I think some of the stronger banks have been doing that. And that, I think that eventually pays dividend later on. Simple case in point, ICICI Bank and Axis Bank did that activity maybe 3 years ago, and look what's happened after that. So once the recovery start, I'm not saying AU Small is going to get a lot of recovery because some of their NPAs are to the unsecured side with low. That means collateral not being there. Getting the collection efficiency back up and getting the write-backs will not be as easy, but at least the pain points will not be as significant. Also, if you see in the books this time, the unsecured portfolio has actually gone down a bit. So that's more secured portfolio, but that also means that yields will be lower, but it's kind of a safety basket, right? So you have to take a call whether you want the higher yields with the unsecured or you want to take the slightly lower yields and have a secured portfolio. I think they've taken a call to have a more secured portfolio growth, which is a good thing in a way. But will it go back to its 4 times price to book? I don't think so. I think it's very difficult in this point of time for banks to trade very, very expensive. AU is not our top pick in the space, but the numbers were decent. And I think going forward, they will do well. But like I said, it's again not the number 1 stock that we recommend in the space.
I wonder if Wari is that one, and we'll talk about that with our guests. But hear out what the management had to say after the EBITDA grew multifold in Q4.
Well, there's always room for better, Neeraj, and that's relentless pursuit of excellence and performance that's what we at Wari try to do. But a great quarter for us and a great year for us. I would say almost a breakthrough year. And the primary drivers for that have been the demand and the customers and the trust that the customers have bestowed on us, the financial capability to put up factories and capex, and then of course to execute those projects at scale and at speed, and then ultimately deliver to the customer. I think that's been the not so secret sauce to get this thing done.
Yeah. Okay. So let me start with the good part, the margins. Okay. Let me start with the top line. Chalo. I mean, good quarter, good year. You have the capacities out there to execute. Is the order book addition looking accretive enough for you to be able to meet the numbers that you guys have been talking about? And parallelly there, the order book addition for Q4, was it a bit lower than what you estimated?
So the order book is very strong. It stands at 47,000 crores. And that again gives us the confidence that 26 is going to be a very, very strong year. Again, customers, the first reason, they have bestowed their trust on us. and that's why we have the 47,000 crore order book. We have new capacities planned, so 3.2 gigawatts of, and you have been to the Chikli facility. We are going to have 3.2 gigawatts of addition to our module capacity. Our 5.4 gigawatts of cell manufacturing is going to be fully functional. And we have the financial muscle to ensure that all of these projects move fast and on time.
Okay, Samir, any thoughts here on Waaree? They've kind of maintained that the margin numbers will continue to look strong, almost doubling of EBITDA in the next 12 months.
Yeah, so, I do believe that the renewable energy space and especially the solar space is something that's going to do really, really well. Where I think Waaree has one issue, right now there's a lot of talk that because China has these huge import duties, India will be able to export, and Waaree being the largest manufacturer of the solar modules, and as he said that the new cells capacity will be coming on, will be one of the biggest beneficiaries of the opportunity that opens up in the global US market, right? But you also got to take this a little bit with a pinch of salt, because you got to assume that at some point USA and China are going to come up with some sort of deal which is going to allow China to also export some of those products. And look, India is not as efficient when it comes to manufacturing on pricing as China has been. So we need to see how much the differential of tax remains between India and China, and if that Waaree can be a factory of that. But it's not purely on their own might that they're going to get this order. Second thing, what I find difficult with them is the valuation. Now, I don't deny the fact that if you extrapolate the new capacities coming on and the operational efficiencies, but you also got to realize that for the new capacities, they got to be able to sell that much. There has to be that amount of demand that they have put in the capacity. I don't think there is that much demand right now. I think there is an overcapacity of solar cells at the point of time globally, and prices have not been going up, in fact coming down. So I don't know how they're going to be able to maintain some of those margins. Yes, they are kind of a vertically integrated player. If you look at their subsidiary, which also sets up the solar cells, the solar parks and things like that. So they're fully vertically integrated, so they get the benefit that their whatever order that the subsidy gets, they ensure that they get the solar modules from there. But valuation discomfort, risks persist, and it's trading at a huge premium to a lot of the other solar companies. So I would personally not be looking to buy it at this point.
Okay, so that's the view coming in with regard to Waaree Energies. But let's switch focus, look at the world and the global markets and get some perspective. Michael Ingram joining us, market strategist, to talk to us about how global markets are doing. Welcome, Michael. Good afternoon. Harsh here. Good speaking with you. I want to first start off by asking you how there's plenty happening with regard to how US policy is shifting on a daily basis. How would you look at this? If you were to look at it from a 30,000 feet lens, how would you expect markets to move and react? And what is the end game at this point, according to you?
Good afternoon. Yes, it's an extremely volatile environment, and we did see a risk relief rally yesterday in risk assets, global equity markets up. Gold coming down from record highs. But the thing is, this comes only 24 hours after some fairly vicious attacks from President Trump on Fed Chairman Powell, calling him a loser, pressing again for him to resign. And of course, it was a reversal of this that we saw yesterday that caused the relief rally in the first place. The problem is there's no visibility on policy at the moment. I think the one thing that the market is taking away right now is to mirror what US Treasury Secretary Scott Bessent said, is that, current levels of tariffs being imposed are unsustainable. And I think that when analysts looked at what they were expecting from the Trump tariff revisionism, were not tariffs of 125 or 145%. This is what we're dealing with between US and China right now. I think we're now starting to see signals this is going to settle at around 10 to 20% on a global basis eventually, although that's going to be a long and bumpy ride on that negotiation, and they haven't even started yet. And whilst that's an improvement and it's largely in line with what a lot of analysts had penciled in a month or so ago, pre the so-called Liberation Day statement, it's still a multiple above the effective global tariff rate of 2%. So we're still going to see disruption to global trade. We're still going to see a reconfiguration of supply chains. We're still going to see an inflationary impulse and presumably a growth downgrade. That's certainly what the IMF was signaling yesterday. So all in all, a less supportive environment, I would say, for risk assets. As I say, we did have a reflexive rally. It's indicated again that perhaps we'll have another 2% rise in the S&P again today, but it's all feeling quite fragile out there. And as I say, it's the sheer volatility of policy at the moment emanating from the US and the reactions from it, which are really unsettling markets right now.
And therefore, Michael, let's for a minute assume that this 10 to 20% tariff were to apply. The impact of that globally, as well as in the US, will likely mean inflation in the US, higher rates for longer, and therefore bonds would be the place to be.
Quite possibly. I mean, I think the caveat in that at the moment is there seems to be a general risk premium being put on US assets, and that, and as the world's largest bond market, that means that it isn't necessarily the case that people flee into US treasuries or indeed any sort of US denominated asset. It's likely that we're going to see perhaps better performance from bond markets outside of the US in this kind of environment. But the problem is, of course, is that the other thing holding it back, and particularly from playing certain parts of the yield curve, is that we did say we're probably going to get higher inflation. So that is what is also holding back many central banks from cutting. It's certainly been a feature in the Fed's thinking for the last year and a half to 2 years, and the reason why the Trump administration is so unhappy with them. So it's a complex picture. I think that if you look at it from a multi-asset perspective, there are plenty of investors out there that have been saying that US, particularly US equity markets, have been overvalued, and they wanted to rotate to fixed income. The problem is inflation has been sticky. The tariffs are going to exacerbate that problem. Very likely, and so it prevents that rotation from happening. So if you're a multi-asset manager at the moment, I mean, you've come a long way from the Fed put. You've got a bit of a dilemma on your hands. You want to diversify from equities. You've already to some extent taken a bit of a hit, but the range of large liquid options, other than just sticking in short-term treasuries, which is essentially cash, is quite limited.
And therefore, would gold, silver, commodities feature as part of the basket if one were a multi-asset fund manager?
Yeah, I think that, you have really seen, I think, a multi-year rehabilitation of gold, certainly as an investment asset. And it's been up about something like 30% now this year, as I say, an all-time high within the last 24 hours. And you're seeing that in terms of where institutional portfolios are. You're seeing it in terms of futures positioning. Silver, obviously, it's a more complex picture because you have, a significant part of that of silver demand is generated by industrial demand. And, what I noticed yesterday is you see sort of gold-silver ratio hit a 5-year high, which is not only about people wanting to be in gold as a store of value, but also worries about the industrial activity, global growth, etc., depressing silver, and that's why that ratio is a 5-year high. If you were, maybe a trader would take a view and say, well, look, 5-year high, maybe we now pare down on gold and invest in silver. I think that's perfectly valid. I'm not sure that's the right thing to do, but yeah, I think that investors are certainly looking further afield. I think what happened in 2022, where there was virtually no place to hide, was a real wake-up call for multi-asset investors. I think this is a reminder that they still have a job to do in terms of effective portfolio diversification.
And Michael, how, in your view, is India set up in this on this chessboard. So from a global geopolitical standpoint as well as from an investment standpoint, how do foreign fund managers look at India? Give us your view.
Well, the way a lot of dedicated funds, so developing market funds, emerging market funds have looked at it is, are you overweight China or are you overweight India? Because those two markets tend to dominate the indices these days. Obviously, China has been quite a difficult sell for most institutional investors. So, even if India wasn't doing a lot of things right, India would still be a beneficiary of that. As it turns out, economically, India is doing extremely well. The issue I think that a lot of investors have had with India, however, is that valuations have historically been significantly higher. And there's a sectoral makeup issue there as well, which inflates the global PE of India as a market. But it's not optically cheap at the best of times, and obviously there's a very significant domestic component to price movement, which actually complicates things for a lot of international investors. But I think, in terms of how solidly built that, the stock market is in terms of economic fundamentals, sensible and transparent policies, etc. I think India has a lot of things going for it. And it's actually one of the few countries over the last year or so which hasn't disappointed economists. We're used to seeing the IMF and so forth downgrading economic forecasts as we proceed through every single year. And obviously the IMF did exactly that yesterday. But India has actually, generally has exceeded expectations. So I think, it's on a relative basis, looking pretty good. On an absolute basis, as I say, valuation, a little bit more of a question mark.
Okay, we'll leave it at that. Thanks so much, Michael, for joining us and giving us all of those views. Hope you have a great day. Of course, Michael Ingram joining us live from London. But onto our bull versus bear, quickly switching focus to domestic, and Havells in focus on the back of that. That's a big switch from global geopolitics to domestic consumption. But the company came out with their earnings yesterday, and it's pretty much a beat across metrics with regard to the numbers. Stock is down. Mahima's here to break down what's gone right and how the commentary is not looking so bright.
Right.
Mahima.
Right, absolutely. So it's the perfect day to do a bull versus bear for Havells because, as you mentioned earlier as well, that it was a strong beat across all fronts for Havells. But there are some things that the street is definitely not liking. In terms of growth, there was a revenue growth of 10%, EBITDA growth of 10%, PAT grew by 16%. But overall, the commentary coming in from management suggests that summer sales will get delayed due to the overall delay in summer, and that will hit the secondary RAC sales. So that might see an impact in the first quarter of FY26. In terms of margins, margins did improve this quarter, and that was led by switchgears as well as Lloyd, which has done very well this quarter on the back of a lower base, of course, as well. But management has said that inflation and commodity volatility do warrant for caution, and going ahead it might impact the overall margins as well as profitability. In terms of cables and wires segment, the revenue was up 21%, EBIT grew by 20% for the cables and wires segment, but overall there is increased competition being seen in cables and wires segment. New players also entering this segment might pose an overall threat to Havells where cables and wires segment is concerned. In terms of the overall segmental performance, the ECD EBIT grew by 22%, so good performer there. But overall lighting EBIT was down by 8%, which kind of overall pulled down the EBIT margins as well as the EBIT metric for the entire counter. In terms of what brokerages are saying about this, well, Nuvama has reiterated buy with a target price of 1890. On the other hand, Citi has maintained neutral, but slightly hiked the target price to 1900 from 1750. Nuvama has given a forecast for their revenue, EBITDA as well as PAT CAGR over FY28. For revenue it is 16%, for EBITDA it is 20%, and for PAT it is 22%. But Citi on the other side believes that there could be a better entry point considering the current valuations at where Havells stands. So this is the overall view as to, of course, how Q4 has panned out for Havells and what the bull versus bear case scenario is.
Well, very interesting. Mahima, thank you so much for breaking that down. Samir, thank you for being patiently with us. But what's the view with regard to Havells? What side of the fence do you sit on? Of course, a very high quality franchise also has a history of turning around businesses. What's your sense?
So absolutely, very high quality management, very high quality. They've grown their business, they've maintained good ROEs. Their product profile is huge. They cater from lighting to wires to refrigerator. I mean, name it. It's across the board. Havells is there, and so they cater to a lot of markets. But you got to realize one thing: valuations is also something, and they are trading. So I'm on the side of City. I agree. As good as the business is, as good as the management is, for me, the last 3 to 4 years valuations have just been absolutely absurd. I don't believe these can sustain forever because this is a very highly competitive market. Eventually, yes, it is a growing market in India for all of these products that they are in, but the competition is also there. Also, now in the wire segment, like Mahima was saying earlier, that there is going to be increased competition coming in from the Birlas and from Adani. And we've seen what's happened in the paint industry when large competitors come in a big way. So that could kind of be an overhang. So till valuations correct meaningfully, I'm talking of the stock declining another maybe 20% where I feel valuation comforts, I would choose to avoid Havells or any of the wire companies at this point, given purely that the valuations are very, very high. There's one company in the lighting and electronics and that kind of space, which we do have a positive view, is Crompton Consumer. It's gone through, I think, almost a 3-year or 4-year consolidation. We believe the opportunity for them is quite large. They've also acquired Butterfly Gandhimata, which allows them to cater to the kitchen segment as well. So their product profile is also improving. It's good management again. Valuation comfort there compared to most of the other players. So that is the only one that we think there is some juice for an investor.
Thank you for that, Samir. Kush, let me come to you with a view. And let me throw in a few more stocks into the fire for you. So you have, of course, you have Havells, you have Crompton, you have a Polycab, you have a KEI. Just give us your views broadly on some of these, because all of them seem to be moving a little bit in trade today. And what should one do? What's your view?
So, Harsh, a bit of a mixed bag. I don't think, we can paint all of these with the same brush. While Havells has had a good run today, you're seeing some profit booking. I would suggest for any kind of a fresh position, you might want to wait for the 1660 level to be taken out. There seems to be a resistance where this is making a double top. So if you have a position, you could well hold because it's had a good momentum going its way. But today, with a massive volume jump, the stock's actually cooling off a bit. So you'd want to perhaps wait out a bit. 1660, 1650 are the levels to wait for. Other than that, if you look at something like a Polycab or a KEI, both these stocks, after that serious hammering, are actually on path to recovery. The volumes haven't really picked up, to our comfort, but the price action certainly is suggesting that the base formation from a near-term perspective is in place. So if I were to pick, I would actually go with something like a Polycab or a KEI. As far as the targets go, on the upside, you're looking at a target of about a 5,800 and 6050 on Polycab. The stop loss for this one comes close to the 5370 mark, 5400, just to round that off. KEI is also taking out that psychologically important level of 3000, but the key resistance level was actually 2975. So a couple of parameters being ticked on the box for KEI. On the upside, this rally could extend to about 3130 and 3200 also. And the stop loss for this one comes close to the 2925 mark. So if I were to pick with this kind of recovery underway on both of these names, a Polycab and KEI would make the cut.
All right. Okay, so those are views coming in on some of these counters. The other one that's really doing well in trade today, Neeraj, something like a Niva Bupa. It was on our radar, on our brokerage radar today morning. It was a 905 brokerage. Stock is perked up 7%. I don't think that when I took it up at 905, I would have expected this kind of a reaction. And target price being 100, it was an initiating coverage note by Motilal saying that among health insurers, this one really stands out, both in terms of operational metrics, in terms of claims, in terms of the way they're leveraging technology, and in terms of their collaboration. And by operations, I mean in terms of product diversification as well as channel diversification, fairly balanced on all of those, along with a solid growth glide path expected. 25% is what they're penciling in terms of growth. Samir, I wonder what your view is, because insurance is one space which hasn't done as well, right? And Kush, I may not be able to take a view from you because chart structure is too small for you to give us a view. But Samir, from a fundamental perspective, both something like a Star Health, which has languished for a while, a Niva Bupa, and maybe if I can urge you to give us also a view with regard to life insurers, whether you have one.
So unfortunately, we don't have coverage on Niva Bupa or on Star Health. We do cover the general insurance space, and in that the ICICI Pru's ICICI Lombard is one of the companies that we think is actually going to be a beneficiary, because not only do they do the health part, but the auto part and the increasing there, the home insurance, the factory insurance, logistics insurance. We think the opportunity in India for insurance is still extremely large. Where they've been struggling is they've been having claims which are higher than the premiums that they've been collecting. And as they move up and the understanding of that comes, and as they're able to scale up the premiums and get their pricing correct, I think the profitability for these companies will grow quite significantly. So at the moment, ICICI is one of the companies that we Lombard is one of the companies that we do like. I don't have coverage on the other two. As for life insurance, like I've been saying, and I've had this discussion multiple times on your channel, we think the opportunity is incredibly large. India is a massively underinsured country. The insurance that we sell is generally more in the form of investments, ULIPs and term plan. I mean, not ULIPs and traditional plans, but the term plan policy where people just cover themselves for life, that part of cover themselves with a significant value. That part, I think, has a huge way to go. I think as that keeps gaining traction, what you will see is the profitability for many of these companies will keep increasing going forward. So we think there is an opportunity. HDFC Life has unfortunately run up. It's one of our favorites in the space, but it's unfortunately run up. ICICI Pru is looking interesting as well. But the top pick for us at this point of time is LIC, which is the government entity. And the reason we say that is there's a huge embedded value discount that is being traded at. We think as this keeps getting value gets unlocked, they are still growing. Yes, they're losing market share, but when your market is growing also and you're losing a little bit to increase competition, that's not a bad thing necessarily. You're still growing your book, and as long as you're growing and you have this huge embedded value and this brand value that you have, I think LIC will do really well. So that is our top pick. We think that could probably rally to 1,200 to 1,300 within the next 1 year.
Very interesting. Okay. Samir, I'm not sure if I caught you right. You own HDFC Life and it's unfortunately run up.
No, I don't own it. It's one of the stocks we like. We own it, yes. But I mean, to recommend a buy at 700 becomes a little more difficult.
Sure. No, just trying to humor you a little bit. Anyway, we'll let you go. Thanks so much, Samir, for joining us and giving us all of those views and perspectives. Also, Kush, while we are at it, and we're also joined in by Amrish Baliga, independent market analyst. Kush, I wonder what the view on LIC is, because Samir sounded extremely bullish with regard to LIC within that life insurance pack.
So, Harsh, the view on LIC is that consolidation could go on for a while now. It's such a big stock that it takes a while to build momentum, and we've not seen that in the recent past. Maybe just after listing, but other than that, we've not seen any kind of momentum build up in this one. Margin of safety is fairly high, so if you're one of those investors who's looking for a safe bet in your portfolio, then LIC is not not a bad pick. You've had the support around the 725 mark, or rather the lower on the 725 mark. The stock recovering gradually. I wouldn't pick this for a momentum play, but from a margin of safety perspective, yes, why not? In fact, on the other hand, if you do want to stick to this insurance play, then HDFC Life and Samir could not. I can say that that's still looking good. You could go ahead and add that in your portfolio. But from a risk reward perspective, what is looking even more attractive is ICICI Pru Life. So these are the ones that you'd want to keep on your radar if you're looking for momentum growth. LIC is more of a margin of safety play.
Okay. Ambrish, I wonder what the view with regard to auto is. You know, we've spoken enough and more about tariffs, but auto seems to have made a very strong move in trade today. Look at a Tata Motors, look at an Ashok Leyland, look at an M&M, Bharat Forge, all of them perked up in trade. What's the sense like within the auto pack? Is there value there to capture despite the kind of run that we're seeing?
I mean, there is value. I mean, especially if you're talking of Tata Motors, I mean, the way it fell post the tariff imposition. And now we are seeing that there could be some thaw because Trump clearly is talking of an understanding with China. I think we should sooner than later have a trade agreement with the US. All these things are actually helping the auto pack and especially Tata Motors, which was the most affected in that. So it's naturally that you'll see a much better sort of a bounce back in Tata Motors as compared to the others, because most of the other stocks, although they have a small export market, no one really exports to US. So I mean, one of the reasons why the others didn't get affected so much as Tata Motors. At the same time, we are talking of the domestic consumption story even going ahead. And if you look at the numbers are not bad, although we have seen the growth coming down. But this year, I'm talking of FY26, I think we should again see the auto market, buzzing again. So I think this should be a good time to buy. And I would say Tata Motors even at the current levels.
Okay, and what's the view like on IT, Ambrish? Before I go across to Puneet and he gives us the expectations for LTIMindtree, which is expected to come out with numbers later today.
See, IT, the view has been quite volatile, clearly based on Trump's mood. But as of now, it seems that, if you look at the earnings, I think more or less the IT sector has bottomed out. Most of the managements have been cautious based on the sort of news flows which has been coming from US. But that keeps changing, every other day. And as of now, it seems that it may not be as bad as what most of us had expected as far as the US order flows are going to be concerned. So I think at these levels, again, IT sector, one should start buying, especially the large cap ones, because I don't see much of a downside from here, but it could take a while longer, no doubt, to see those higher levels which we had seen about a year back.
And with that, let me actually go across to Puneet. LTIMindtree is one of those which will be on our radar later today as well as early tomorrow. What are the expectations, Puneet?
Well, thanks for that. So it's, one of the only Nifty Next 50 companies in the IT space yet to report results. A 2.3% growth in revenue is what is expected, coming in at almost 9,900 crores in terms of revenue. EBITDA expected to rise 7.5%, with the overall margins coming in at a 69 basis point rise at 14.45%. That's the key expectation of the EBIT margin. Net profit expected to rise 7% at 1,171 crores. Now, there are four key things you need to know about this particular results, and the key, what to watch out for when the results come. Salary hikes were largely done in the previous quarter. Hence, we are seeing some kind of growth in EBIT margins in this particular quarter. Any kind of INR depreciation, while the benefit is there, it is offset by the high pass-through of cost that the company might take, and the pass-through might be delayed. Now, four key things as mentioned. EBIT margin trend. Now, we've had a new CEO designate now, announced in January of this year. It has been actually down from 15.5% range to 13 to 14% now. So that will be one key thing. And the margin trend visible on your screen right now. The second one is deal wins. It's been roughly around the $1.5 billion mark, and that's the expectations from Incred as well, 1.4 billion. Something like HSBC is targeting somewhere around the similar range as well. So that will be the key thing. And the other one is constant currency growth as well. Now, constant currency has been around 2 to 3%. It's expected to slightly be a little lesser than that in this particular quarter, but if it is growth, it's going to be one of the positive ones as well. Finally, strategy by the new CEO is the key monitorable in this particular one, because we've seen whether it's focus on growth or focusing on taking the EBIT margins around a 15% range, but overall it's a decent result compared to the large cap. But commentary again being the key to watch out for LTIMindtree.
Okay, thanks so much for that, Puneet. Kush, if I can quickly have your view with LTIMindtree in particular and IT index overall.
Well, as I said at the beginning of the conversation, Harsh, IT, I will wait for the expiry to get over. If the moves sustain beyond the 24th, that is tomorrow, then perhaps I would consider, some sort of bottoming out, some sort of buying. But other than that, they do remain a bit of a sell on rise kind of a structure for me. As far as LTM Mindtree goes, good moves, good volumes in the last 3-4 sessions, conquering the 20-day moving average. On the way up, you're looking at a resistance near the 4650, 4700 zone. So if you have a position, continue to hold, and you might want to book out, if not fully, partially around those levels.
Okay. All right. Ambrish, if I were to ask you with the 1 or 2 pockets that you're really liking at this point, what would those be?
You're talking of sector-wise?
Sector-wise, stock-wise, either way.
Sector-wise, I still like specialty chemicals because that's where I clearly see that China Plus One playing out extremely well. Although some of the stocks have moved in the past couple of weeks, but then the way we have seen a correction in the last 6-7 months, I mean, there is a long way to go for most of them. And even the earnings, I mean, what we had seen in the last quarter was that the situation is improving for them. I mean, we have seen the margins improving. It was only a question of top line, which I think we should see over the next 2 to 3 quarters. So out there, I mean, my best pick would be Deepak Nitrite, SRF, Vinati Organics, Aarti Industries. I think all these are the ones which should be bought. And as far as the other sector is concerned, I'm clearly bullish on travel and tourism, and that too more of inbound. So here I would still be positive on stocks like Sami Hotels, ITC Hotels, Mahindra Holidays.
Amrish, interesting Mahindra Holidays though, because it's not really done too much for a really long time, right? Why this one?
See, Mahindra Holidays had done decently well if you're talking of the last year and a half, and then we have seen a decently deep correction, no doubt. But then what I like here, I mean, unlike the other hotel stocks, this is not really a hotel. This is more of a membership and sort of a closed sort of a unit. But I like the business model of Mahindra Holidays. Because what they do is they take the funds upfront from member. And typically, I mean, this may take me a while to explain, but typically, I mean, every key or every room has 50 weeks, not 52, because 2 weeks are meant for, maintenance. So 50 weeks means 50 members. And I mean, the average charges which they take from members for the 25-year holiday is 5 lakhs. That's the average. It's in fact more than that. So even if you take 5 lakhs, it's 2.5 crores per key. And the sort of quality which is there of Mahindra, it's good, but it is not super luxury. So it is nowhere close to even 1 crore. It should be less than 1 crore. So the balance remains on the balance sheet. And every year, they take annual fees for maintenance. So that's additional income. So that is cost to cost. Plus, you take a holiday, they charge you for all the, food, experiences, and all that. So there the margins are decently good. And the best part about this model is at the end of 25 years, the property remains there, but the member does not have any more right to use the property. And the same room is sold to a new member for the next 25 years. And that is without any cash outflow on CapEx. And now 25 years has been more or less been over. It's about 26, 27 years for Mahindra Holidays. And one by one, you'll have a lot of properties coming out like this, which would be free from further capex, whereas the cash flows which will come from new members would be without any, capex liability.
And is that a concern at all, Ambrish? Sorry, very quickly, I'll delve 30 seconds into this. In terms of adding new members, do you see that as a concern? Because that has been a bit of a headwind.
No, I really don't see that as a major concern. Sure. Yes, there has been headwind in the last 10 years. Yes. Basically because the hotel ARRs were not really moving up. So when you would compare the membership cost versus taking a holiday independently in a hotel, the difference was not too much. But now in the last, especially post-COVID, the way the normal ARRs have moved up, Mahindra's subscription model seems much, much cheaper now. So, I mean, I think you'll see more members coming in. And even otherwise, I mean, typically for like I said, for each room there would be 50 members, but you multiply it. I mean, you divide the rooms by the number of members. In fact, they are overbooked. So I really don't see much of an issue.
Point taken. Okay. Thanks for that take, Ambrish. Kush, BTST, STBT.
Sure. For BTST, I've got Coromandel. The stocks had a good run, now seen consolidating, which is again a very healthy sign. 2200, and thereabouts, those levels being taken out. The stock is sustaining above that. So on the upside, this rally could well stretch to 2240, 2280 levels. 2160 is very place at stop loss. So Coromandel as the BTST trade.
Okay. That's that's BTST out of the way. But couple of stocks expected to, or rather, couple of big FMCG companies expected to declare numbers tomorrow, and Tata Consumer is one of them, or later today as well. And Tata Consumer is one of them. Q4 earnings today. Interesting, what the company is expected to have is roughly a double-digit revenue growth, but profit may fall. Let's go across to Mahima for a perspective on what's happening.
Right, so as you rightly mentioned, revenue might see a double-digit growth for Tata Consumer, but PAT might decline, and this is on the back of rising inflation, and this might be in double digits as well. Now, in terms of estimates, revenue is expected to rise around 16%, EBITDA to fall around 2%. Margins could come at 13.4 versus that of 16% earlier, and net profit may fall by about 12%. In terms of the overall financial expectations, margins to contract due to raw material inflation. What to expect? Well, persistent weakness in urban markets to kind of impact the overall growth. Acquisitions will aid business, and tea inflation will overall impact margins. PAT will decline due to the amortization charge of the newly acquired business. In terms of key things to watch out for, well, impact of overall pricing interventions in the international market, plus growing competitive landscape and the pressure that is coming in from the unorganized sector is something to watch out for. In terms of what brokerages are saying with respect to Tata Consumer, well, Morgan Stanley has maintained overweight and hike the target price to 1255. Jefferies expects a revenue growth of 17%, and Nuvama says that tea to see a volume growth of 3 to 4%, and India business will see an overall growth of around 10%.
Mahima, HUL also expected to come out with Q4 numbers. What's the expectation there?
Right. So for HUL, the expectations is to have a muted quarter overall, muted performance where Q4 is concerned. Revenue may rise around 2.6%. EBITDA will be flat overall. Margins could overall see some downtick again on the back of raw material inflation. Now, what to expect? A flat volume growth, pricing growth to be ahead of that of volume growth overall. Margins to remain under pressure. Subdued urban demand will persist for HUL as well. Slow rural recovery is something that is being expected. Overall, raw material inflation again remains a challenge, and weak wage growth and higher interest rates and rentals could also overall impact their margins as well as profitability. Now, in terms of key things to watch out for, when pricing in key categories like copra, tea and palm oil, outlook for the ice cream business, as well as commentary on the recent development of sunscreen war is something to watch out for. In terms of brokerages, JP Morgan rates it overweight with a target price of 2259. They're expecting a revenue growth of 2% driven by pricing, and EBITDA is expected to mirror the revenue growth. Jefferies is saying that margins to see a 125 basis points decline due to raw material inflation, and a weaker than expected demand in key categories is something they're expecting. UBS has again rated it buy with a target price of 2,800, and outlook for second half of FY26 looks much more promising is what UBS is saying. So this is the overall view as to how Q4 could be like for HUL.
Thanks, Mahima. Thanks so much for this. Really appreciate. Kush, the FMCG names, sporadic moves. What's your sense?
In fact, Neeraj, I would say better than sporadic. You've seen a very steady recovery in a slew of names, and while Tata Consumer is definitely one of them, it's run up quite a bit, but definitely a buy on this kind of a strategy on Tata Consumer. Stellar moves on this one. So close to the 1120 mark, if you do get a dip, then you should consider for buying. HUL is one stock which doesn't really move as much. So if you're more of an investor looking to get an entry into some of these names, then you should consider. But over these two names, the two stocks that I like are Britannia. That's That's one stock. It's had a good recovery, comfortably above its near-term, long-term averages, good volumes, on the way up as well. Even as we speak, it's clocking day high. So I think Britannia is one stock to consider, in this fact. And the other one, which is making a recovery, and I think, you were speaking about it, in the morning show as well, perhaps today or yesterday, is Colgate. This one's also seen a strong base formation near the 2400 mark, a very strong recovery underway. So I think Colgate, from a risk reward perspective, should be considered. Not surprised that if it could move to the 2900 and about 3100 kind of levels, in the coming months. On the downside, you're looking at 2500 as a stop loss, so risk reward ratio is still very favorable. So the packs actually seen good revival. But if I were to pick two names, I would go with Britannia and Colgate.
Okay. So Britannia and Colgate it is from Kush's end. As we start wrapping up trade though, just trying to see what else is maybe shooting up, because remember IT was the key buzzword. A lot of other stocks have been quiet, if you will, nothing too dramatic. But well, Rolex Rings has had a bit of an up move. Inox Wind Energies had a bit of an up move. Bartronics has a bit of an up move. So those are stocks that are kind of zooming a little bit in trade. Kush, any thoughts on any of these, particularly Inox Wind and Inox Wind Energy? Because I believe yesterday you had mentioned that Suzlon may have been quiet, but the Inox twins were looking okay.
That's correct, Neeraj. And the same view continues, even now. While the move is not as exaggerated, I'll take that, because while the price action is relatively, and I mean relatively muted to what Suzlon did a couple of days back, the volume action actually is quite interesting. For the last 4 out of the 6 sessions, the volume's been significantly higher than the last 20-30 days average volume. It's knocking at those resistance levels of 175, 176. But with an ascending triangle formation in place, once the 176 mark is taken out, you could see the stock surge rather quickly to 182 and then about 188 kind of levels. So that's on Inox Wind. As far as Inox Wind Energy goes, this is also getting there, but the momentum indicators are a little flat right now. So if you want to accumulate, not a bad idea to accumulate. 135 will be your stop loss. On the upside, you're looking at 148 and about 155 as the target. But I would prefer Inox Wind. I would say that has a slight edge over the Inox Green Energy as I said, or rather the Inox Wind stock has a slight edge over Inox Green Energy.
Coach, also curious to have your view on a Sona BLW. Stock is up 6% in trade. I wonder what your view is on this one.
Harsh, I mean, this is one stock that's actually known for its volatility, both on the way up and on the way down. While it is, trying to break above the falling trendline resistance that started, some time back, I would be a little cautious on this one, because it has a tendency to give up these gains also rather fast. So if you have a position, you might want to continue to hold coming up near the 190, 495 resistance mark. I wouldn't go out and buy a fresh just yet. So as I said, volatility on both sides, not for the faint-hearted. Not for the faint-hearted, this one.
Not for the faint-hearted. Thanks so much, Kush, Ambrish, for joining us this afternoon, giving us all of those views. We'll let both of you go on that note. We're just about a minute from close. Let's look at where the Nifty 50 is settling in at. There you go, 0.6% higher. So we're creeping up slowly and gradually. 80,000 plus, we're almost touching 8,100 on the Sensex. Let's look at the Nifty intraday, because there's clearly no there's no support from the Nifty Bank. There you go, very close to the day's highs. 24,359, we're just about maybe 40 points away from that point. So surely a very healthy move from the lows of the day, nearly 200-point move from the lows of the day. So that's the one key positive. Let's look at the heat map on the Nifty, and IT stocks dominating at least the greens. When you're looking at it, IT and auto, in fact, along with maybe a Geo Finance and Sun Pharma as well, maybe some of those names coming in. What's not doing well are the financials to a large extent. Maybe a little bit of FMCG and ITC languishing a little bit in trade today. Coal India largely flat. and some of the heavyweights not really packing a punch within the Nifty 50 index. Let's look at the contributors as well. We've closed for the day, by the way, but let's look at the contributors as well. And there you go. So largely dominated, at least on the green side, by IT and auto, and on the red side by the financials. That's how it's played out. Let's look at the sectors which have done well, and except consumer durables, it's largely dominated by the financials. Media closing just with a mild negative bias. The Nifty IT up 4.5%. I wonder how this plays out tomorrow, because the Nifty IT, that's a big move. The Nifty autos closed 2% higher as well. And my reckoning would be that would be near or close to the day's high. So can we pull up the Nifty auto if we can? And let's try and understand as to how that move has been made. There you go. Very, very just off the day's high, and just look at the day's low, 21,947. We've closed nearly 500 points above that. So it's a very strong move from the Nifty auto as well. Let's look at the constituents on the Nifty auto and try and mark out. Okay, so those are some names, especially the heavyweights packing a bit of a punch with regard to the Nifty auto. You also had Tesla coming out with their guidance, maybe that too impacting some of the counters, not within the Nifty auto but within the auto pack in general. So some of those moves. But let's again look at the breadth of the market. Let's look at how the advanced decline ratio has shaped up as we've closed, because we did see some positive traction, and that is evident here. Just a mild reversal, and the advances just going above the declines by a wee bit at close. The breadth just about turning favorable, and that will reflect on the Nifty mid cap and small cap. Let's pull it up intraday, and we would have seen that from the lows of the day we've bounced back quite sharply, closing at the day's high. The Nifty mid cap 1% higher, and the Nifty small cap also around 1/3% higher, 1/4% higher, thereabouts. So that bounce from the low is what I'm looking at, and that's aided the breadth as well, the market breadth, which has turned better. Last off, let's pull up the BSE 500 top gainers, top losers. Those were some real movers, some of them on the back of numbers, but a Sona BLW featuring there on the back of Tesla's commentary, a Blue Star on the back of Havells commentary, likely, and then you have some movers, Voltus as well on the back of that. So that's how it's played out. HCL Tech, of course, sitting pretty on that BSE 500 list, the second from top gainer on the BSE 500. Let's look at what to watch out for, because certain factors will play out. You'll have US manufacturing PMI, services PMI data coming out. The UK data not looking as good, by the way. So we'll have to wait and watch out for the US data. Huhtamaki coming out with an interim dividend, and then you have the demerger of Sterlite Tech, which will be at play. And the earnings, of course, we are right in the thick of it, from Axis Bank all the way to Supreme Industries. All of those numbers expected. I'll be watching out for an SBI Cards as well. A Laurus Labs, which is expected to improve margins dramatically. We'll have to wait and watch whether that plays out. So plenty to look out for, actually, and a whole clutch of FMCG names, HUL, Nestle, and Tata Consumer, all of which will come out likely with their set of numbers. But that's all the time we have with you on India Market Close today. From Neeraj, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
second buy pick is in Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 levels.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
.361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
To India specifically, I really think India has a fascinating opportunity, because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bhogna. Now let's get straight to the show. US benchmarks indices extend gains for the 7th straight session. The Nifty ends above the 24,300 mark. The Sensex ends above 80,000 levels. Broader markets fare mixed. Mid caps outperform with gains of 1%, whereas small caps underperform. Sectoral action mixed on the Lal Street. IT emerges as the top performer, driven by stellar gains in HCL Tech. IT was followed by Auto, higher by 2%. Additionally, Realty and Pharma index jump over 1%. Nifty Bank underperforms today. Rupee weakens, falls to 85.42 levels, dragged by a resurgence in dollar index and increasing foreign inflows into equities. Kashmir, the heaven on earth in India, has been blemished by one of the most gruesome attacks on tourists in recent history. At least 26 people, 2 foreign tourists among them, were killed by a group of terrorists who emerged from the dense forest around the trekking paradise of the Baisaran Meadows in the upper reaches of Pahalgam on Tuesday. Now, Home Minister Amit Shah met and paid tribute to the survivors of the terror attack. He even met the survivors of the terror attack in Pahalgam and the families of the victims and assured them that perpetrators of the act would be brought to justice. In response to the tragic Pahalgam terror attack, Prime Minister Narendra Modi will chair a critical cabinet committee on security meeting at 6 p.m. today. The high-level discussion will involve key figures, including the National Security Advisor, the External Affairs Minister, and the chiefs of the armed forces to address crisis and shape India's security response. Jammu and Kashmir Chief Minister Omar Abdullah expresses condolences to those who lost their lives in the devastating attack on tourists, assured citizens that the Aviation Ministry is working in tandem with tourists to arrange extra flights. Airlines have sprung into action to support the Kashmir terror attack survivors and families. Sources say that in an urgent meeting held with airline operators, strong advisory issued against surge pricing. Airlines have been directed to maintain regular fares and extend full cooperation. As part of immediate relief measures, 4 special flights from Srinagar, 2 to Delhi and 2 to Mumbai have been arranged. Meanwhile, additional flights kept on standby to evacuate affected tourists and victims. A petition has been filed in the top court of India regarding the terror attacks in Pahalgam. Lawyer Vishal Tiwari filed the public interest litigation and demanded the issue to instructions to take all the steps for the safety of Amarnath pilgrims. The PIL also mentioned that immediate steps should be taken to evacuate all the tourists from the valley. HCL tech stock zooms to clock in gains of over 4% on guiding for a strong revenue growth in FY26 in constant currency terms. The company declared an interim dividend of 18 rupees per share, also announced that the company will ramp up hiring in FY26. Vardhman Special Steels has hit the upper circuit despite reporting poor Q4 results. This is on the back of a major capex announcement that the company will set up new greenfield steel plant for 2,000 crore rupees. New steel plant to manufacture special and alloy steel. Tata Communications Q4 profit grew multifold on the back of a one-time gain, while revenue saw a minor 3% increase and the margins declined. The impact is from spillover of cable cut cost rebranding of cloud services. Cyient DLM is gaining over 4% despite the Q4 numbers missing estimates and a muted order book trajectory. Organic order book excluding acquisitions declined for 10th straight quarter. However, the acquisition of Alltech had a positive impact on revenue and margins. Havells India stock melts despite a beat in Q4 earnings. C&W and Lloyd owned by Havells India reported strong revenue growth, while the EBIT margin jumped on robust switchgears and Lloyd outperformance. Brokerage firm Motilal Oswal has come out with a note for Niva Bupa Healthcare, and Niva Bupa is one of India's leading insurance players with a joint venture between True North and UK-based Bupa. Motilal Oswal initiates a buy call on the stock with a target price of 100 rupees. The company has emerged as the fastest growing health insurer, now driven by a well-diversified distribution model. Bank of America on the auto ancillary space says that near-term growth has been terrified, but not yet in the price. The brokerage downgrades are Sona BLW on highs and customer concentration. High US and customer concentration says revenue ramp-up the thesis of Sona has been pushed out. Maharashtra Scooter zooms to the fast lane after announcing Q4 results. Its revenue for the quarter under review stood at 6.65 crore rupees as compared to 5.18 crore rupees a year ago. Apart from the results, the company's board also approved a final dividend of 30 rupees per share of a face value of 10 rupees and special dividend of 30 per share of a face value of 10 rupees on equity shares for the financial year ended March 31st. Electric scooter maker Ather Energy has set the price band for its initial public offering at 304 to 321 rupees per share. The IPO will open for subscription on April 28 and close on April 38. The public issue includes a fresh equity raise of 2,626 crore rupees and an offer for sale of 1.1 crore shares. Under the OFS promoters, Tarun Sanjay and Swapnil Babanla, along with other corporate shareholders, will sell part of their stakes. Government extends anti-dumping on China aniline imports for 5 years. Aniline is used in pharmaceuticals, dyes and polymers. Now, anti-dumping duty amount remains unchanged from the previous levels. It is a neutral development for both domestic producers like the GNFC and user companies, Aarti Industries or NOCIL. UBS upgrades Chola Finance to buy from neutral and hikes target to 1,950 rupees from 1,620 rupees. UBS says that Chola Finance is the best combination of growth and return on expenses and forecasts 24% assets under management and 30% earnings per share growth over FY25 to 27. Frequent issuer Power Finance Corporation is in talks with investors to raise up to 10,000 crore rupees through the issue of zero coupon bonds by May. 4 merchant bankers told NDTV Profit. The discussions are ongoing. PFC is planning to issue these bonds either by the end of April or by May. They're also considering coupon-bearing bonds as well as merchant banker involved in the transaction. On March 11, the Central Board of Direct Taxes gave an approval to a state-owned entity to issue a deep discount bond maturing in 10 years. According to the notification, PFC will be able to raise a maximum of 49,546 crore rupees through this issue. Bank Nifty has been on an outperforming streak in the past few sessions, surging past the 55,400 levels. The index has moved higher by over 5% in the last 5 sessions. As per NDTV Profit research, the outperformance is driven by easing regulatory environment and liquidity and better visibility on asset quality. With reasonable valuations and pickup in the growth, Nifty Bank is on its way to reward investors. Additionally, FII buying returns, delivery-based buying has been seen. Another sector packing stellar gains is the FMCG index. The rally triggered by 5 key reasons. The first is significant correction in valuation since October. Second being tax cuts to lead to rise in demand. Third is lower interest rates to stimulate consumer spending. And the fourth one is investors shift focus towards defensive players amidst uncertain times. And finally, FY26 outlook is positive. Growth revival is expected. Ambit initiates sell rating on Swiggy with a target price of 310 rupees. It believes that Swiggy might have the first mover, but it's now just a follower. The company is lagging across parameters and it has a tougher climb in the quick commerce space. Ambit prefers Zomato over Swiggy from the food delivery space. Ambit initiates buy rating on Flair Writing with a target price of 400 rupees and an upside of 56%. Ambit believes that company's growth will be driven by premiumization, brand, pricing and distribution will be some critical factors for success. India will begin its 3-day bilateral trade talks with US under leadership of Commerce Secretary Designate Rajesh Agarwal. He will lead high-level negotiations with the United States Trade Representative team. Now, the focus of the trade talk will be reciprocity of the US trade with India, with terms of reference being finalized. The top agenda is greater market access for US goods like agriculture, lower baseline tariffs, and easing of non-tariff barriers. Blue Smart Mobility has run off a cliff and landed between a rock and a hard place. Amid fraud that's still unraveling at Gensol Engineering, a widely reported deal with Eversource Capital wasn't on the table in the first place. People aware of the matter told NDTV Profit. Separately, Lender Power Finance Corporation is now knocking on the doors of the Economic Offences Wing to start criminal proceedings against Gensol. A person close to the developments told NDTV Profit that co-founder Anmol Jaggi had sent out an email to Blue Smart shareholders this month. This email outlined 3 options to take the company forward, as it was preparing to shut operations in the face of increasing regulatory scrutiny on Gensol Engineering. LG Electronics has paused work on the initial public offering of its India unit amid volatility in the local stock markets. Bloomberg News reported on Wednesday, citing people familiar with the matter. Now, the South Korean company has told advisors it may postpone the local unit's IPO and may decide to resume work on it if market conditions improve. Now, Bloomberg sources say that it can't be identified because talks are in private. Now, in a big boost to central government employees, old central government health scheme websites will be deactivated from 28th of April. Now, as of Ministry of Health and Family Welfare will launch next generation health management information systems for central government health scheme beneficiaries. Market regulator SEBI's second-day market advisory committee will meet on May 7 to assess the impact of implemented F&O curbs. Now, a detailed agenda regarding this will be out soon. Members believe that some of these desired outcomes are achieved. Further curbs or over-regulation looks unlikely. US President Donald Trump conceded that 145% tariffs Americans currently pay for most imported goods from China will come down substantially, but it won't be zero. The American president insisted that it would be very nice with Beijing during the upcoming negotiations, but instead, that China would be ultimately be forced to agree to some sort of agreement to bring down the massive taxes that appended decades of US trade policy and sparked global economic turmoil. He claimed that trade talks with China were doing fine because everybody wants to have involvement in American markets, but insisted that if China does not agree to a trade deal, the United States will set the terms. Aurobindo Pharma Specialties gets final approval from US drug regulator for dasatinib tablets. Now, the drug is used to treat leukemia. The approved drug has an estimated market size of $1.8 billion for 12 months ending February 2025. Department for Promotion of Industry and Internal Trade, which is responsible for fostering industrial growth and internal trade, reviewed mega infrastructure projects in the state of Uttar Pradesh, Haryana, Punjab and Uttarakhand. The total cost of these projects exceeds 14,096 crore rupees, according to the Ministry of Commerce and Industry in a release. Now, Amardeep Bhatia, Secretary DPIIT, chaired a high-level meeting to review 19 issues across 17 significant mega infrastructure projects. Jupiter Wagons announced the temporary closure of its manufacturing unit located in Deori, Jabalpur, Madhya Pradesh, due to labor unrest that began on April 5. The unrest has led to a partial disruption in production at the facility. In regulatory filing dated April 22nd, the company stated that production at the plant has been affected for the past 15 to 20 days due to unavoidable circumstances. Despite the disruption, the company emphasized that the incident has no material impact on its overall operations. Wristwatches, handbags, antiques, sunglasses, home theatre systems and sportswear and more priced over 10 lakh will now face tax collected at source levy of 1% at the point of sale effective Tuesday. Now, the Income Tax Department said that in an official notification, though this announcement to bring in some goods apart from motor vehicles into the ambit of TCS was announced in July 2024 budget and was to be implemented from January 1st this year, the IT department has notified the categories of other items now. The move is expected to help the tax authorities to trace the sale of such luxury goods and match it with the income tax profile of taxpayers to detect any possible evasion. Maharashtra CM Devendra Fadnavis has condemned the Pahalgam attacks. He says the attacks in Kashmir has an intention to make everybody stop their jobs. We will not succumb to their agenda. We will stay on the course to fulfill our task, said that centre will take appropriate actions at the right time. West Bengal Chief Minister Mamata Banerjee condemns the death of 3 persons who were victims of the Kashmir violence. In a post on X, she says that all arrangements are being put up by the Bengal administration to Delhi airport to help the family members of the victims. Adds that Resident Commissioner's office in Delhi is in touch with the family members and she's personally overseeing, and our senior officers are working hands-on. Some 3,000 residents were evacuated in U.S. state of New Jersey after a wildfire exploded in size, scorching thousands of acres and threatening hundreds of structures, the state's fire service said Tuesday. Now, the fire service said that numerous fire and rescue personnel had been deployed along the fire engines, bulldozers and ground crews. It said that the cause of the fire was under investigation. Pharma CEOs from major companies like Novartis and Sanofi are lobbying for higher drug prices in the EU to address tariff threats. Now, they propose creating a European pricing benchmark that aligns more closely with US market prices, aiming to mitigate disparities and improve competitiveness. Tesla said it's working on entering hot market India. But the prospect of 100% tariff on car imports creates a lot of anxiety. These comments were made by Travis Axelrod, head of investor relations, during an earnings call on Tuesday. The comments come against the backdrop of Tesla's impending entry into India amid a tariff war sparked by US President Donald Trump. Over 1,000 university, college and Scholarly Society presidents published a joint statement on Tuesday opposing the Trump's administration's treatment of higher education institutions, coming together to speak out after Harvard University said that administration was threatening its independence. The statement, signed by presidents from such institutions as Princeton, Brown, the University of Hawaii and Connecticut State Community College, criticized what it described as the unprecedented government overreach and political interference now endangering American higher education. Delhi Capitals defeats Lucknow Supergiants at their home. Batting first, Lucknow put up a score of 159 batting for 20 overs. Abhishek Paul and KL Rahul helped the team win the match easily as they defended the score in just 18 overs. Well, with that, viewers, it's a wrap on Market Express, but stay tuned to NDTV Profit as there's more lined up ahead.
stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money.
The second buy pick is in Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout. And the targets would be towards 6,900 to 7,000 level.
To India specifically, I really think India has a fascinating opportunity, because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations?
Home Minister Amit Shah reviews the security situation in Pahalgam in Anantnag after at least 26 civilians, mostly tourists, were killed in a terror attack in what is being seen as the deadliest attack in the valley since Pulwama strike in 2019. The Civil Aviation Ministry directs airlines to support affected tourists and victims of the Pahalgam terror attack. Airlines are directed to maintain regular fares and extend full cooperation and waive cancellation and rescheduling fees. The Nifty Sensex extend their rally, closing higher for the 7th consecutive session. The Nifty IT index emerges as the top sectoral performer, driven by gains in HCL Tech. Overall, markets demonstrate resilience, supported by sectoral strength despite a few pullbacks. The Indian delegation has landed in Washington to iron out pending issues before formally launching negotiations on the proposed India-US bilateral trade agreement. Commerce Secretary Designate Rajesh Agrawal arrives in the US for key trade talks. And sources telling NDTV Profit the widely reported deal with Eversource Capital wasn't ever on the table. Separately, lender Power Finance Corp is now knocking on the doors of the Economic Offences Wing to start criminal proceedings against Gensol. The Central Board of Direct Taxes issues a notification specifying the list of luxury goods on which tax collected at source will be levied. Wristwatches, art pieces, helicopters, sunglasses and more, all costing up to 10 lakh, will now be taxed. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. But let's start off with some news that is now the focus of the entire nation. At least 26 civilians, mostly tourists, were killed in a terror attack in Pahalgam in Jammu and Kashmir's Anantnag district yesterday in what is being seen as the deadliest attack in the valley since the Pulwama strike back in 2019. The attack took place at Baisaran, a meadow accessible only by foot or by pony, where a group of tourists had gone visiting on Tuesday morning. We know Defence Minister Rajnath Singh has met with the Chief of Defence Staff, all three defence chiefs, over the terror attack, while Home Minister Amit Shah reviewed the security situation in Baisaran Meadows where the attack took place. Meanwhile, an NIA team has also arrived at the site to assist the probe. The Jammu and Kashmir government has announced a compensation of 10 lakh rupees for the families of each of those killed in the attack. NDTV's Nazir Masoodi joins us from the ground to tell us about the current situation.
Thousands of people gathered here in this village, Hapatnar, which is like 20 kilometers from Pahalgam town, to pay last homage, join the mourners and even his family, saying how bravely he actually resisted that attack. That's why he had to pay a price with his life. Because I saw this, what Adil did during that attack, there are people who are having the same spirit. I spoke to so many protesters in Pahalgam today. They say it is attack on humanity, it is crime against humanity, they have killed humanity, our heads are in shame. So, people are really shocked, and it's first time we see, as Chief Minister said, that it is the first such shutdown and the spontaneous protest against any militant attack in the valley.
26 innocent people, 25 guests of ours, and one poor person who was there trying to earn an honest living. They were brutally gunned down in the most horrific manner, and no words of condemnation are enough for this attack. Obviously, this is an unprecedented attack for us. We have never seen tourists targeted like this. One local, Adil, was killed because reports are that he actually tried to come in the way and stop innocent people being killed. Apparently, he even might have tried to snatch one of the weapons, and that's why he was targeted in this attack.
We also heard from the Chief Minister of Maharashtra, Devendra Fadnavis, who also denounced this deadly terror attack, calling the attack cowardly. He claimed India would not be intimidated by such attacks. Let's listen in.
काश्मीरमध्ये जो भ्याड हल्ला झाला त्याचा मी निषेध करतो, आणि जसं आपण सांगितलं की हल्लेखोरांना हे हवं आहे की आमचं आयुष्य हे डिस्टर्ब झालं पाहिजे, आम्ही थांबलो पाहिजे, पण भारत थांबणार नाही, आम्ही कोणी थांबणार नाही आहे. आपलं जे काम आहे ते आपण करतच राहू, पण त्याचवेळी हल्लेखोरांना आणि हल्लेखोरांच्या पाठीमागे जे काही मास्टर माइंड असेल त्याला योग्य उत्तर भारत निश्चितपणे देईल, हा विश्वास मी व्यक्त करतो.
Now, we also know that the Civil Aviation Ministry and the DGCA are ramping up rescue operations, ensuring that airlines maintain regular fares and provide full cooperation in the ongoing efforts. For a closer look at the developments and actions being taken, my colleague Aishwarya Patil joins us with more details. Aishwarya, over to you.
Well, as the investigation and rescue efforts in the Kashmir Valley continues for the victims of the Kashmir terror attack, the Civil Aviation Ministry has directed airlines to extend their support for affected tourists as well as victims of the Pahalgam terror attack. Now, an urgent meeting was held with airline operators for a strong advisory being issued towards surge pricing as well. Airlines have been directed to maintain regular fares and extend full cooperation to all the victims as well as passengers who will be flying in and out of Srinagar is what the ministry has said. And as part of the immediate relief measures, 4 special flights from Srinagar, 2 to Delhi and 2 to Mumbai have been arranged. Additionally, on standby will be few more flights to evacuate affected tourists as well. Now, that is as far as the Civil Aviation Ministry is concerned. From the airlines part, they are offering, they are making more efforts to evacuate the victims of this terror attack. Air India, as well as Air India Express and Akasa and Indigo as well, all of them have promised fee waivers, free cancellations as well as rescheduling to all the flyers to and fro from Srinagar. And as far as Air India is concerned, Srinagar to Delhi for the 23rd of April, 11:30 am flight was scheduled, and Srinagar to Mumbai at 12 noon flight was scheduled. So until 30th of April, most of the airline operators have extended support in cancellation, fee waivers, as well as rescheduling of flights. We are still here to yet to hear from SpiceJet, but that's that as far as the airlines are concerned. DGCA also has told airlines to increase the number of flights in response to the heightened demand and to ensure uninterrupted connectivity for to and from Srinagar to various destinations. Airlines have also been told, as I mentioned earlier, to waive cancellation and rescheduling fees. So that's the update as far as the support to be extended to the victims of Kashmir terror attack from the Civil Aviation Ministry as well as airlines and DGCA.
Aishwarya, for that, we know that several airlines now are jumping in with regards to the rescue operations, waiving off these fees and also adding more fleet and flights going into Srinagar. Moving on, but fear has also gripped thousands of holidaymakers and tourists who had planned summer trips to Kashmir, because within just 24 hours of the recent incident, tour operators have reported a 25% spike in cancellations, with travellers opting for destinations like Himachal Pradesh and Uttarakhand instead. In response, airlines and hotels are offering full refunds to ease the transition, while the Civil Aviation Ministry has arranged these 4 special flights that we spoke about, 2 each to Delhi and Mumbai to assist stranded tourists, with additional flights on standby if the situation worsens. This disruption also comes at a time when Kashmir was seeing a tourism revival, because they had actually recorded 2.35 crore visitors this year, up from 2.11 crore last year. So as tourism remains a vital economic pillar for the region, remains to be seen how this attack, a very deadly and gruesome one, will in fact impact tourism further. And now a quick look at what happened in the markets today. The Nifty Sensex extended their rally, closing higher for the 7th consecutive session. The Nifty IT index emerged as the top sectoral performer. Other key movers included Nifty Realty and Nifty Metal, which also closed higher for the 7th session in a row, and Nifty Auto gaining for the 4th straight day. However, Nifty Media snapped its 6-day winning streak, as did Nifty Bank, Financial Services and PSU banks, which all edged lower after 6 consecutive sessions of gains. The market demonstrated resilience, supported by sectoral strength, despite a few pullbacks. So let's go over to my colleague Harsh now for deeper insights on this. Harsh, over to you.
Well, it's 7th straight day where we've closed in the green on the benchmark, and yesterday was the 6th straight day when we saw FIIs buying. That was the best streak that we've had, 6-day streak, since September of 2024. So whether we close today with an FII net buy figure or not is going to be the question. But let's talk about sectors which have done well, and two of them really stood out. One was the Nifty IT, which was up 4.5%, and IT stocks dominated on the Nifty 50 as well. And the other was the Nifty Auto, where we saw certain stocks doing well, and M&M or Tata Motors, a couple of those have done very well in trade today. So a couple of those pockets. In fact, from the lows, we saw the Nifty Auto bounce nearly 500 points. So that one really stood out for me. The Nifty IT, of course, is seeing a very, very strong recovery in any case. So those are two sectors to keep your eye out on. What didn't do well was the Nifty Bank, and that's what really stood out as well. The Nifty 50 closed near the day's high, despite the fact that the Nifty Bank was subdued in trade. Some of the heavyweights, Kotak and HDFC, were actually languishing in trade today versus what they've been doing at least over the last 5 odd trading sessions. So the Nifty Bank and the financials not really participating. Consumer discretionary was the other pocket. After Havells' commentary was soft, we saw that consumer discretionary was one pocket which wasn't doing well within the larger sectoral basket. Now, in terms of a couple of other sectors which did well, you saw Nifty Realty do well, the Nifty Media, the Nifty Financials, they broke their 6-day winning streak. So that's the other piece to keep in mind. After the initial choppiness, especially with regard to the breadth, if you look at the advanced decline, we saw it reverse right towards the end, where the advances outstripped declines by just a wee bit. But it was a choppy day where, at least at the start, we saw plenty of choppiness. Thereafter, for a predominant part of the day, the losers dominated, and right towards the end we saw a bit of a flip, but largely 1:1 on the advanced decline. But that kind of gave us an indication as to how broader markets did. The Nifty mid cap closed at the day's high 1% higher, and the Nifty small cap was around 0.25% thereabouts higher as well. So saw some bit of recovery on both of those indices when you're looking at it intraday. That's how it actually played out. Going to be interesting to watch tomorrow whether this rally in IT can sustain. And we spoke with Manish Sonthalia as well with regard to his views on the current market dynamic. Listening to those.
Where the whole world is currently, the flux that the whole world is, India is in a relatively better situation. But there is a big but. To say that we'll be an outlier in the global context, etc., nothing is going to matter as far as India is concerned, is out of the place. Of course, there will be a bit of decoupling, as far as the monetary policies of the US are concerned, or global markets, developed markets are concerned. India somewhat deviating. You have interest rate hikes, or let's say pause. You have inflation problem. Here, interest rate cuts are happening. You don't have an inflation problem. Healthy demand because we have a 75% domestic facing economy, not so dependent like China, which is majorly export oriented economy. So a lot of positives as far as India is concerned. I think, maturity of the retail investor has gotten better over a period of time.
Now, India will commence 3-day bilateral trade talks with the US, led by Commerce Secretary Designate Rajesh Agrawal, who will spearhead high-level negotiations with the US Trade Representative team. These discussions will center on reciprocity and trade, with the terms of reference being finalized. The top priorities include enhancing market access for US goods, particularly in agriculture, reducing baseline tariffs, and addressing non-tariff barriers to ensure smoother trade relations. My colleague Rishabh now joining us with more details.
It's another crucial day with respect to the
talks that are happening with regards to a bilateral trade agreement between India and the US is crucial because Commerce Secretary Designate Rajesh Agarwal has arrived in Washington for 3-day talks with the US side, with the US team of negotiators from the US trade representatives. What we're seeing is that now with the terms of references that have been finalized between the two countries, now the focus will shift to working on each of these specific chapters, each of the specific 19 chapters that were finalized.
उसके बाद 15 अगस्त 1947 को आज़ादी की इस ऐतिहासिक अवसर पर अर्जन सिंह जी ने 12 टेम्पेस्ट विमानों के साथ एक भव्य फ्लाई पास्ट का भी नेतृत्व किया था। साथियों, लोगों के पास आर्म्ड फोर्सेज में आने के अलग अलग कारण हुआ करते हैं, लेकिन कुछ लोग ऐसे होते हैं जो बने ही आर्म्ड फोर्सेज के लिए होते हैं। अर्जन सिंह जी वैसे ही थे और इसका पता हमें इस बात से भी चलता है कि जब सेकंड वर्ल्ड वॉर की शुरुआत हुई तो उन्होंने खुद ही रिक्वेस्ट किया था कि मुझे मोर्चे पर भेजा जाए, मैं जंग में जाना चाहता हूं। वह समस्याओं से भागने वाले व्यक्ति नहीं थे, वह समस्याओं का डटकर सामना करते थे। शायद यही कारण है कि आज इतिहास में उनका एक विशिष्ट स्थान बना हुआ है। साथियों, इतिहास में ऐसे बहुत कम लोग होते हैं जो इतिहास का हिस्सा भी होते हैं और
Right, that was a reaction coming in from the Defence Minister Rajnath Singh after the deadly terror attack that took place in Pahalgam yesterday. We'll continue tracking that story and give you more developments. Moving on, Blue Smart Mobility's fortunes have taken a nosedive after they have been tangled in the unravelling fraud at Gensol Engineering. According to sources, the reported deal with Eversource Capital was nothing but smoke and mirrors. Now, lender Power Finance Corp is stepping in, urging authorities to take action against Gensol. Let's go across to my colleague Agnidev for more details on the same.
As you know, there have been media reports floating around which have been saying that Anmol Jaggi had sent out an email to investors of Blue Smart painting out 3 options on how to take the company forward. Now, the email mentioned one of the options as a slump sale of the ride-hailing business to Eversource Capital. However, me and our colleague Tashar, we tracked that Eversource is unlikely to have ever been part of this conversation. In fact, the last time they ever valued Eversource was in the last calendar year, so that's at least 5 months ago, and even then there was no binding agreement to acquire any of the company's businesses. Also, the PFC's complaint against Gensol at the Economic Offences Wing is likely to have sad sentiments with the other options that Jaggi had put forward to the Blue Smart investors. Now remember, till this point, the entire Gensol Blue Smart fiasco was a regulatory problem. Now with the EOW coming in, it is becoming an executive level problem. So in essence, a third of Blue Smart's fleet is now part of a police investigation, which is something which investors or potential investors are not looking at kindly. So Anmol Jaggi's email then seems to have misled investors into making them believe that the company Blue Smart is going to survive and is likely to come out well and good, but as we are bringing you the details, that does not seem to be the case. Now we have reached out to Eversource and Blue Smart for comments on the story, but this is a developing story at this point, so do stay tuned.
And a quick update coming in. Tata Consumers Q4 results have exceeded market expectations, demonstrating strong operational performance. Tata Consumers Board has recommended a dividend of 8.25 rupees per share, signaling strong confidence in cash flow stability and a focus on shareholder returns. Despite impressive growth, however, in profit and revenue, margin compression reflects cost pressures or pricing challenges requiring strategic focus to sustain profitability. My colleague Mahima now joining us on the phone line with the breakdown of the numbers. Mahima, give us a sense of what the numbers are looking like and what factors have contributed to the strong net profit growth despite a decline that we're seeing in EBITDA margins.
Right. So basically, in terms of comparison to its estimates, it's a beat on all fronts in terms of net profit as well as revenue. Revenue is expected to grow at 16%, which has probably grown at 17% from prima facie. Margins have also been a tad bit better than what the street was expecting in terms of revenue. In terms of EBITDA, it's slightly taken a hit of around 1.4%, and this is on the back of raw material inflation. The raw material prices have significantly gone up, but overall it's a beat in terms of net profit, which has gone up by 59%. Margins at 13.5% versus 16% earlier, but the street was expecting a 13.4% growth. Now, in terms of what has led to this profit growth, there's an exceptional item that is included in this particular number, which is of around 120 odd crore, and a 72 crore of asset has been written down. India business overall has seen a growth of 13%. International business has seen a growth of 2 odd percent. Overall, non-branded business is something that has seen a growth of 23%. This quarter, the company has rejigged their overall segmental breakup. They've now broken down the business in branded as well as non-branded business. And the overall branded business is divided into India business as well as international business. So this is the overall view as to how so far, prima facie from the numbers, it seems that it's a good quarter overall for Tata Consumer, better than expected for sure.
Mahima, are there any sector-specific trends that are influencing Tata Consumer's performance compared to its peers?
Not really. Overall, Tata Consumer is also facing the same headwinds right now as compared to what other FMCG staples are. But overall, it's been a stronger growth for Tata Consumer as compared to the other FMCG staples for sure.
Right, Mahima, thank you so much for bringing us those updates. Exceptional gains are driving profit. Tata Consumer's plans also to address the margin compression observed in the year-on-year results. Mahima, thank you so much for that. And wristwatches, handbags, antiques, sunglasses, home theatre systems and sportswear and more priced over 10 lakh will now face a tax collected at source levy of 1% at the point of sale effective Tuesday. This is what the Income Tax Department said in an official notification. Though this announcement to bring in some goods apart from motor vehicles into the ambit of TCS, if you remember, was announced in the July 2024 budget and was to be implemented from January the 1st this year, the IT department has notified the categories of other items now. The move is expected to help the tax authorities to trace the sale of such luxury goods and match it with the income tax profile of taxpayers to detect any possible evasion.
CBDT has actually put out two important notifications specifying the list of the luxury goods which will now attract tax collected at source and at what percentage it will be levied. Effective from April 22nd, seller supposed to deduct 1% on the high-end purchase against the buyer's PAN number. So for example, if you're buying a handbag worth rupees 30 lakh, you're supposed to pay 30,000 more to your seller. So it's the seller responsibility to deduct 1% TCS and deposit it to the income tax department. On the other hand, buyer can actually, claim tax credit in their tax filing, and if the net tax liability of the buyer is actually lower than the total TCS paid, they can actually seek refund from the income tax department as well. So this has been the long-awaited notification after July 2024 budget has actually announced this to expand the scope of TCS, particularly on the luxury goods. The notification clarifying the list of goods which now attract the TCS. So the move is, of course, to widen the tax base and also keep a track on the discretionary spending of the high net worth individual and making sure that that will reflect it in the income tax filing.
Thanks so much, Shrimi, for that. And moving on to another story that is also to do with luxury items. Tesla Inc. said it is working on entering hot market India, but the prospect of 100% tariff on car imports creates a lot of anxiety. These comments were made by Travis Axelrod, the head of investor relations, and the comments come against the backdrop of Tesla's impending entry into India amid a tariff war that has been sparked by US President Donald Trump. And it continues to see how the entry of Tesla will be impacted because of these tariffs and, of course, the India and US negotiations. And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
second buy pick is a Naukri InfoEdge. It's a bit of a conditional buy that we're seeing. So if it's able to cross a 67.70, 67.80 odd range for the day, it can give you a good range breakout, and the targets would be towards 6,900 to 7,000 levels.
To India specifically, I really think India has a fascinating opportunity, because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Stock specific, what I'm hearing firstly is on 361. Tomorrow is the board meet where the company is looking for a fundraise, and dealers are indicating that a preferential issue to the UBS India might be announced tomorrow, and the deal is likely to happen at a premium compared to the current market price. A premium of nearly 10 to 15% is what the dealers are indicating.
$361 is going to issue these securities to UBS at a deal value of roughly 40,000 crore pre-money and around 42,000 crore post-money. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers. Hello and welcome. You're watching KYC here on NDTV Profit. I'm Harsh Saita. Now, on to the company that we're going to track in today. It's going to be KFin Technologies. Outside of it being a darling with regard to the theme that it covers, which is Indian capital markets, and given the fact that it's so much more domestic facing and so less impacted by all the geopolitics that's going on globally, from a business standpoint, of course, maybe not from a client edition standpoint, but from a purely business standpoint, and hence we feel that this one surely entails, or rather deserves conversation. So let's quickly put out as to why we've picked KFin. The first one, of course, the big theme being Indian capital markets, and this is a clear play with regard to Indian capital markets. In terms of growth, it's a high growth company, recently listed, whether this growth can really sustain is the question that we'd like to ask them. The other one is market share gains. So while we've seen very strong growth come through for a company like this, we're not seeing very strong gains in terms of market share. Is that really something that we should be concerned about? The fourth piece is possibly chances of yield compression. Mind you, a lot of their revenue is linked also to how mutual fund SIPs and mutual fund flows are, and it's a variable revenue based on the quantum that is being invested, and therefore any tweak in the yield could impact profitability. The fifth one is with regard to AUM growth and flows. This could of course well get impacted if markets don't perform. So that's one possible very real risk which the company carries. And the last one, or the second last one rather, is the risk of regulatory changes. Any changes with regard to regulation could impact the revenue as well as the model, the business model itself of the company. They are also going global. So the global foray, what should we expect from this? Because incrementally it adds in terms of the acquisition that they've made of Ascent, adds to the revenue, the top line of the company clearly right from day one. But what does it mean from a big picture standpoint? What does it mean for cash flows? What does it mean for valuations at this point? Is it looking good, and is this the best play in that sense for playing the capital markets? And we'll try to discuss and break down all of these angles and aspects. Let's first talk about what KFin does. Let's try and simplify it. So first one, it's a technology driven financial services platform. In the most basic sense, it helps investors as well as mutual funds, as well as AIFs, as well as a PMS in terms of client onboarding and purchasing of units. So it caters to the capital market ecosystem. That's the theme it caters to. It's the largest investor solutions provider to Indian mutual funds. In fact, it boasts to service 26 of the 48 mutual funds in India, AMCs in India. Now, let's break this down a little bit further. First, on the investor solutions side of things. One, it provides solutions to asset managers, corporate issuers across asset classes in India. It services around 26 of 48 AMCs in India, and these are broadly the solutions that they provide. So all of these are provided by KFin Tech to the service recipient. In terms of issuer solutions, mind you, this includes IPOs as well, but I'll try and trim it down and say that these are only corporate issuances, and the largest issuer solutions provider in country in terms of number of clients. It also offers investor and issuer solutions, and it caters to over 7,000 corporate clients currently. It also does international investor solutions. The piece at this point is small, just about maybe very, very low teens, or maybe just 12% of top line, but that share might likely go up because they've acquired a business in Singapore, and we will talk about that as well. The fourth piece is with regard to AIFs and wealth investor solutions. They command a 37% market share within this space, and therefore something to look out for as well. The National Pension Scheme, the NPS, it has 15 lakh subscribers within the NPS and growing fast. Currently just 9.5% of the market share it commands in this space as well. So has good potential for growth in this pocket as well. In terms of metric, it's a market leader. The domestic mutual fund investor, the overall AUM or market share is around 32.1%. This is FY24 numbers. We'll talk about the current numbers as well. The equity AUM market share is around 33.5%. And we also have the SIP market share, which is almost 40% of the monthly SIP inflows. These are all FY24 data, which I'm culling out, but largely it's stable across the 9 month as well. In terms of issuer solutions, it commands 46% of NSE 500 by market capitalization and 42% by number of folios, and In terms of number of companies, it's around 37%. So number of clients, around 37%. So that's how the split is made. In terms of revenue mix, around 72%, 73% of the revenue comes from domestic mutual funds, around 13% from issuer solutions, again around just about 12% from international, we spoke about this, and around 3% from other business services. So that's broadly the breakup. The largest chunk of that is domestic mutual fund investor solutions, and they are diversifying fast away from that, or rather focusing on that and along with it doing other things. Let's look at the AUM trend now. Now this is where it starts to get very interesting, and we have 9-month FY25 numbers for perspective. Look at the AUM. The AUM trend is clearly on an uptick. You're seeing almost 2.5x in terms of the AUM versus FY21, currently at FY25. So looking very healthy, but let's look at the market share here.